Requesting everyone to please settle down. Requesting everyone to please settle down.
Very good morning, ladies and gentlemen. We're about to begin shortly, so requesting each and every one of you to kindly settle down. Please take those seats so we can get started. से कर रही हूँ मुझे ये
Requesting everyone to please settle down. Please settle down.
which is, yes, please. That beautiful sense of connection and pride, and that brings us to Kerala, which is known to be progressive, known to be resilient, just as we always say with pride, our Pradhan Mantri Fasal Bima Yojana is so resilient and progressive as well. So if you are as excited as we are to be hosting this 12th National Review Conference in Kerala, let's start by a nice namaskaram, please. Namaskaram, everyone. Thank you. With that, it gives us great pleasure to see participants from across the country, each and every one representing various domains in this two-day national level event being organized by the Ministry of Agriculture and Farmers' Welfare. We bring together policy makers, senior government officials, insurance industry leaders, experts from banking sector, scientists from technical and research institutes, resource persons from academic institutes, and of course, the agricultural experts, all under one roof with one clear purpose, one clear mission, and that is insurance for all by 2047. That calls for another round of applause as we say that. Come on. As we all know, in India, agriculture is more than just an occupation. It is inherent to our very social and economic fabric. So providing for affordable crop insurance services and agri-finance safety net to millions of small and marginal farmers in the country with all the climate changes, we require this now more than ever before. And as we know, crop insurance schemes like the PMFBY and the RWBCIS implementation is fetching global recognition. Every year, more than 4 crore farmers are enrolling in the scheme, making it the world's largest scheme in terms of farmer participation. As some of us are aware and were even present, last year, 2024, in Goa, we organized the first international conference and launch of India's first community of practice on agriculture credit and agriculture insurance. So as we know, the entire world has their eyes and they're now banking on India to learn from its experience and expertise gained over the years. So with this backdrop, this conference is looking for a series of keynote addresses, panel discussions, technical presentations, and interactive sessions. And of course, the one session which will have the spotlight on it will be to hear the voices from the field, ensuring that the first-hand experiences of the farmers continue to shape and refine our approach to agriculture insurance. So ladies and gentlemen, with this brief introduction and overview on the objective of this conference, I once again wholeheartedly welcome all the participants and the domain and sector experts that have joined from all parts of the country physically. Let's start with a huge round of applause for yourselves for actually making the effort, taking out the time and being here. And also to everyone that's joined us virtually on our official Facebook and YouTube channel, welcome, namaskaram, each and every one of you. So with that, let's officially get the 12th National Review Conference started. And to do the honors and to start it on a very auspicious note, I'd like to call upon all the dignitaries on the dais for the formal inaugural session and also for the lamp lighting. Please extend a warm welcome and keep the applause going as we request Sri Devesh Chaturvedi, Secretary, Ministry of Agriculture and Farmers' Welfare, Government of India, to come up and do the honors with the lamp lighting. Joining him, we have Sri Deepak Sood, Member, Non-Life Insurance Regulatory and Development Authority of India. Request all of you to gather for the lamp lighting. Yes, Sri Devesh, Sri Deepak ji. And to join you for the lamp lighting, Sri Sanjeev Narayan Mathur, Additional Secretary and Financial Advisor, Ministry of Agriculture and Farmers' Welfare, Government of India. Sri Muktanand Agarwal, Joint Secretary and CEO, PMFBY, Ministry of Agriculture and Farmers' Welfare, Government of India. Sri Muktanand Agarwal, and also Sri Anand Singhi, Chief Retail and Government Business, ICICI Lombard General Insurance Company. Once we have all our dignitaries on stage, we will request them to light the lamp, which is symbolic of leading us from darkness to light. I'd like to quote a shloka here, Tamasoma Jyotirgamaya. As they lead us from darkness to light, it is also symbolic of leading us from ignorance to knowledge. And as we know, this is just the perfect platform for idea and knowledge sharing. Requesting all our dignitaries to please take their seats on this beautiful dais. A couple of seconds for you to settle back in, get your footwear back, and take your seats. Also requesting Shri Anand Singhi ji from ICICI Lombard to welcome all our dignitaries with a little token of appreciation. Can we have it, please? Shri Anand Singhi ji, let's welcome first up Shri Devesh Chaturvedi, Secretary, Ministry of Agriculture and Farmers Welfare, Government of India. Let's keep the applause, let's keep the energy flowing in this room as the conference has only just begun. Also one for Shri Deepak Sood, Member, Non-Life Insurance Regulatory and Development Authority of India.
Shri Sanjeev Narayan Mathur, Additional Secretary and Financial Advisor, Ministry of Agriculture and Farmers Welfare, Government of India. And also for Shri Muktanand Agarwal, Joint Secretary and CEO, PMFBY, Ministry of Agriculture and Farmers Welfare, Government of India. Once again, a very big thank you to all the guests for gracing us on this occasion, for giving us a beautiful, auspicious start with the lamp lighting. And with this, we now formally announce the inauguration of the 12th National Review Conference and the 8th National Level Monitoring Committee meeting. Let's begin with our first session. And to do the honors, I'd like to invite on this podium, we welcome Shri Anand Singhi to give the welcome address. Quickly, a little about him. He has over 2 decades of experience in the general insurance industry, and in his current role, he is spearheading critical areas of retail, digital, and government business. Let's have our Chief Retail and Government Business, ICICI Lombard General Insurance Company Limited, Shri Anand Singhi ji, over to you.
Good morning, everyone. Namaskaram. It's my great honor and privilege to welcome all of you to the 12th National Review Conference of the Pradhan Mantri Fasal Bima Yojana scheme, here in the beautiful coastal town of Kovalam, in God's own country, Kerala. A warm welcome, a real warm welcome to Shri Devesh Chaturvedi ji, Secretary, Ministry of Agriculture, Shri Sanjeev Narayan Mathur ji, Additional Secretary and Financial Advisor, Shri Muktanand Agarwal ji, Joint Secretary and CEO PMFBY, and Shri Deepak Sood, Member Non-Life IIDA. And all our esteemed delegates from the state government, the insurance sector, and partner institutions, both those here in person as well as people joining virtually. Your presence honestly means a lot to us and makes this gathering truly, truly meaningful. Agriculture, as we know, is the main source of livelihood in our country, which today has over than 100 million households deploying out there. Ensuring its sustainability is not only essential for our economy, but critical and for the well-being of our farmers and food security of our country. PMFBY has been playing a very transformational role in protecting farmers from natural and climate-based risks, offering access of comprehensive insurance solutions at real affordable premium, making it the largest crop insurance scheme in the world in terms of farmer coverage. I think on this note, possibly for all the efforts of the ministry and everyone involved, may I request a huge round of applause for everyone. Built on the foundation of shared goal of farmer welfare, PMFBY has been a living scheme, constantly adopting through innovation and reforms, demonstrating the real strength of public and private partnership. Over the years, these national review conferences have been significantly instrumental in shaping the evolution of PMFBY scheme. They have served as platforms for introspections, conversations, collaborations, and policy innovation. Many key developments, such as the National Crop Insurance Portal, the Yes Tech Solutions, WINDS platform, Cropic, DigiClaim platform, KRPH, AID, and many others, find their roots in the ideas and deliberations held here in all these very gatherings. While we have made a considerable progress, we also have a real long road ahead towards a developed India and insured India by year 2047. In the years ahead, it will be real pertinent to focus on expanding the coverage of agriculture insurance beyond existing set of schemes and beyond existing 6 crore hectares of land and bring more farmers under the safety net of insurance. Speedy disbursals and quick settlement of claims along with real scaling of technologies like Yes Tech, enabling crop loss assessment and insurance claim settlement can strengthen the outcomes of PMFBY in the years ahead. When we listen to each other, when we listen to one another and engage in collaborative problem-solving solutions, the most effective solutions often emerge naturally. Today, we stand at the center of a well-developed ecosystem which has the potential to expand insurance coverage beyond the normal domain of only crop insurance. And we would want to really see that how can we ensure that effectively all schemes, the entire ecosystem is significantly covered. As we dive deeper into this conference, let's deliberate on these points. Let's have all the great time of sharing ideas, insights, solutions for strengthening our rural and farmer consumption. Dhanyavad, Jai Hind. Thank you so much.
Thank you so much, Shri Anand Singhi ji. And now for the opening remarks and to set out the objective and the agenda for the 2 days to follow, can we please request with a nice warm round of applause, Shri Muktanand Agarwal. Let me quickly tell you a little about him. He is an IAS officer of 2008 batch from Rajasthan, Kadre. He was a director, Digital Agriculture Division in MOA and FW and was part of the core team instrumental in organizing G20 events pertaining specially to the agriculture domain. He's also served as district collector in various districts of Rajasthan. Please let's welcome Joint Secretary and CEO PMFBY Government of India, Shri Muktanand Agarwal ji, on this podium, please.
A very good morning to all. Respected Secretary Agriculture, Shri Devesh Chaturvedi sir, Shri Deepak Sood, Member Non-Life, Shri Sanjeev Narayan Mathur sir, Additional Secretary and Financial Advisor in Ministry of Agriculture and Farmers Welfare, Shri Anand Singhi ji, Chief Government Business and Retail, ICICI Lombard, senior officials from the central government, state governments, and union territories, esteemed dignitaries, representatives from insurance companies, reinsurance partners, technology and knowledge partners, and all our valued stakeholders. I welcome you all to the 12th National Review Conference on Pradhan Mantri Fasal Bima Yojana and the 8th National Level Monitoring Committee under PMFBY. Today, we have gathered here in this picturesque coastal city of Kovalam, Kerala, to deliberate on the path forward for agricultural risk management in India. For years, the previous conferences have served as a cornerstone for meaningful discussions, groundbreaking innovations, and collaborative efforts uniting policymakers, industry leaders, and stakeholders to drive transformative advancements under Pradhan Mantri Fasal Bima Yojana. As I stand before you today, I am conscious of the responsibility of carrying forward the legacy of my esteemed predecessors, Shri Ashish Kumar Bhutani sir and Shri Ritesh Chauhan sir, both of whom have played a pivotal role in shaping PMFBY into a robust scheme as it is today. Their leadership and their strategic vision have laid a strong foundation for carrying forward this PM flagship scheme, and it is our collective responsibility to build the edifice further, ensuring that we take the scheme to new heights. I am honored to have them in the audience today, and let's have a round of applause for them, for both of them, for the contribution which they have made. And we acknowledge their contributions and continue the journey they so effectively steered. 9 years ago, the ministry embarked on an ambitious mission to provide financial security to our farmers through the Pradhan Mantri Fasal Bima Yojana. What began in 2016 as a bold initiative under the visionary leadership of our Honorable Prime Minister has today evolved into the world's largest crop insurance program in terms of farmer enrollments and the third largest in terms of insurance premiums. This journey has not just been about the numbers. It has also been about empowering over 40 million farmers, instilling resilience in our agricultural communities, and ensuring that a single season of adversity does not push them into financial distress. Over the years, PMFBY has constantly adapted to address the evolving needs of farmers. It has pioneered innovative policy interventions to make crop insurance more accessible, affordable, and transparent. The use of technology has been at the heart of this transformation, right from a digitized, portal-driven system to the introduction of advanced yield estimation techniques under the YesTech module. Today, we are leveraging hyperlocal data and real-time insights to empower our farmers with timely information, allowing them to make informed decisions about their agricultural practices. Our vision is not just to provide financial assistance, but also to build a comprehensive agricultural risk management framework that integrates various aspects of farming resilience. By expanding the coverage beyond traditional crops to include plantation crops, horticulture, other allied sectors, we are trying to ensure that Pradhan Mantri Fasal Bima Yojana evolves into a truly inclusive and dynamic safety net for all types of farmers. While we have made remarkable strides in last 8 years, there is still a lot more to be done. We need to work hard on expanding the participation of the states, encouraging those states that are yet to implement Pradhan Mantri Fasal Bima Yojana fully, ensuring every farmer gets access to risk mitigation solutions. Also, to enhance efficiency of the scheme by streamlining the processes to make claim settlements faster and more transparent, reinforcing farmers' confidence in the scheme. Strengthening partnerships by collaborating with financial institutions, insurance companies, technology providers, grassroots organizations to create an integrated and sustainable insurance ecosystem, and by boosting the awareness and bridging the knowledge gap among farmers to ensure they fully understand and utilize the benefits of this scheme through broader and deeper ground activation and outreach activities. As we engage in discussions over the next 2 days, let us focus on innovative solutions and practical approaches to strengthen the financial resilience of our farming communities, and achieve the vision for 2047, which is insurance for all. I am confident that in these next 2 days, as we engage in fruitful discussions and knowledge sharing amongst ourselves, we would help us to identify new opportunities for PMFBY to achieve even greater heights. As I come to the close of my address, I want to leave you all with one final thought. The essence of our work is not just in policies or numbers or figures, but in the lives that we are able to touch. The farmer, in his humble wisdom, sows not just seeds, but hope. Hope that the rain will come, that the sun will shine, and that the tomorrow will be better than today. Let us learn from the farmer and ensure that his toil is met with security, not uncertainty. The resilience of our farmers is a reminder that despite uncertainties, hope prevails. It is our duty to ensure that his hope is met with unwavering support, innovation, and security through the true spirit of Pradhan Mantri Fasal Bima Yojana. Let us take inspiration from our farmers and reaffirm our commitment to build a stronger, more resilient agricultural ecosystem for our farmers. Thank you.
Tanand Agarwalji, thank you so much for putting the opening address in such beautiful words and giving it such a lovely poetic flair. It's now my pleasure to invite Shri Deepak Sood, member, non-life, IRDAI, to share his special address to this conference. Quickly, a little about him. Shri Sood has been appointed as the whole-time member, non-life of IRDAI in August 2024. He brings over 3 decades of experience in the insurance sector with extensive expertise on regulation of non-life insurance industry in India, encompassing both the public and the private sector. Over to you.
Good morning, Namaste. Secretary Agriculture, Shri Devendra Chauhanji, Additional Secretary Sanjeev Mathurji, Muktanand Agarwalji, Joint Secretary and CEO of PMFBY, Anand, my colleague, senior officers from state government, central government, my colleagues in the insurance industry, good morning, and thanks for having me here. You know, as we stride towards forever increasing prosperity of the Indian population, financial security for every citizen becomes a non-negotiable. Insurance for all, as you've heard, is not just a small vision, it's a large one. It encompasses everyone, and it takes us where very few nations have been able to reach. The goal can only be realized through a shared vision where each stakeholder, the government, regulator, and the insurance industry plays its part in addressing challenges and unlocking the true potential of the insurance sector and leveraging it to the hilt. The government, as an architect of inclusive policies, has laid down a strong foundation with flagship schemes like the Ayushman Bharat and the Pradhan Mantri Fasal Bima Yojana. The Pradhan Mantri Fasal Bima Yojana, launched in 2016, is not just the largest by number of farmers enrolled, third largest in terms of the premiums, but I think it's one of the largest, most diverse programs anywhere in the world, which covers such a complex and wide network of diversity of farms and something so complex. It's something that has been setting benchmarks. It's a program that has been setting its own benchmarks, and today is perhaps a global best practice in its own self. The scheme has undergone significant reforms, and one of the best things that I heard, and which really goes deep to me, is what Shri Muktanand Agarwal just mentioned when he started his remarks by saying risk management. Now that is a vision. Insurance, when you look at it, when you're on the insurance side, you realize that insurance is but one means of risk transfer. When you look at risk management and you broaden your horizons, that's when you're looking at many, many options available to you much, much beyond insurance, which is just ultimately a risk transfer. And I think it is that mindset, it is that kind of a vision and that kind of a hope that is really going to be able to help us address these key issues that we hear so much about, climate risk and climate change. Because both the insurance industry as well as the risk managers around the world are grappling with this. Climate risk per se is bad enough, but when it occurs with the kind of changes that's happening in unprecedented locations and unprecedented forms, it catches everyone by surprise. And for all the insurers, definitely. NatCat perils, NatCat pools, so many approaches are there, but I think the front-end risk management, how do you prevent that from happening? How do you safeguard that from happening is much, much more required and a much better and a wider vision. And it was really heartening for me as a professional in this industry that was mentioned for the last 37 years to hear those words and see where we have reached now. There have been challenges, as we've been mentioning, that one of the key things is that it is providing financial security. Insurance has many definitions: financial security, providing the necessary hope to everyone. But I think one of the key things is that it has to trigger and it has to kick in at the right time, at the right speed. And that is essentially, basically meaning that claim settlement has to be very, very speedy. There has been a key challenge in this, as I've always been, in terms of the subsidies taking a little bit of time. I think that is one thing that everyone needs to work on. But besides that, the technological advancements that have taken place in terms of the assessment of risk, the YES technologies, is path-breaking, and I think will speed up the settlement of claims in a very, very fast fashion. To reduce the premium outgo, recently there have been new ART or alternate risk transfer mechanisms that have been introduced in terms of the different 80, 130, 60, 110 options that have, 80, 110 options that have come in, and many more which will evolve. But I think the key element that one needs to understand in these is that while these are financial risk transfer mechanisms which are making it easier, but just focusing on the premium outgo and reducing the premium outgo by this is not the thing. I think what is essential come about is that with these kind of things coming in, there has also been a tendency to reduce premiums, and there are certain insurers who are currently also quoting out of whack, or rather quoting way lower than they should be. Consistency in premiums and a disciplined approach to the risk and to premiums is essential from the insurance side also. That is what will ensure that we have a very consistent way of looking at risk. We have a good pricing mechanism that holds and that allows everyone to plan and budget properly and reasonably. There have been also instances of mid-term variations in contracts. And I think that is something the insurance industry is also grappling with, because mid-term variation causes fair amount of disruption in the way they plan the infrastructure, in the way they plan their risk, the way they plan their reinsurance arrangements. Bringing a lot of consistency throughout the period of the policy, throughout the period of the insurance, is something that will benefit both sides extensively. Another essential thing is grievance redressal. I think the KRPH, the Krishi Raksha Portal Helpline, has done wonders in this phase. There is also an effort to try and integrate it with the Bima Bharosa at the insurance end, so that there is a seamless way of logging in and addressing in various kinds of complaints that may happen. As far as the IID is concerned, I think we also recognize that as reaching insurance for all 2047, coverage for all is not just limited to the farmers' produce to the Fasal Bima Yojana. We have to go way beyond that to ensure the safety and security of our farmers, of our rural population. There have been recent changes in the regulations. I'm sure all of you have heard about it, a slew of regulatory reforms that took place over the course of the last 2 years, in which one of the key things that's worth mentioning here is that there has been a change in the definition also of the rural and the social sector. The rural sector now we are focusing at the Gram Panchayat level so that we are able to reach the last mile in a proper, coherent way and able to measure it in saying that, yes, we have reached the last person out there. As far as the social sector obligations which were cast upon the insurers are concerned, one of the key changes is to bring in the government schemes into the purview of these requirements or these quotas that these insurance companies have to fulfill. By bringing them in, I think we brought about a very conscious approach of insurance companies also towards these schemes, which will go far in popularizing the schemes and bringing more people into the fold for these schemes. I would be not doing justice or fulfilling my duty over here if I didn't mention that one of the key elements that we must look forward to and that will really change the landscape in reaching the last mile is the Bima Trinity, the whole effort towards Bima Trinity. The product Bima Vistar, which is intended to be a parametric product spanning across life, property and health, is the beneficial product in a small way for all the socio-economically weak sections, for the risks that they face. Bima Wahaks, a women-centric channel for distribution at the last mile in order to reach the rural areas, in order to reach everyone, and above all, Bima Sugam, which, as you must have all heard, is an electronic marketplace. It's intended to be a marketplace, but it's not sufficient to say it's a marketplace because it's a one-stop location, a one place where all stakeholders in the insurance value chain can transact the entire business of insurance. So it's not just limited to distribution. Distribution, from a point of view of distribution, it brings everyone together. It brings all the products together at one place in a very transparent way for consumers anywhere in this country to be able to transact either directly or through their chosen channel. But it goes far beyond to say that as it expands in its reach, even management of claims, management of grievances, everything will be on one single platform. And that will be really a big game changer in bringing the Insurance for All 2047 vision to light. As I stand here and in my closing remarks, I must mention that the Pradhan Mantri Fasal Bima Yojana is something that we have to carry forward. I think it is an iterative process. It will continue to reform, it will continue to grow. We need to bring more and more states into the fold. Most of them are, but some of them are still not. We have the state insurance plan, which has been rolled out by the IRDA, and different insurers have been made lead insurers in different states. For those states which are not a part of this scheme, I would urge the state lead insurers to prevail upon and engage with the government in those states to show them the benefits and to see that they can be brought on board. For those who are on board, I think it is also the responsibility of the state lead insurers to engage consistently and repeatedly with these governments to show them the benefits, to work out specific needs of those states, to see how it can be expanded, what are the issues that can be resolved, and together we can take this all over the country. And while we still say to end, I would just say that while we say it is the largest by farmer enrollment in the world, it is the third largest by premium, yet I think the coverage from a land perspective is 40%. So the potential is immense. It can go far beyond and reach a stage where it is the largest, will be the largest, and will stay the largest by any definition that you may choose. Thank you very much, and I wish you all the best in these 2 days.
Thank you, Shri Deepak Sood ji, for your beautiful opening remarks. We can do with a little louder round of applause. Yes, thank you. And now I request everyone to continue with that round of applause as we welcome Shri Devesh Chaturvedi, Secretary, Ministry of Agriculture and Farmer Welfare, Government of India, for giving the presidential address. A quick little about him. Shri Devesh Chaturvedi is a senior IAS officer of the 1989 batch from the Uttar Pradesh cadre. He has been leading the Ministry of Agriculture and Farmer Welfare as Secretary since August 2024. And he has more than 35 rich years of experience in government administration at state and central government, holding key portfolios. Please put your hands together as Sri Devesh Chaturvedi comes over and takes over the dais. Over to you.
Thank you very much. A very warm welcome to all important stakeholders of this flagship scheme of Government of India. Shri Mathurji, Additional Secretary and FA of the Ministry, Shri Anand Sanghiji, Shri Deepak Soodji, Muktanand Agarwalji, Ritesh, who has been CEO for many years, all state-level senior officers, additional chief secretaries, principal secretaries, secretaries, HODs, members from the insurance sector, banking sector. It's a privilege to be here and discuss in this national conference. I have been part of such conferences when I was working as additional chief secretary, principal secretary in the state of Uttar Pradesh, and have been witness to the evolution of this scheme, which started in 2016. For officers who have recently joined the agriculture sector or even who have not joined, one has to appreciate, who have been working here for a few years, we have to appreciate why PMFBY is important. We all know in the country, agriculture accounts for 18% of the GDP, which includes annual husbandry and fisheries. If we only keep of crops, it will be around maybe 9 to 10%. And 46% of the workforce is engaged in it. So we have 46% of workforce contributing 18% and 54% of workforce contributing 82%. So a simple mathematical calculation will tell you that the average income of an agriculture household will be around 1/5 of a non-agriculture household. Then we have the other issue of small and marginal holdings, more than 86, now touching 90%, fragmented holdings. In the agriculture census of 2015-16, it was about 1.1 hectare per agriculture family household. Now, the estimates are near the household survey reports are being compiled, but it would be around, as per the estimates of other surveys, it's about 8.8, about 0.8 hectares. So one can understand, and then we have the third challenge of the, already Indian agriculture was dependent on monsoon. We have only about 50-55% agriculture land irrigated. And now we have the challenge of climate change for many years. So all these issues combined together make farming a very, very risky proposition. And whenever there is any problem in terms of pest infestation, whether monsoon failure or a heat wave or any such thing, the distress in the farming community is very high. And that's why it is absolutely necessary that they are covered under various risk mechanisms. And that's why this PMFBY, when it started, and despite the fact that we wanted, but it couldn't happen, that we could not go to farm level for most of the risks. Very few risks are where we go for individual assessment. Most of it is now we have reached Gram Panchayat level. Even that is a big challenge, and it was a big achievement for this 2016 scheme that we could go down from Tehsil block level to village level, and in some cases we could reach to individual level. Then the issue was how to cover it. So we had this issue of loanee farmers being made mandatory for, we have KCC loans, more than 7 crore loanee farmers are available. And we made it, initially it was mandatory for them. Wherever it is the crop mentioned in the KCC is notified as for covering for insurance. But then there were representations of farmers that why are you making it mandatory? We are not interested. Why are you forcing us? So we made it optional. So we have the opt-out mechanisms through the banking system. But there was a slight dip when we came with this opt-out mechanism, but then it was more than offset by the non-loanee farmers, because now slowly and steadily the scheme is becoming popular even with those who are not availing a KCC loan, or maybe their KCC loan has become NPA because of various reasons. The recent trends is, and I would like to mention it, very important, and I'm sure many state secretaries, I was facing with this problem, a challenge when the legislatures, the parliamentarians always used to say, is this scheme to make profit for the insurance companies? And the claim ratios used to show that data in UP. The claim ratio of Rabi never used to be more than 20-30%. Claim ratio of Kharif used to be 80 to 90%. Overall, never more than 50%. So we had to be grilled by the committees. And in fact, even now today, Muktanand and other officers will be privy to the fact that out of 10, 12 questions asked in every question day, first question is, what is the premium paid by insurance companies and the farmers, and what has been the compensation given to the farmers? So there's an issue. And because both public sector and private sector companies are coming, there was a perception, and obviously it's a parliamentary democracy. Parliamentary is supreme. If they have this perception that the scheme is only for profit of insurance companies, then obviously we have to address that. So we addressed it. We addressed it by the 60, 30, 80, 110 cap and cap model. We could defend that, okay, if the claim ratios comes down to below 80% or below 60%, the companies will reimburse the money to the state and the center. If goes above 110, 130, the state and center will have to take the share, because that is where and that's why the premiums came, where one of the reasons was because the reinsurance cost was taken up by the state and the center, the premiums came down because of that also, because many other reasons also. But the fact is that we have to evolve the scheme considering all the stakeholders in the system. The issue of crop cutting experiment being the basis of the payouts was always a challenge. The CCs were manually driven. It was very difficult for insurance companies and agriculture and revenue to be together there for all the crop cutting experiments. Lakhs of crop cutting experiments are being done. So we have emerged with this technology-driven interventions, which will be discussed today in details. Muktanand will tell you about how the technology-driven interventions have also led to reduction in premiums. In fact, Madhya Pradesh is one of the states which is only going by the technology-driven assessment of many crops. And I will urge the states to please adopt those technologies. Yes, tech wins. CC app-based crop cutting experiments. And maybe CC app-based crop cutting experiments can be totally removed after some time if the technology is tested, because that helps in giving insurance companies a confidence that those will be not managed or manipulated, and there will be no manual intervention. So premiums will come down because of that also. And it has come down because of one of the reasons is that also. So my request to the states would be to please adopt, wherever it has not yet started, please adopt all the technological interventions which are there part of the system. You'll be told about it, and maybe some data can be provided where the premiums have come down because of this technology-driven assessments. Of course, there is some issues always coming up. There is a loss due to wild animals. Paddy has not been covered under inundation. These are issues which farmers take it up, and farmers are the main stakeholders of this scheme. And if you discuss in most of the Rabi Goshtis and Kharif Goshtis in the states, these are the issues which come out where coverage of particular sector of losses are not there. So we are working on it, these two issues, how in the next cycle we will be able to include wild losses due to wild animals, losses due to inundation due to on paddy or waterlogging, that how can be covered it, ensuring that there is no problem in assessment or no problem in having some sort of moral hazard or adverse selection. Now, what are the challenges? I would like, in this 1.5 days, what are the key challenges for future and how we can still improve Fasal Bima Yojana? Well, it's good that 4 crore farmers are there, 40% of the landed area is covered. Many states have not taken it. Many states have started their own schemes also. That is their choice. But the basic thing is that every state should have an insurance scheme, crop insurance scheme. So where states have not started their own also, not taken PMFBY, they are the states where they are missing out. So Delhi was one of the states which has just been onboarded, and now they will start the scheme. We have discussed it the day before yesterday in the annual action plan, and Delhi government has now said that we will also come up with the Pradhan Mantri Fasal Bima Yojana scheme inclusion. So we hope that slowly and steadily all the states will have a coverage of PMFBY. Preferably our scheme, because it's 50% of our subsidy is available here. And even if their scheme is there, I mean, we can consider of having a partnership. We can learn from their scheme and adopt those issues, and then we can start, the center and state can work together to have all states covered and UTs covered in the scheme. Second issue is, of course, the states. Many times insurance is not, compensation is not paid because the states do not provide their share in time. And I would not like to name the states, but it is a fact, and everybody of you know about it. So what we have started this year is that we will have an escrow account system, and the portal will only open when you give the state share, as simple as that. So my request to the state secretary is, please put this across your finance department that if you want to run the scheme, you have to give the money in advance in the escrow account. Otherwise, don't run the scheme. It should not happen that political system announces a scheme, there is a budget provision based on that announcement, and then you have the issue of ways and means and you don't give the state share. This cannot happen. We are giving the central share in advance now. Earlier, the system was that central share used to come out only if the state share used to come. But now we have done away with this. We give our central share as premium. The farmer share comes first. So the state share also should come in time. And that's why from next year onwards, the escrow account system will come in place. And this will be helping you out to ensure that you press upon the department that please give the funds of whatever the premium is coming. So that the agriculture department doesn't face a flag when there is a loss and they are not able to pay, or they have to pay, the insurance company only pay part of the losses, waiting the state share. So that is one thing which I would like to urge upon the states to ensure this. Then the other challenge is that how to ensure that what is sown is insured. Because we have this system due to when the KCC is taken by loan, is taken by a farmer, the person gives some crop. Now it is inadvertently, it's not possible for the farmer to go every year, every cropping cycle and give, now I will be growing this, aaj main aloo lagaunga, aaj main sugarcane lagaunga. It's not very easy. So inadvertently also what happens is that what is grown is not insured because what has been insured is what is written in the KCC. Many times it is deliberately also. Because the KCC or the crop loan is, the scale of finance depends on the crop, and the area is fixed. And the high value crop is something which a farmer wants to put in the KCC so that they can get high interest, low interest rate, high loans. But what is grown is something different. And that makes problems for the insurance companies. In fact, I was yesterday discussing with Secretary Rajasthan, and he told that the groundnut area of some of the district covered was more than what was estimated. It was more than 25% of what was estimated as actual coverage. Because many people had this KCC with groundnut there, though they had not grown it. And then there is an area correction factor, and everybody goes down. So how to do that? So one of the ways is I have proposed is, and we can discuss it, that we have the digital crop survey. So we do the, say, by 31st December, we do the all the registrations and all the enrollments. The crop survey starts in January, ends in February. We match what is the policy crop and what is the crop from the crop survey. And if we can change the insurance policy after that, before harvesting, so that everything goes as per the, that can be done, we can discuss it, how it is possible. Till now, the policy once given cannot be changed, but we need to do it if there is a mismatch. So that finally, farmers, what is grown is insured. Because we can't have a system कि मेरे पास है तो मारुति 800 और मैंने इंश्योरेंस करा दी BMW की. ऐसे तो नहीं होता ना. जो होती है कार उसी का इंश्योरेंस होता है. तो जो मैंने पैदा किया उसी का इंश्योरेंस होना चाहिए. तो अगर फार्मर ने गलती से या फार्मर ने इनएडवर्टेंटली या डेलिबरेटली गलत चीज़ लिख रखी है तो उसको करेक्ट करने का before the actual compensation is given or before actual harvesting is done, we should have a system. The DCS provides an opportunity, digital crop survey. Everybody knows, everybody is implementing DCS. How can we ensure that that data can be integrated with our NCIP portal and ensure that this can happen? Third issue is of sharecroppers. We know that there is sharecroppers, but either alag-alag naam se, they are different people. How can we bring them? Because one of the reasons, I have this hunch feeling that one of the reasons of low coverage is that the actual owner is not the tiller or the cultivator. And the person is least interested in crop insurance, because all the risk has been transferred to the sharecropper. And the sharecropper does all the inputs without even the KCC and without even taking borrowing money from here and there. And when the actual problem happens, he or she has to bear all the risk and take the losses. Bihar has done something very good where they have ensured that even under the NDRF and SDRF, the disaster mitigation money is given to the sharecropper after verification by the revenue authorities. So can we ensure that more and more sharecroppers, after the consent of the farmer, the owner, can be covered under the PMFBY without ensuring ensuring that there is no misuse of it. We have cases like Mathura and UP where one plot of land was insured 50 times. Misusing this facility. So again, farmer registry is something which can be used. So we know we are running farmer registry. We have about 6 crore farmer registry already developed. So the farmer through the OT-based TP system can give an authorized representation to a sharecropper that this person is cultivating the land and this person can be given the facility of crop insurance instead of myself. And based on that transparent transaction, the sharecroppers or the bataidars or the leaseholders can be provided the facility of PMFBY. That will increase the coverage, bring more inclusivity, and also ensure that the real person who is cultivating the land their losses are insured, not just only the landowners. Another thought we can discuss and bring in some suggestions on that. This scheme, we do discuss about the insurance companies, farmers, states, center, but real stakeholders are the banks. Because ultimately, if they don't efficiently convert a KCC account, taking out the premium and sending it to the portal and ensuring the insurance, it will not succeed. How to ensure that banks become more accountable? We know that there are opt-out forms being filled at the time of insurance itself, at the time of KCC itself. And then we have seen that there are banks with zero insurance. There are hundreds of KCC there, hundreds of crop loans, but zero insurance. Now that is not possible. That means there has been a deliberate attempt to ensure opt-out. Because they don't want to put themselves in any sort of botheration of filling a portal, giving the data, sending the premium. अरे क्या सर दर्द है छोड़ो उसको opt-out भरवा के रख लो फार्मर को पता भी नहीं होगा कि उसने opt-out भर दिया and the person will be out of the insurance. So how can you ensure that the bankers become more accountable? So one of the ways we are thinking is that we integrate the Krishi Rin portal with PMFBY. So what is the Krishi Rin portal? It is the portal through which we send our modified interest subvention. We know that KCC has 4.5% of subsidy, 1.5% of interest subsidy, 3% of prompt repayment incentive. That system has now been computerized. More than 6 crore accounts of KCC are available with us, where banks have demanded this PRI incentives and the interest subvention incentives from the ministry. We pay about 20,000, 22,000 crores rupees every year. So then we can link this, okay, you have given this data, now please tell me whether you have insured that KCC or not. If you have not insured, then kindly show me the opt-out form. So that way, you will be able to have more accountability of the banks, and linking it with MISS will ensure that the banks will give you correct data. I think so that is another way that we will be in the next future. So basically, linkage of the 3 data sets, the digital crop survey, the farmer registry, the Krishi Rin portal, and the NCIP portal. This will what will it ensure? That all the KCC accounts are covered. There could be only 2 reasons why they cannot be covered. One, that crop written there is not notified as a crop for insurance. Or number 2, the farmer has given an opt-out form. Third, there is no way. Then you have to insure. So that will be one way, integrating with the KCC, the Rin portal, and then giving the farmer the facility to give that option to the leaseholder or the shareholder through the farmer registry system. And thirdly, seeing that what is sown is what is insured through the digital crop survey, and changing the policies after the crop survey data comes. So these are the few things which we are thinking, which is in our mind in the next cycle. Maybe there could be a discussion on this. And if everybody is comfortable with this system, we will implement it, because this will improve the coverage, make it more transparent, and insurance companies will also be very comfortable with the way things are going. Then the second last issue I would like to mention is that as mentioned by one of the speakers here, that how can we expand the insurance coverage? And we'll have someone from animal husbandry coming. So how can we also ensure that apart from the land, agricultural land, the animal husbandry scheme or the fisheries scheme can also be included? So again, we have the opportunity due to digitization. How farmer registry is now integrated with the registry of animal husbandry, registry of the fisheries. So for each farmer ID, we will have how much is the, if the person is also doing fishery, what is the details of that pond where the person is doing practicing fisheries, or how many animals, what type of animals they are having. And also we know that KCC also has animal husbandry and fisheries. So RIN portal will also have animal husbandry and fisheries. So can't we have that mandatory system of crop insurance covering animal husbandry and fisheries also, which is already a part of the KCC. So that will ensure that they or their fishery systems are also insured in a way that will expand the coverage and also make the farmer ensuring that their risk of these occupations, because we know the growth rate of animal husbandry and fisheries is very fast, and we can cover them insurance using this integration, the whole of government approach. So that again is something which could be discussed in subsequent time, especially when the officers from the Animal Husbandry Ministry come, and with your experiences also. Can we have a digital opt-out rather than a physical opt-out at the bank? We don't want to put bank in the system of opt-out. So again, if we have the farmer registry, let the farmer, by OTP-based system, give the opt-out to the bank. That will ensure that there is no delay. So before every season, the farmer will be asked, he can send, he has the data of the farmer registry where the KCC data is available. The person can say, I don't want to for this season, go for the insurance, and that's it. The banks will have that included in the system, and they will do the needful. So at least that perception which we have, that there is a deliberate attempt to have opt-out forms at the bank level, will be over. So even that can be thought of, because we are now digitizing and having a digital public infrastructure. For insurance companies, how to cover non-loany farmers, one of the suggestions was that we have now the self-help group ladies. So they are Krishi Sakhis, trained Krishi Sakhis. There are trained Pashu Sakhis. There are trained banking correspondent Sakhis. A huge network of these trained women, educated trained women at the village level. Can we use them? Can the insurance company use them with some incentive-based system to enroll more and more non-loany farmers, apart from the common service centers? That could be a thought for the insurance companies to expand their coverage, have more and more non-loany farmers in the system who are not part of the KCC network now. And last but not the least, how to ensure the problem of coverage in northeastern states. Of course, we have that only 4% of the area, agriculture area, is in northeast, and the number of farmers around 3 and 3.5%. But even that is not covered. And there are huge NPAs there. So how to ensure that we can, as a non-loany farmer, cover more and more farmers in the northeast? What could be the way different from the normal PMFBY functioning, that farmers in the northeastern states can be covered in a big way? That is another issue which we would like this August gathering to discuss, especially the officers who have come from Assam and other northeastern states, sister states. Okay. What should be done? Some template, some workable template which can be given to us so that we can ensure that if not 10%, at least 4% of the funds from the northeast can be spent, and all the farmers in the northeast can be covered with the insurance scheme. So these are the few thoughts, few challenges for future, our suggestions for the way forward. As Secretary, I wanted you to discuss, I would urge you to discuss these apart from other aspects which will be relevant for this scheme to be successful. Ultimate aim is that more and more farmers, more and more crops, quick release of premiums, and fast payment of the compensation. These are the basic 4 or 5 objectives. And I would also, what we are doing this time is just like 3 times in a year, the PM Kisan beneficiaries are they distributed their income support through a click of the button by Honorable Prime Minister. What we are doing this time from next year is, despite a lot of resistance from my own team, that we will fix a date that all the payment will fix 2 or 3 dates for each Kharif and Rabi, that this will be the date where all the insurance companies will pay the payment of the compensation. And what it will do is, it will ensure that the states, and there will be a back calculation or target, कि अगर इस तारीख तक हमने नहीं किया काम तो हमारे राज्य के किसानों को पैसा नहीं मिलेगा फर्स्ट राउंड में. So payment of the premium from the budget to the escrow account, ensuring that the CC is done in time, crop cutting experiment का data समय से आ जाए, ये सब चीज़ें, these are huge problems, नहीं आता time से, तो ये time से आ जाए, नहीं तो हमारा state छूट जाएगा कि जब हमारे कृषि मंत्री बटन दबाएंगे, अगर सितंबर अक्टूबर में हार्वेस्टिंग हो गई खरीफ की और हमने दिसंबर का टाइम फिक्स कर दिया कि 25 दिसंबर को गुड गवर्नेंस डे में फर्स्ट राउंड ऑफ इंश्योरेंस विल बी पेड, तो एवरीबडी स्टेट विल बी अलर्ट कि अगर इस बार इससे पहले हमने काम नहीं किया तो वी विल बी लेफ्ट इन दिस फर्स्ट राउंड. So there will be a target on the insurance company, target on the state governments, target on the district administration, and then when through the click of button it will be paid, there will be a huge impact, I'm telling you. Because when something is done as an event, when it is done with farmers sitting in our Krishi Vigyan Kendras at our some district magistrate's office or block office, and when people get that message that your compensation for this loss has been paid, it gives a huge confidence to those who have not got it. It generates awareness. We know that Kisan Samman Nidhi is a word of mouth thing. Across the country, पूछो किसान सम्मान निधि मालूम है, सबको मालूम है. आप पूछे फसल बीमा मालूम है, कुछ लोगों को मालूम है. क्योंकि हम चुपचाप उसके खाते में पैसा डाल देते हैं और कह देते हैं कि चला गया. बहुत सारे सांसद विधायक को तो पता ही नहीं है, वो कहते हैं कि पता नहीं जाता भी है कि नहीं. दे क्वेश्चन, मुझे नहीं मालूम गया कि नहीं. मुझे लगता है कि जाता वाता कुछ नहीं, आप ऐसी ही सूचना देते हैं. दिस इज व्हाट हैज बीन टोल्ड टू अस, because there is no awareness generation even when we are distributing the benefits, which is not correct. Number one, if there is a scheme, we have to generate awareness, and the best way to generate awareness is that there should be an event where these compensation, and because of the fact there are different timelines of different states, we can have 2 to 3 dates, and we should ensure that that event happens when political executive, the state secretary, state ministers are there, and then they can tell about the benefits, they can give testimonials of those farmers who have got the compensation of the loss, which will build confidence about the scheme, and there will be more and more people enrolling. So these are my few thoughts which I thought I have taken more time, but because of the experience of the state and working in Government of India, I had some few reforms in mind, and I'm sure you will be deliberating them and bringing some way forward where we reform the scheme for the next 16 Finance Commission cycle and for the next tender cycle. Thank you very much.
A very, very big thank you to each and every dignitary on the dais. Thank you so much for that very enlightening, for your very enlightening opening remarks and for sharing your rich, wholesome experience with us. A huge round of applause to each and every one of our dignitaries on the dais. Thank you. Request you to please take your seats. And with that, we have officially started with all the opening remarks. Once again, a huge round of applause. You may take your seats. Also, as we continue, and we know that such opportunities are a great platform for us to co-create, a lot of knowledge sharing, but also to make memories forever. And we're going to do just that as we request you all to head to the pandal behind this conference room for a beautiful photo opportunity while we're all still fresh and glowing in the morning. And then let's see you after a quick group photo and an even quicker tea break. See you on the other side as we have some very impactful sessions lined up. Thank you.
प्रतिनिधि की मदद से घर बैठे करा सकेंगे फसल का बीमा। अपने फसल बीमा के नामांकन के लिए बीमा एजेंट को कॉल करें और PMFBY एड के द्वारा निर्धारित दस्तावेज घर पर ही दिखाकर अपनी फसल का बीमा घर बैठे कराएं। फसल बीमा की आधुनिक सुविधाओं के साथ अब निश्चिंत हो रहा हर किसान। मुस्कुरा कर कह रहा है हर किसान, घर घर चल रहा है फसल बीमा अभियान। कृषि एवं किसान कल्याण मंत्रालय।
लर्निंग मैनेजमेंट सिस्टम कृषि बीमा और कृषि ऋण योजनाओं से संबंधित जानकारी लेने की एक नवीनतम प्रबंधन प्रणाली है। ये कृषि और किसान कल्याण मंत्रालय द्वारा इलेक्ट्रॉनिक्स और सूचना प्रौद्योगिकी मंत्रालय के सहयोग से विकसित की गई एक अनोखी पहल है। इस सिस्टम के इंटरैक्टिव मॉड्यूल से प्रभावी शिक्षा प्रदान करना बेहद आसान है। इस प्रणाली में प्रधानमंत्री फसल बीमा योजना, PMFBY व किसान क्रेडिट कार्ड KCC पर संशोधित ब्याज सब्सिडी योजना, MISS जैसी 2 महत्वपूर्ण योजनाओं को भी सम्मिलित किया गया है। इसमें वीडियो और इंफोग्राफिक्स के माध्यम से विस्तृत जानकारी प्रदान करने वाले मॉड्यूल मौजूद हैं। डैशबोर्ड से हितधारकों की प्रगति की निगरानी के साथ साथ व्यक्तिगत संस्तुति भी सरलता से दी जा सकती है। इस सिस्टम से ज्ञान प्राप्त कर रहे हितधारकों द्वारा सीखी हुई जानकारी का मूल्यांकन करके उन्हें प्रमाण पत्र देकर प्रोत्साहित भी किया जाता है। यहाँ हितधारकों को विशेषज्ञों के साथ अपना अनुभव साझा करने हेतु एक ऑनलाइन फोरम की भी सुविधा उपलब्ध है। LMS में कृषि ऋण व
अन्नदाता किसान देश की पहचान। किसानों की फसल सुरक्षा की ओर एक और कदम। भारत सरकार पहुंचेगी अब किसानों के द्वार। प्रधानमंत्री फसल बीमा योजना के अंतर्गत फसलों का नामांकन आसान करने के लिए भारत सरकार अब लाई है मोबाइल ऐप एड यानी किसानों का सहायक, जिससे किसान बीमा प्रतिनिधि की मदद से घर बैठे करा सकेंगे फसल का बीमा। अपने फसल बीमा के नामांकन के लिए बीमा एजेंट को कॉल करें और PMFBY एड के द्वारा निर्धारित दस्तावेज घर पर ही दिखाकर अपनी फसल का बीमा घर बैठे कराएं। फसल बीमा की आधुनिक सुविधाओं के साथ अब निश्चिंत हो रहा हर किसान। मुस्कुरा कर कह रहा है हर किसान, घर घर चल रहा है फसल बीमा अभियान। कृषि एवं किसान कल्याण मंत्रालय।
लर्निंग मैनेजमेंट सिस्टम कृषि बीमा और कृषि ऋण योजनाओं से संबंधित जानकारी लेने की एक नवीनतम प्रबंधन प्रणाली है। ये कृषि और किसान कल्याण मंत्रालय द्वारा इलेक्ट्रॉनिक्स और सूचना प्रौद्योगिकी मंत्रालय के सहयोग से विकसित की गई एक अनोखी पहल है। इस सिस्टम के इंटरैक्टिव मॉड्यूल से प्रभावी शिक्षा प्रदान करना बेहद आसान है। इस प्रणाली में प्रधानमंत्री फसल बीमा योजना, PMFBY व किसान क्रेडिट कार्ड KCC पर संशोधित ब्याज सब्सिडी योजना MISS जैसी दो महत्वपूर्ण योजनाओं को भी सम्मिलित किया गया है। इसमें वीडियो और इंफोग्राफिक्स के माध्यम से विस्तृत जानकारी प्रदान करने वाले मॉड्यूल मौजूद हैं। डैशबोर्ड से हितधारकों की प्रगति की निगरानी के साथ साथ व्यक्तिगत संस्तुति भी सरलता से दी जा सकती है। इस सिस्टम से ज्ञान प्राप्त कर रहे हितधारकों द्वारा सीखी हुई जानकारी का मूल्यांकन करके उन्हें प्रमाण पत्र देकर प्रोत्साहित भी किया जाता है। यहाँ हितधारकों को विशेषज्ञों के साथ अपना अनुभव साझा करने हेतु एक ऑनलाइन फोरम की भी सुविधा उपलब्ध है। LMS में कृषि ऋण व कृषि बीमा से जुड़े विभिन्न प्रकार के दस्तावेज व संदर्भ सामग्री का भंडार भी उपलब्ध है, जिसे नॉलेज रिपोजिटरी भी कहा जा सकता है। विशिष्ट विषयों पर मार्गदर्शन हेतु इसमें वेबिनार सत्रों का भी आयोजन किया जा सकता है। LMS का उपयोग मोबाइल ऐप द्वारा भी करना संभव है। ये इसे दूर दराज के क्षेत्रों में उन हितधारकों तक पहुंचने में भी सक्षम बनाता है जिनकी कंप्यूटर तक पहुंच सीमित है। LMS और फसल बीमा पोर्टल के साथ सहज समावेश से ये हितधारकों के लिए आसान पंजीकरण व योजना से संबंधित समाचारों और नीतियों पर अपडेट की भी सुविधा देता है। LMS हितधारकों की जरूरतों के अनुसार विकसित हो सके, इसके लिए इसमें फीडबैक फॉर्म के माध्यम से निरंतर सुधार का विकल्प भी दिया गया है। कृषि बीमा और कृषि ऋण के लिए लर्निंग मैनेजमेंट सिस्टम सिर्फ एक प्रणाली नहीं है, ये सशक्तिकरण, ज्ञान साझा करने और निरंतर कृषि विकास के लिए एक बेहतरीन पहल है। प्रधानमंत्री फसल बीमा योजना पिछले 8 सालों से देश के करोड़ों किसानों को आर्थिक सुरक्षा कवच देने का काम कर रही है। किसानों की योजना में बढ़ती सहभागिता से योजना के क्रियान्वयन से संबंधित प्रश्नों एवं शिकायतों को भी सही समय में सुनना एवं उनका जवाब देना आवश्यक है। PMFBY के दिशा निर्देशों के अनुसार किसानों के लिए शिकायत निवारण की नई व्यवस्था एवं माध्यम विकसित किया गया है, जिसे किसान अपनी शिकायतें दर्ज करने और समाधान प्राप्त करने के लिए सरलता से उपयोग कर सकते हैं। इस योजना के अंतर्गत हमारे किसानों के लिए अब तक कोई शिकायत निवारण की केंद्रीकृत प्रणाली नहीं थी, लेकिन अब इस योजना के अंतर्गत एक केंद्रीकृत टोल फ्री नंबर प्रस्तुत किया है, जो किसानों को फसल बीमा के क्रियान्वयन संबंधी शिकायतें करना एवं उसका समाधान पाने का आसान तरीका है। देश के करोड़ों किसानों के लिए सादर समर्पित है कृषि रक्षक पोर्टल और हेल्पलाइन। इस नई व्यवस्था से इंश्योरेंस कंपनीज, बैंक्स और राज्य सरकारें जुड़ी हुई हैं। कृषि रक्षक पोर्टल और हेल्पलाइन सटीकता के साथ विकसित किया गया है, जहां किसानों को प्रमाणित करना, बीमाकर्ताओं, बैंकों एवं राज्य सरकारों को टिकट अग्रेषित करना तथा वास्तविक समय में ऑनलाइन उचित समाधान प्रदान करना
25 मिनट्स है ना, नहीं तो मैं ही लंबा खींच गया, पता चला.
That is fine. He will see here only.
हाँ.
This will be a play, no? हाँ, वो टाइम के हिसाब से.
हाँ, टाइमर ऑन कर देना.
ठीक.
हेलो हेलो हेलो. मुझे तो लग रहा है ठीक है.
Hello, hello, everyone. Good morning.
मुझे पता नहीं, मतलब मेरे लिए तो ठीक है, फॉर मी इट इज. हाँ.
Blackout होगा.
Welcome back, everyone. Request you all to please settle down. I hope you all are feeling energized after that little tea coffee break, which I think was really needed. And now over to Shri Muktanand Agarwal, our Joint Secretary and CEO PMFBY Government of India, for presentation and context setting. Before we have Shri Muktanand ji take over, once again requesting all of you to please take those seats. Some of us that still have our tea coffee cup in hand, maybe you can bring it in, but please do come on in and settle down as we leave the podium over in the very able hands of Shri Muktanand Agarwal ji. Over to you.
Thank you. Oh, initial slide. So very good morning once again. I'll request you to please pay attention, and this is just a context setting, and I would like to touch upon the main points, the progress that has been made since last NRC, and where do we stand, what are the main issues, what have been the achievements, and what is the way forward. So this is the scenario. Some states have their own schemes, and including those figures, we have 551 lakh farmers covered under either Pradhan Mantri Fasal Bima Yojana, or states like Bihar, West Bengal, Gujarat, they have their own schemes to support the farmers. And overall, 40% of the gross cropped area of the country is under crop insurance or some kind of similar assistance. States having their own horticulture crops, it is at 5%. Apart from this, the National Crop Insurance Portal, which enables us to auto-administer the scheme from enrollment to claim settlement and grievance redressal, end-to-end automation. Technology initiatives like CCE, Agri, App, YesTech, WINDS, KRPH, schemes, flexibility, which we have offered to the states. They can select the add-on covers and ARTM models as per their own requirements. To cover the crops which don't have the yield-based data, we have the restructured weather-based crop insurance schemes, mainly for horticulture and plantation crops, and a comprehensive risk coverage, which we endeavor to cover all kind of risks that our farmers, farming community may face. This is our journey over the last 8 years, and the scheme has undergone significant transformation in terms of policy reforms, improving the transparency, and that includes financial transparency, adoption of various technologies. So since its launch in 16-17, every year we can see that there have been some interventions which have played a critical role in the success of schemes. So in 2017-18, there was National Crop Insurance Portal was introduced. In 2018-19, CC, Agri App, and the operational guidelines were revised. The ministry started conducting pilots for tech-based yield estimation in 2019-20, which ultimately resulted in YesTech. Then a scheme was made voluntary in 2020-21. 21-22, for the first time, 3 crore farmers were insured, and more than rupees 1,40,000 crores claims were settled. And especially in 22-24, we saw many technological interventions taking shape and finally getting launched. So YesTech, WINDS, DigiClaim module, AID app, CropPick, which is under pilot now, the learning management system, and for the first time, more than 4 crore farmers in one financial year were insured. So this way the scheme, yeah, that's what we deserve, and Ritesh sir is also sitting here. So he and his team, Bhutani sir, all of them, and of course the state governments and insurance companies, all of them have put in a lot of efforts from taking the scheme from where it was to where it is now. This slide shows that how diversified this scheme is. More than 100 crops the states have notified, they are able to notify, and various models. So some states have adopted Pradhan Mantri Fasal Bima Yojana and RWBCIS. Kerala only RWBCIS. Some have adopted only Pradhan Mantri Fasal Bima Yojana. And one encouraging fact is that states like Jharkhand and Andhra also, they have rejoined the Pradhan Mantri Fasal Bima Yojana. And we also hope that many more states will join us, the remaining states which are left out. And all kinds of risks we try to cover: inundation, landslide, hailstorm, cyclone, drought, post-harvest losses. Some of them are, of course, under consideration, and we have formed committees to draft the guidelines how to cover those risks, like wild animal attack and inundation. This is what makes the scheme comprehensive, from the sowing stage to the harvest, and the basic cover is area yield index cover based upon the crop cutting experiments, but all kinds of add-on covers which we could think of so far have been provisioned in the scheme guidelines. So we have localized calamities, mid-season adversity, post-harvest losses, prevented sowing, and the ministry has tried to formulate the guidelines which is most beneficial for the companies, for the farmers, for the states also, and we have given the option to the states for adopting one or more add-on covers. So some of these states, they have opted for all of them, some have opted for one or two of them. So this is the comprehensive nature as well as the flexibility which has been given under the scheme. Again, as I showed in the first initial slides, the capping of farmer premium, and historically the data till date shows that the overall share of the Government of India has been 40%, state government share 48%, and farmer share at 12%. One more important fact here is that for northeastern region and Himalayan region, they have the opportunity of Government of India sharing 90% of the subsidy burden, premium subsidy, which enables them to cover more and more farmers at a low budget for them, budgetary provision for them. And I would request the Himalayan states and the northeastern states to avail this opportunity and enroll more and more farmers. This is again a slide which shows that we have 20 insurance companies. At one point of time, there were 17. Then again, the number reduced during the COVID times. Now, 14 of them are actively implementing the scheme out of 20 impaneled insurance companies. And the fact is that out of 33 general insurance companies which are currently impaneled under the scheme, 14 are actively participating. And the participation has increased after the progressive reforms that were brought in the scheme before 2023 tender cycle. This slide, number of farmers benefited under the scheme, and for the first time in 23-24, we can see that the number of non-loany farmers exceeded the number of loany farmers, which is very encouraging for us, and the trend continued in 24-25. On the right side, we can see that out of 4.10 crore farmers, of course, 14% from Rajasthan, 27.8% from Maharashtra, and we can't compare all these states, but still states may take a note of this fact that some states, their coverage is very low. Like UP, only 8.1% in the entire country. I don't think that represents their actual share of population in the country or the farmers population in the country. Chhattisgarh 0.3%. So we hope that the number of farmers will also increase in the years to come, and we have to increase the enrollment. Against the gross cropped area, the insured area coverage is at 40%, as mentioned by the speakers in the inaugural session. And here, because of the full universalization in some of the states and enrollment at ₹1 for every farmer, we have increased coverage over the years. But we need to check. In the next slide, I'll show that what is the percentage wise. So here we can see that, for example, Rajasthan covers 40% of its gross cropped area under PMFBY. Maharashtra 61%. Of course, they have universalized the scheme. But many states, this is within the state. So compared to the gross cropped area of the state itself, where does the state stand? And what is the insured area? So in a state like UP, where only 8.2% coverage is there, or Assam 15%, Uttarakhand 8%. There are, each state has different conditions, agricultural ecosystem, but still I think we should try to include more farmers and bring more farmers under the scheme and increase our coverage. Source for farmers enrollment, banks have always been a major source, banks and then CSCs. Farmer self-enrollment channels are gaining momentum through which we can see that this is slowly increasing, and also through the aid app, which is for the intermediaries. So going forward, we would like to encourage more and more farmers to enroll themselves, and through this self-enrollment mobile application app. KCC PMFBY saturation drive was also taken up in the last financial year to ensure risk coverage to loan availing farmers, and we would like to run this drive again in the coming year. This graph here, the coverage under PMFBY is a representative of what is our agricultural scenario of the country. So as is the fact which is true about the country, that majority of our farmers are small and marginal, almost 90%. So the same is true about this scheme also. 89% of the farmers covered under the schemes are from small and marginal group, and the participation of female farmers has also increased over the years. Technology interventions, one of the key features of the scheme, Pradhan Mantri Fasal Bima Yojana, is that it has evolved from a manual CC based yield estimation scheme to leveraging and adoption of remote sensing technologies and AI ML based yield prediction modules. A holistic journey of PMFBY on the policy and technology level interventions is depicted in this slide, starting from introduction of smartphones for crop cutting experiments in 2016. There have been continuously new technologies and new technological interventions being introduced every year. In 2017, there was SOP for yield dispute resolution. 2018, smart sampling technology and CC Agri app, they were introduced. In 2019, nationwide rollout of smart sampling technique. Then revamped Pradhan Mantri Fasal Bima Yojana. In 2022, tech-based yield estimation was introduced. So as a result of which, in 23-24, we have all these technological interventions which enable us to make the scheme better. And we were facing the challenges like hardening premium rates, crop loss assessment, there were challenges. So a shift from manual crop cutting experiments to technology-based yield estimation and other technology initiatives have made this scheme much more robust, transparent, and friendly, not only for farmers, but for all stakeholders. So this is again key design elements of technology interventions. The integration of state land records into the NCIP, streamlined operations, and YesTech for paddy, wheat, soybean, which is more than 60% of the insured crops. And data interoperability also is a feature of the technological interventions. The ICT systems stack, YesTech for technology-based yield estimation, WINDS, it provides access to real-time and historical weather data, and we want to create a repository of hyper-local data, which is gathered from the panchayat level, automatic rain gauge at Gram Panchayat and automatic weather stations at the block level. Then Cropic, which aims to enhance the accuracy and efficiency of crop insurance claims by collecting real-time data and pictures of the crops. AID, which is an app for insurance intermediaries. Sarthi, a platform where we can include more insurance products and offer it to the farmers as a bundle of insurance products. Krishi Rakshak portal, a single nationwide portal for all the farmers to register their grievances, and which enables us to provide the proper responses to the farmer on the portal itself. Some more, National Crop Insurance Portal, the DigiClaim module, end-to-end solutions for automation of the scheme and payment of the claims also. CC Agri app, API integration, learning management system, learning management module, which is very important for all the stakeholders to update their skills and knowledge. PMFBY chatbot, which is the latest technology initiative. This is the status of YesTech, which is very encouraging. 7 states have started implementing YesTech from Kharif 2023, and Assam and Tamil Nadu adopted from Rabi 23-24, Rajasthan adopted from Kharif 24, Puducherry, and Himachal Pradesh, Uttarakhand, and Jharkhand, they are in the process. And most importantly, Madhya Pradesh has gone for 100% technology-based yield estimation. So this slide is very encouraging. I would just make a request to the states which have adopted YesTech that they should now try to include more and more districts if they have implemented YesTech partially in their state, and also to cover more crops if it is applicable for their states. We also are in the process of conducting more pilots. So far, we only cover paddy, wheat, and soybean. Though this is approximately 60% of the entire covered area under PMFBY, but still we would like to conduct more pilots, which enables us to develop models under YesTech for more crops. This is WINDS, again, a very important initiative, Weather Information Network and Data System. Again, very encouraging picture. 6 states have issued work orders to the WINDS implementation partners. 3 states have floated tenders, and 5 are awaiting approval. So I hope that within this financial year, we will be able to see many states started implementing WINDS and the data flowing into the portal. And once that is achieved, we will have a huge repository which is not only useful for the Pradhan Mantri Fasal Bima Yojana, but a hyper-local weather data which can be used by IMD and other bodies for implementation of other schemes, prediction of weather, monsoon forecast, many other things they can be used for. Krishi Rakshak portal, which was inaugurated last year, but practically started in November 23, and more than 72 lakh farmer calls have been answered. Insurance companies are happy. I think farmers are also happy that they now don't have to call up individual companies' toll-free number or some other number. There is single number 14447. Any farmer can register a grievance, or if there are any issue, if he has not received the claims and intimation of crop loss, they can give there. And this portal is working very well. PMFBY chatbot, the latest initiative, and so far we have more than 19 lakh unique users who have used this Pradhan Mantri Fasal Bima Yojana chatbot, and they have utilized this chatbot for intimating the crop loss, seeking general information, acknowledgement receipts, complaint tracking, and many other utilities are there. This is the parametric insurance, parametric risk coverage under restructured weather-based crop insurance. So for the crops which are not having the yield-based index, we have this provision, and they include plantation crops, horticultural crops. We are also in the process of inclusion of medicinal crops. Automate claims integrated with winds and digiclaim are also, this is also our priority. And we try to cover more and more crops. If the yield-based cover is not applicable, then we should go for parametric insurance, which is also, it is coming into trend. So this is the latest trend of parametric insurance. And under RWBCIS, we are trying to cover the crops under this. ARTM, we all know about it. Many states have gone for 80-110. Some states have gone for 60-130. And the results, the outcomes have been, I will say that, mixed outcomes, which we can see in the coming slide, I guess. So 4 states with 80-110, 3 with 60-130. And the premium, the gross premium and the premium rates, as we can see, they went down drastically. So 67% reduction in premium rates for Andhra Pradesh, 28% reduction for Madhya Pradesh, and for Puducherry, Rajasthan. There has been reduction in rates, in the premium rates, by intervention, by introducing the ARTM. But still, I think there are some learnings, and there have been some experiences which have now compelled us to evaluate this pricing and reinsurance mechanism, reevaluate the alternative risk management mechanisms, 60-130, 80-110. How can we make them better, or is it the time to replace them with better models? Plus, we are also working on in-house risk analysis and pricing on the NCIP portal for precise premium rate. Can we implement a service charge based model in the scheme? That is also what is being examined. And also single portfolio reinsurance contract. So on the right side of this slide, these are some important points, subjects under consideration. We have formed a committee in the ministry, and hopefully we will come with outcomes and suggestions which will be in the interest of all the stakeholders. Because there are concerns from the insurance industry. They have concerns regarding aggressive bidding practices by some insurers under ARTM, because of which the premium rates have gone down. And state governments have also concerns regarding shifting of claim liabilities in catastrophic events. And some states have actually faced these consequences. This is the latest encouraging news for us, that plantation crops, after a long process of deliberation with the respective boards, like tea board, coffee board, and other boards, and the state governments, we have been able to finalize the term sheets for many plantation crops. And in this slide, we can see that though compared to the major crops, the area is less, but I think still it is a sizable area in many of the states. For example, a state like Kerala, where right now only 3% coverage is there, and many other states also, we have plantation crops. So the plantation crops, term sheets for the plantation crops have been almost finalized, and states, some of these states have conducted their state level committee meetings to adopt those term sheets, and we request them to include those crops and term sheets in their upcoming tenders. And those states which are still left behind, they can also implement this thing, and they can finalize the term sheets by following the process. So this is how we have been able to cover the plantation crops. Stakeholder consultations were conducted with plantation boards. Term sheets were developed. Then state SLCCI, they approved the inclusion of the crop. Then this is the process which I just explained. And we want that the crops for which term sheets have been finalized, the state should make effort to align them with the upcoming 3-year PMFBY mega tender cycle starting Kharif 26. And also winds implementation is very important for these because the triggers are all weather-based parameter and weather-based triggers. So if the winds is implemented properly, we will be able to get the proper data and real-time data flowing to our portal, and which will enable us to calculate the actual damage very accurately. On the popular demand from many states to examine the inclusion of paddy inundation and wild animals attack, because some states actually face these problems, we have formed a committee which is examining how we can include these two risks, perils under PMFBY, and they are trying to define the modalities, and I'm hopeful that within this year we will be able to formulate some guidelines to include these two risks also. Sarthi, this is, I will say, a platform with huge potential where we can develop more insurance products. One of the low-hanging fruits, of course, is livestock insurance. And we have officers from the Ministry of, from the Department of Animal Husbandry and Dairy. And there are sessions on how we can, on the model of PMFBY, how we can develop a scheme or some guidelines for livestock insurance also. And there may be many other products for farmers, so that farm equipment, farm vehicles, even the home insurance, health and life insurance, all these can be developed and then offered to the farmers through Sarthi. And we have engaged in discussions with insurance companies, reinsurers, and also with IRDAI representatives to work in this direction. So this is how we would like to strengthen the interventions taken, consultations to enhance the ARTM models. The important point number 2, the central share of subsidy has been delinked from the state subsidy, and coming Kharif 25, we have requested, we have provision for centralized escrow accounts at the state level, and I request all these states to work in this regard and make necessary arrangements. Then Fiat guidelines have been rolled out, and very soon we will be able to provide our budgetary support to the states for implementation of technologies. And then Krishi Rakshak helpline, Krishi Rakshak helpline, DigiClaim module, all these things are there. NCIP portal, as we all know, we have been using it, end-to-end solution for the scheme implementation. Everything is there. CC Agri app, this one important point, Secretary Sir also mentioned about it in the morning. We are still at 56% in Kharif 2024, and I would urge all these states to please try conducting their crop cutting experiments through app only. We can see very encouraging trend in states like Rajasthan with 88%, Uttar Pradesh with 87%, and Andhra with 76%. I would request other states also to please increase these numbers, and ideally we should conduct all the experiments through app only. This is again one request to the states, that the claims which have been pending, more than 4,000 crores state claims have been pending. Mainly 83% claims are pending due to the pending subsidy from the state governments. I understand, and the ministry understands the financial constraints of the states. Still, in the interest of farmers, we would urge you to release these subsidies also in the view of upcoming escrow account guidelines, which will be operational Kharif 25 onwards. Seasonality, discipline, and timelines, this is very important, especially in the context of what Secretary Agriculture in the inaugural session, what Sir said, that this is something we need to work upon. And in the months to come, we will engage in discussions to how we can actually implement the seasonality discipline, which is there in the guidelines, but we have not been able to follow the same. And for implementing, if we want to disperse the claims with a click of button thrice in a year, then we need to follow the seasonality discipline, which includes timely uploading the data of crop cutting experiments, then following that cycle which is mentioned in the guidelines, and up to the payment of claims. The land records data of 9 major states has been integrated, and for Himachal, Jharkhand, Tamil Nadu, it is under progress. And with the addition of these states, land records being integrated with NCIP will be at the 87%. This becomes more contextual with the digital crop survey now taking up and farmer registry also coming in place. So the entire system is integrated with the digital land records. This is the way forward. We have come a long way, but still a long way to go also. And so many more milestones to be achieved. All these we have tried to incorporate in this slide. So international collaboration for experience sharing and hand-holding the countries which can learn from us. Implementation of Yes Tech and Winds more effectively. Universal coverage, inclusion of more and more farmers and eligible farmers, and gross cropped area, more area to be covered. NCIP, making it more robust and providing the states with the dashboards which they need for better implementation of schemes, advocacy and knowledge infrastructure, training, capacity building. So with this, I come to the end of my presentation. Thank you.
Thank you so much. Shri Muktananji, requesting you to please stay on stage. Sorry, but a little more while on stage, please, as now we step into the recognition and celebration. As Shri Muktananji said, we all know PMFBY is growing from strength to strength, becoming more robust, becoming more and more efficient. But now is the time to put the spotlight on all those that make that growth possible with their hard work and resilience, all the stakeholders. So, Muktananji, with your permission, can we start with the rewards and recognition? Great. Let's start with our first category, which is the VLEs from CSC SPV. And we have the top 2 performers, VLEs, and they are selected from 3 categories of states, those who have done maximum enrollment. We have states in small state category, which are Puducherry, Manipur, and Tripura. States in medium state category, Assam, Kerala, and Uttarakhand. Also states in large state category, Maharashtra, Odisha, and Rajasthan. I'd like to request Shri Kumar Pushpendra, Vice President and CSC SPV team, to please come up to do the honors to collect the certificate for the 18 VLEs. Let's hear it for Shri Kumar Pushpendra, please. And can we have the certificate? Request you to please take center stage and create for a beautiful photo opportunity as we do the honors. Yes, please. Congratulations, and this is just a little way of us saying thank you, and we appreciate and value the work you put out there. With that, we move to the next award. This one is for Best Performing Insurance Company in Overall Stakeholder Ranking Performance under the PMFBY, and for that, the award goes to, we have... Yeah, so these two they've asked me to request you to give, and then. So on the 4th rank, we have HDFC Ergo General Insurance Company, requesting the team to please come up and requesting Shri Muktananji to take center stage as we recognize HDFC Ergo General Insurance Company on the 4th rank. Congratulations for the great work you put out there. And with that, on the third rank, we have Agriculture Insurance Company, requesting the team to please come up and take center stage. Agriculture Insurance Company on the third rank. Thank you, and also a huge round of applause to Shri Muktanand-ji. Thank you for your wonderful words of wisdom and for encouraging our winners. And now to give away on rank 2 and rank 1, the recognition, calling Secretary Agriculture, Shri Devesh Chaturvedi-ji, to please come up and take center stage and do the honors. We have you back as well, Shri Muktanand-ji. And please take center stage. On the second rank, we have SBI General Insurance Company. And with excitement, on the first rank is Bajaj Allianz General Insurance Company coming up. Congratulations to the fantastic work, and we do appreciate this wonderful journey that we've shared together. Thank you so much, Devesh-ji. We request Muktanand-ji to please stay on stage. We now move to our next category of awards, which is overall best performing districts. And this is as per ranking performance under the PMFBY. We have under medium states, there are 3 districts from 2 states, namely, first up is Assam, South Salamara and Helkandi. Muktanand-ji, please do the honors. May I request from Assam, Srimati Aruna Rajoria, Commissioner and Secretary to the Government of Assam, to please come up to collect the award. Coming up next, we have from Jammu and Kashmir, Bandipora. And we don't have any representative, but nevertheless, we can give Jammu and Kashmir a big round of applause. Thank you. And we have under large states 2 districts that have performed top order. From Chhattisgarh, we have Sakti and Mohala Manpur. May I request Shri Amrit Vikas Topna, District Collector Sakti, to come up and collect this recognition on behalf of PMFBY. And next up, may I request Ms. Tulika Prajapati, District Collector, Mohala Manpur, to please come up. Congratulations to each and every one that has come up on stage and to our winners that will follow as well. Muktanand-ji, thank you so much. And now to do the honors and to present our next set, can we please have Shri Sanjeev Naren Mathur, AS and FA, as we tell you that we have another category of awards, and this one is for adoption of innovation by the districts for effective PMFBY scheme implementation. To do the honors, we have Shri Sanjeev Naren Mathur here with us. In this category, we have 2 districts, Koppal and Haveri from Karnataka, and Hanumangarh district from Rajasthan. May I request Shri Nalini Atul, District Collector, Koppal, to please come up to take this award. Shri Nalini Atul. Up next, may I request Shri Vijay Mahantesh, District Collector Haveri, to please come up and collect the award. Shri Vijay Mahantesh, District Collector Haveri. And from Hanumangarh, can I please request Shri Kanaramji, District Collector, to come up on stage. Congratulations to all the winners in these categories, and also thank you so much, Sri Sanjeev ji. Request you to please take your seats. Now let's move to the final and big achievement by the state governments, and this one is for overall performance ranking, the top rank states. Requesting once again our Secretary Agriculture to please come up, Mr. Devesh Chaturvedi, to do the honors. And the second award rank goes to Chhattisgarh. May I request Shri B.K. Mishra ji, Joint Director Agriculture, and Shri Neeraj Kumar Shaha, Joint Director Horticulture, to please come on stage and collect the award. This one is for Chhattisgarh. And with that, we told you that this was a big and a final category. With immense excitement, we reach the first rank in this, and the first award goes to Karnataka. May I request Srimati Shobha HB, Joint Director Agriculture, and Srimati Shobha Patil, Assistant Director Agriculture, to please come on stage and collect this award proudly. This is the first award in this category, the first rank. And with that, we move to a very special category. These are, in fact, very special awards for recognizing significant contribution of senior government officials associated with the PMFBY. First up, we will welcome this winner with applause. The applause will reach them because they are not here. And we speak of none other than Dr. Om Prakash, former Commissioner of Agriculture, Rajasthan, who in his tenure achieved the impressive milestone of conducting more than 90% of the online crop cutting experiments using CCE Agri app, ensuring greater accuracy and transparency. Come on, let's send some love with an ongoing applause. And with that, with immense excitement, we call Shri Ritesh Chauhan, former CEO, PMFBY, who in his tenure, Shri Chauhan relentlessly worked on launching and rolling out technological initiatives like Yes Tech, WINS, Cropic. He also further envisioned and accomplished digitalization of whole crop insurance ecosystems through various interventions like DigiClaim, ADAP, KRPH, Sarthi, and of course, many, many more. Thank you. And also a huge round of applause to our presenters for encouraging all our winners so much. Thank you so much. With that, we now come to a very thought-provoking session. And the topic is Way Forward for Financial Resilience in Agriculture and Rural Sector Through Insurance, realizing the vision that we spoke about when we had our opening session, which was Insurance for All by 2047. We have the wonderful Srimati Kamna Sharma to moderate this session, to bring the best out of the panelists. She has been playing a crucial role in formulating and implementing policies related to crop insurance and cooperative societies aiming to enhance financial accessibility to farmers. I leave you in the very able hands of our moderator, Kamna ma'am, to bring the best out of the panel and put up for some very thought-provoking session out there. Over to you, ma'am.
I would like to have my slides, please. So good afternoon, everyone. From the morning, we have been talking about Vision 2047, that's insurance for all. I think that's a very ambitious target, a vision, which would require all of us to come together and form a roadmap and work upon it as quickly as we can. So without wasting any time, I would like to call upon the esteemed panelists for this panel discussion. We have Dr. Ashish Kumar Bhutani. He is joining online. He was supposed to be here, but because of some obligations, he'll be landing today in the evening. He is joining online. Dr. Bhutani, I hope you can hear us, sir. Then I call upon Mr. Ritesh Chauhan, Secretary, Animal Husbandry and former CEO, PMFBY, to please come on stage. I invite Dr. Abhijit Mitra, Animal Husbandry Commissioner, Government of India. Shri Amit Kumar, he's the head SIG, UNDP India. Shri Anand Singhi, he's the Chief Retail and Government Business Strategy, ICICI Lombard. Ms. Priya Kumar, Business Head, Key Relationship, Group, Government Business and Agri, SBI General Insurance Company. And Shri Mangesh Patankar, he's the Regional Head, SEA Munich Re, that's the reinsurer. So I welcome all panelists. Bhutani sir, I hope you can hear us. If you can please connect to Dr. Bhutani. So I hope you can hear us. I'll just start and give a very brief context to this session. This session comprises of all important policymakers and the insurers as well as the reinsurers. We can see the panel. The purpose is to chalk out the roadmap, how to go ahead with this vision of insurance for all by 2047. I'll just make a presentation of 4 or 5 slides where we'll just get to know that where does India stand compared to the global business scenario in life insurance as well as general insurance. This is just a general, I would say, why insurance is needed. It's a protection against perils, unforeseen events. So it's very important that we realize the importance of insurance in our lives as well as for the entire country. Now this is the position. We can see that this is a comparison of life insurance penetration and non-life insurance penetration in India as well as world. Sorry, I missed one panelist, Dr. C.S. Murthy. I would like to call Dr. C.S. Murthy on stage, please. So we can see that if we see life insurance penetration, India is very close to the global average. We can see that the global average is around 2.8% in life insurance. In India it's 2.8% and globally it is 2.9%. So if we compare the life insurance business and general insurance business, we are almost close to the global average. But if we see the non-life insurance penetration, India stands at 1% and global average is around 4.2%. So it's very important for us to work on the general insurance business if we intend to provide insurance for all by 2047. So now coming to the rural insurance, as we talk about crop insurance, we talk about livestock insurance. So it is very important to know that where do we stand in the rural scenario. This is the percentage that we can see when we talk about rural India. Property insurance is around 3%, health and accident is around 14%, motor is around 21%, and crop, fisheries, and livestock is around 62%. So, but let's see the insurance protection gap. If we talk about crop insurance, the insurance protection gap in India is around 72%, which means that if we compare the national level scenario, we cover roughly around 28%. So this 72% of crop insurance protection gap is to be bridged, and the other rural insurance products like livestock are also required to be worked upon. So I'll straight away go to my panelists. I'll start with Dr. Ashish Bhutani. Sir, can you hear us?
Yes, I can. Good morning, everybody.
Yes, sir. Sir, welcome to this panel discussion. And sir, you have been the former CEO of PMFBY. You also head the Ministry of Cooperation now. And you know the ins and outs of the general insurance sector as well as crop insurance. So would like to know from you, so that since we are intending to have insurance for all by 2047, how can public and private partnerships be leveraged to expand the region affordability of rural insurance products? So we would like to hear you.
Good morning, everybody. Actually, good afternoon, everybody, and my fellow panelists, and Kamna, and all those who are from states present in the audience. Now, all of us are aware that it's very difficult to reach the rural masses. In fact, the crop insurance has found a via media to reach the masses through I would say, a group insurance or a village level insurance, area level insurance. We could not reach every household because the administrative costs are very, very high. In spite of the best of efforts to broad-based insurance, we have, I would say, hit a stumbling block at 30-35%. We have been unable to go beyond that, primarily because of ignorance, and we are unable to reach the masses and explain the products to them, the benefits of such products, and it happening on the ground. Now, this is something which we have as a challenge for all of us. And if you look at insurances in the other sector, they are much less than crop insurance. Now, there's huge government support coming in through subsidies, etc., as well as IEC activities being done by the ministry to reach the grassroots level, I would say, masses. If we look now, the only way to reach the masses is to tap the existing, I would say, systems on the ground. One of them could be the self-help group linkage, or the systems of nearly 14 crore self-help group members federated through associations at the state level, the district level, and the village level. There is a whole chain of bank sakhis and Pashu and the Krishi sakhis who have been, I would say, onboarded on that through that program. They could be a source of a point of contact through training, through capacity building. This could be one way. If you look at the agriculture credit structures in the cooperative sector, there are more than 100,000 packs in the country, primary agricultural credit societies. Now, they are the lowest level of the third tier of the rural banking structure. Nearly 13 crore members are there in these 100,000 societies. Now, these could easily be tapped through the packs. Packs, all of us are aware, are already doing insurance for us. For crop insurance, primarily the loaning happens to farmers through packs only. So this could be a very strong and a good via media of approaching the last mile through a structured system existing in the country for the last 100 years. So we could find a way, or I could devise a way of reaching these people through packs, which is a place where most of our farmers and those who are engaged in agriculture and allied activities do visit for a variety of purposes, primarily credit and input services. So this could be another way of reaching the last mile, bridging the last mile gap, etc. Now, IRDA itself has launched a number of products, including Bima Sugam, Bima Vistar, and Bima Vahaks, a way of reaching the last mile, bridging the last mile connectivity. This could also be broad-based and expanded. This could be one way of reaching the last, covering the last mile. We have embraced technology through WINDS and a variety of other, I would say, initiatives of the Ministry for crop insurance. Could we use similar methodologies and technologies, partner with the Indian government space agencies through a variety of, I would say, partners, be it startups or private sector, our partners, who could partner with such agencies and bring in products which could have an easy payout, easy, I would say, assessment and payouts for weather, through weather risk, weather data, as well as yield data. We started doing that in crop insurance, but could we have specific products only based on that? So at least we can broad base the reach of the various products. Bundle products through agri input supply chains. Now we have a host of systems which are existing in the villages. It could be the IFCO and the CRIPCO point of sale for fertilizer. More than nearly 100,000 such points of sale exist in the country. It could be through the dairy societies. Gujarat is a prime example. 36 lakh members, 18,000 societies. Every person has been linked on a system through the Amul network. Would they be contacted? Could we tap this network, which is a very robust network for reaching the last mile? I would say we'll have to have state-specific approaches to address this issue of reaching the last mile through public-private partnership. A variety of models can be developed and thought through if we can just sit down and rack up brains. I would say interesting times ahead for all of us if we can just get some innovative models on the ground, broad base it, ensure that it is linked to the government system and reach the last mile. I would say we can make a difference in the approach and the reach of various insurance products in the country.
So thank you, sir. I think you have covered all the 3 questions. So would request you to be in the panel till we finish, sir. So now we move on to Shri Ritesh Chauhan. So you have been the former CEO again. You have seen the nuances of this sector, and now you head the animal husbandry department in the state. So when we talk about rural insurance, you can see that we are globally behind in the general insurance sector. How can the entire rural insurance sector can be synergized, and what efforts we are required to make to cover all the rural insurance products? So I would like to hear from you.
Thank you, Kamna. I think what we have been able to achieve in PMFBY, especially with the use of technology, it was only when under the leadership of Dr. Bhutani that we used National Crop Insurance Portal, that the scale could be realized and with a lot of transparency on the ground. So my first and foremost intervention, I think, for the animal husbandry sector would be to go in for a comprehensive portal where the technology becomes the enabler for us to enroll en masse. As most of us are aware here that National Crop Insurance Portal in the last season probably handled 50 lakh transactions in a single day, 24-hour period, which is like the scale is huge. And it has reduced the possibility of fraud or various risks associated with insurance and helped in bringing down the premiums. Now, for livestock, fisheries and horticulture sector, I think what is best done is that digital platforms like NCIP or capabilities that have been built in NCIP could be leveraged. Along with what Dr. Bhutani said, we could use the existing physical structures in terms of PACs or other networks like IFCO, CRIPCO, or even say ration shops that exist, probably could become another layer to bring in insurance for these sectors. Now, as far as the coverage gap that you highlighted, I will also be presenting shortly. There is an even bigger coverage gap, I think, in the animal husbandry sector, which needs to be addressed. Because here, although we have covered 40% of GCA and 4 crore farmers, I think in the animal husbandry sector, there is miles to go. And I'm really enthused by the presence of Dr. Mitra here with me. And we've been discussing this threadbare on how to scale up livestock insurance. So more on that later during my presentation, but I think the key is to bring in more and more technology interventions and scale it up really quickly, really fast. Thank you.
So should we try for leveraging the already existing platforms, because there's already a database of farmers, the Ministry of Agriculture has AgriStack, and then there's a PMFBY database also, so that we can move a bit quickly. So can the two ministries synergize, sir?
I think there is, as Secretary Sir in the morning very succinctly put, that there is possibility of not only synergizing one database, but multiple databases in one go. So we have a KCC ecosystem, which is now under Krishi Rin portal. We have a full PMFBY ecosystem, which consists of all the farmers that are getting crop insurance. And we have AgriStack. So on top of that, I would like to point out that Animal Husbandry Department also has a very robust Bharat Pashudhan ecosystem, NDLM. So all these 4 databases, if they could integrate and talk to each other, especially with the onboarding of banks and CSCs as enrollment channels, the enrollment in livestock insurance sector could really take off very quickly. So my request to Dr. Mitra will be that if that integration could be considered, it could really transform livestock insurance sector.
So since a number of insurers and reinsurers are sitting here, so what would be your expectations from the insurers and reinsurers, given that we have that vision of insurance for all by 2047, and livestock, I think, has a big challenge. We need to move with I would say, a faster pace. So what's your take on that, sir?
So one of the things that I realized was that unlike in crop insurance ecosystem, which has been very active and thriving and has been studied by, say, PK Mishra committee and other committees over the period of time, the livestock insurance system, ecosystem has not really picked up, so to speak. Livestock insurance currently is also a sub-scheme under the NLM guidelines, National Livestock Mission. So one of the expectations also from the private sector is that the product mix is also not very varied. So while there are now, certain companies coming up with parametric products for even day-to-day activities, for day-to-day functioning, say for a gig worker or for even a Karyana shop owner, कि उसके लिए अगर if the temperature sort of rises above this level, we will trigger a payout. These kind of product, very innovative products, small ticket, totally digital products have been innovated by insurance companies for this ecosystem. I think they are completely missing the bus in terms of how do we, tap livestock and animal husbandry and fishery sectors by giving good parametric products. Having said that, I will also put a cliche that currently it is the private sector that serves the livestock needs much more than what the government or public sector schemes does. So I think we need to work together, and whatever innovation they have done in the private sector space could also become part of some kind of a thinking in the public space, and a comprehensive scheme could really help in this regard.
Thank you, sir. So I move on to our next panelist, Dr. Abhijit Mitra. Sir, you are the Animal Husbandry Commissioner. I think what Hitesh sir said, now a lot of expectations from the insurers, but would like to know from you that what's the take-up of the Department of Animal Husbandry, Government of India, if we need to scale up livestock insurance across the country, sir?
Yeah, first of all, thanks to Secretary Agriculture Devesji to put the things in the perspective in his lecture, and then of course by Mr. Hitesh. The livestock sector, the fallacy is that it contributes 30% of the total agriculture GDP. But if you see the performance in terms of credit linkage insurance is so miserably poor. I remember December 2023, we had a parliamentary subcommittee meeting, and I was defending it. And that time, the insurance coverage was 0.9%. 0.9%. And that triggered a factor, and we reviewed it. And what we did Like the premium, beneficiary premium coverage was 20 to 50%. We reduced it to 15%. So 85% of the premium now given by the state or central government. Then there was a other minor revision about the how many cattle can be covered, how many, I'm not going to the scheme details, but just I want to tell you the details, just the outcome. Last financial year, the coverage rose to 2.1%. But it is not a big data. But from 9% to 2.2%, and the total number of animal covered last 3 financial years is covered in this financial year. So what I'm trying to tell is, gap is huge, but little bit of tweaking, it can give a huge impact in the system. Then I'll quickly touch upon another issue. Unlike crop insurance, the livestock insurance product which is available mostly in the market, it is more like a term insurance. To get the benefit of the insurance, the animal has to die. So farmers are not getting that much of interest and they're kind of little bit of cautious, though the claim settlement ratio is more than 85%. That is a good thing. So there is a requirement of innovation, of course technological innovation, policy innovation, and it could be a bundle insurance, so that if my animal is giving less milk, or say I have done an artificial insemination, but animal is not conceived. I just put a one minute while put a one data. Per day animal rearing cost is approximately 35 to 50 rupees. See, my animal means one heat, one insemination, so 30 days become 1500 rupees. It is a loss to me. So there are so many other area where can we work, and it can be further innovation. And of course, we are also working with the team which were involved with your PF, the Pradhan Mantri Yojana, coming big with a insurance portal, which would be linked to the our PM, that Pradhan Mantri insurance portal and all that.
So thank you. So just a quick question. Can we expect a full-fledged scheme on livestock insurance from?
We are already up for it. We are already up for it. It is 16th financial, I think, next financial things will come. We are already preparing, but there would be a requirement of understanding the livestock insurance little differently. It need to be heat index, parametric we are talking. We are talking for, say, if I go to a hospital, if I incur some cost, that is covered by insurance.
Yes.
So you have to you have to bring in the human health component with the animal health component, rather than thinking from a crop point of view. So insurance product would be little bit different and little bit tweaking. And I'll just give another quick references. Animal health is also linked with the human health in terms of zoonosis. Is a one health. So when you take care of the best animal husbandry practices, credit linkage, insurance coverage, you expect better veterinary animal health outcome, which not only protects the society as a whole from another pandemic, but also it gives a better income to the farmers.
Thank you, Dr. Mitra. Now I move on to Dr. C.S. Murthy. Sir, you have been associated with PMFBY and you have been a part of the major technological advancements. So given this vision of 2047, how do you see the technology playing its role? What should be our approach towards adoption of technology, not only for crop insurance, but also for livestock insurance and other rural products?
Yeah. First of all, thank you for this opportunity, and I'm very much pleased to talk about this very favorite subject for me, the insurance using geospatial technologies. The first question is that what are those emerging technologies to increase to improve the risk assessment as well as the transparency in the settlement of claims? So obviously it is remote sensing technology, either it is satellite remote sensing or drone-based remote sensing. This is the first and the foremost one. And this technology enables us to make a very, very quick, comprehensive and a very objective survey of croplands. The second important thing is that smartphones. And smartphones have really created a revolution in agriculture. So near real time, almost real time surveillance of crops, providing information on the crops, crop photographs, attribute information. And I think this has become a revolutionary change. The third important thing is that the weather stations, because weather data is very, very crucial for agriculture monitoring. It's a very important input. So the weather station technologies, and these are the three important things. And these three, they only produce data. They are data centric in nature. But some technologies are required to analyze this data, generate the information. This is where the machine learning or deep learning techniques are now becoming popular, and they are proven also. So these technologies, for example, if you take remote sensing, the progression in remote sensing technology is very, very fast. Thanks to the Copernicus program of European Space Agency initiated in 2016. And I put before the audience here, the data from Copernicus is assured up to 2030. They are going to come up with a new set of satellites from Copernicus, that is Sentinel LSTM, Land Surface Temperature Monitoring. This temperature data with 26 spectral channels, LSTM program from 2030, it is going to open up huge opportunities either for livestock, fisheries and everything. They are going to be game changer. And Landsat Next, already America has announced it. This Landsat Next is a unique combination of spectral bands. So these are the global scenario. Coming to the Indian companies, Indian space startup, Pixel has launched recently some 2-3 constellation of satellites. It is producing good quality data. And I take this opportunity to apprise the audience here. I would like to draw the attention of Secretary Sir here. Tata Sat, Tata Advanced Systems Limited. They launched in 2024 a satellite which is producing the data of 50 centimeter spatial resolution. I happen to be in their technical committees after my superannuation, and the data quality is very good, and it is better than the contemporary data sets that are available in India. And this is going to open up numerous opportunities. And this kind of data, 50 centimeter super resolution data, for a given area of 7.5 kilometer by 40 kilometers, they can give you almost every 2 days pass. So you can imagine the data, the kind of data. So this data opens up a lot of opportunities on the crops and crop kind of things. So these things will make you improve the risk assessment. The second important, third generation geostationary satellites are producing weather data at 2 kilometer. 6 weather parameters NASA is producing at 2 kilometer by 2 kilometer grid. Not only the rainfall, temperature, humidity profiles, everything. So these parameters, they give a lot of opportunity to develop parametric insurance products. So now all this data will improve the crop risk assessment, but that is not enough. You require a good digital platform. NCIP is an example for digital platform. Now we have to integrate this digital platform with the geospatial platform so that your crop risk assessment is improved and timely settlement of claims also will happen. So interoperability between the digital platform and geospatial platform is the one. This is answer to my first question. Can I go ahead with the second one also?
Yes, sure.
So how these technologies are able to improve the scenario of crop insurance? So these technologies will permit digitalization and the datafication of crop insurance system. Whole ecosystem of crop insurance has to be done. We have to do the digitalization and datafication. That means convert the existing data into digital platform, and the process of crop insurance starting from enrollment and then coverage discrepancies and everything till the claim settlements. This is called a datafication of the process. So that means the manual systems, the dependency is gradually reduced, and the data-driven systems we have to develop. So this is the opportunity. If we are able, these are all doable things. What I am saying, these are all the practical things. If we can do this by 2047 or even much before that, it's possible to achieve full coverage. I make a small thing. In 2018 or 2019, ministry itself, they say from 2022 onwards, we want to switch over from CCE system to technology-based systems. At the time, I was in NRSC. Bhutani Sahab was the addition secretary, joint secretary. We proved this Bengal model in 2020 during COVID period. I told Bhutani Sahab, sir, you are given the target to 2022. Now look at 2020 itself. We replaced the CCE system with the technology system. So the Bengal crop insurance model is a successful model, and there is scope for improving that models, and similar models we can bring into the system. So probably this is the answer to my second question. I think third.
Dr. Murthy, quickly to third. I have just 18 minutes left for the panelists.
Fine. So the third one, you want to answer me?
Yes, quickly.
So, yeah. This is basically how do the farmers or other people, they know about these technology solutions and accessibility. Even before farmers, above farmers, the village agriculture officers, block development officers, they are also not knowing anything about these technologies. So this is a big gap area today. The perception and trust, we can build only through dissemination of information. So probably when we are doing smart sampling in Odisha, and also when we are doing the Bengal project, we got connected with all the district level officers or block development officers. We informed them about the technology. So in the same way today, I think we have to go for outreach of these technology products. Even to the farmers, we should expose some of these geospatial products to their, to these things. Last point is that there are, recently I came across 2 success stories from states. They are still in the evolving stage. One is Kerala Katiyar project or something is there. There is building a good digital platform. So through this platform, they are connected with the farmers. Probably you can use this to disseminate and information to the farmers. Another is that recently Andhra Pradesh has started APIMS, AP Agriculture Monitoring System. So this is another good digital platform. So through these platforms, we can enhance the outreach to the farmers and do the things. That's all. Thank you very much. Thanks for your patience.
Thank you, Dr. Murthy. Now coming to Ms. Priya Kumar. Madam, you are heading an important position in one of the leading insurance companies. So since getting to the vision of 2047, a big responsibility lies on the insurance companies. So how can the insurance companies increase penetration for covering all rural insurance products? I just want to listen from the insurer's point of view.
Thank you so much for the opportunity. So the company I represent out here is SBI. As we all know that by the DNA of the bank, 70% of our company, our shareholding is SBI. And coming from that lineage, we carry that responsibility already, which the regulator has imparted on us now. And when you look at the spread of SBI per se, the branches, about 65% of our branches are in rural areas. As we look at our 14-year journey, we're very happy to already report that around 51% of our policy penetration is coming out from rural branches, which is a very good step. And carrying that responsibility also on us, when we had 2 states which were given out to us as leaders to kind of anchor these states ahead, the states of Haryana as well as Meghalaya. In the entire ecosystem, I would say that Meghalaya is one state wherein rightfully the regulator has entrusted that state to us. We are the #1 insurer in the state of Meghalaya. As well as on the retail penetration side, we have been able to achieve at least 14% penetration on the health and PA products. On the SME side, through our RRB network, through the Meghalaya Rural Bank, we've also been able to pick up at least about 40% of their current account customers as our customers. On the bank framework, now SBI per se is very engraved with every government project that is rolled out by way of beneficiary schemes or by way of any subsidized schemes. So there are a couple of innovative schemes that SBI has brought out, one being for women entrepreneurs on the SME side. That is the Asmita Women Entrepreneur Scheme. There also we're very happy to share with the audience out here that we've been able to design an exclusive product. Now that loan starts with a 10 lakh coverage and goes up to a 5 crore coverage for women entrepreneurs. So we've been able to design exclusive products which take care of their risk associated with their business as well as their health risks. This is a very important part, and here I would like to emphasize that women actually multitask. So they handle the home, they handle the family, they handle their own body cycle, which really goes through tremendous ups and downs. And it's very important that that emotional cycle of a woman is taken care by way of relevant products. I was also sharing with sir yesterday that we've also started tracking by way of some parametric triggers on how those climatic changes have also started affecting women, and why do they get hospitalized more? How do that starts impacting, claims on the health side? So these are a couple of initiatives that I think we've already started doing. Coming back to insurance penetration, yes, we are extremely committed. In fact, we are going beyond the scope of the state insurance plans that have been allocated to us. We're trying to improve our penetration at the grassroots level in many of the districts where we are already working on Pradhan Mantri Fasal Bima Yojana. And we have been successful in covering some of the farmers as well through our enrollment app.
So thank you, Priyaji. Since we are running short of time, what we expect that insurers will take equal interest for livestock insurance as well, the way they have been involved with PMFBY. So that's what we expect from the insurers. So quickly coming to Mr. Anand Singhi. So Mr. Singhi, now again the insurers' point of view, what should be the short-term and long-term initiatives for the insurance companies if we need to reach insurance for all by 2047?
Absolutely. Thank you, Kamnaji, and I'll try to keep it as short as possible in interest of time. But just to put in a construct to the larger set of things, if you look across India we have, and the rural economy in India, the rural economy in India would contribute close to 18% of our GDP. And we break down this number into some critical set of elements. There are people and then there are assets, right? So when we look across from assets perspective, we see the farmland, and we see that of the larger 20 million plus hectare of 20 crore hectare land which is there, only 30% of that is insured. If we look across at the other line of assets, which is typically their cars, their two-wheelers, the tractors, the farm equipments, etc. Again, as a country as a whole, we have around about 25 odd crore vehicles plying in the country. Of that, again, the insurance, the rural market would have 30-35%. And even in that 30-35%, almost close to 50% of the vehicles will not be insured. Right? When we come across from a people perspective, and secretaries are categorically, beautifully kind of really enumerated this in the morning, that while the GDP contribution is 18%, but the workforce is almost close to 60-65%. Now, if you look across at this block of 60-65%, again, only 1/3 of them are covered for their personal set of health insurance. In summary, if we look across about people and assets in this set of market, and when we look across at events which could lead to settlement of claims, we realize the difference between the economic loss and insured loss is significant. Only about 10-15% of economic loss gets covered by insurance. And that's the direction which I think all of us will have to walk together to see that how can we make India by 2047 an economy which is insurance first rather than subsidy first. Now, how do we do that, right? What are the things which are required to be done specifically in the rural domain? First and foremost, what we feel is that awareness. I think there's a significant lack of awareness. While we still are there, even in the crop insurance scheme, we realize that the non-loaning participation is significantly low. So how do we really fundamentally create massive amount of awareness? Aside with awareness, how do we really build capacity and ensure that there are insurers which are allocating capital to the larger cause. So we have to kind of put in a framework where there is incentive for creating that capacity and allocating that capital. Once if we would have kind of solved for those macro set of factors, then I think at the transaction level, a few critical things which will be required. First and foremost of that would be solutions, right? What are the relevant set of solutions we should bring into the market? Our genuine belief is that some of the base covers, right, should be universalized for the entire economy. We have to figure out what kind of participation can be made in the public-private partnership. But if you're able to universify the base covers which are required for these assets as well as people, I think we will start as a first set of step out there. The moment we would have done that, then from a solution perspective, we need to create products which are significantly on modular chases. Now, what modular chases would mean that once the base cover is there already in different cohorts, whether it's crop insurance, motor, cattle, etc., right? What are the top-ups which you need to create, the contextual top-ups depending on the audience, which can be significantly used across. And there should be incentive for people and incentive for companies which participate in this construct. We also had fellow members kind of talk about how technology can play a critical role. I think we need to significantly leverage on the India data stack and the India tech stack and see how we can integrate these solutions together. And I think that's all what we need to. We just need to be focused on the agenda, put in a clear framework, have the KPIs defined, and then see that we kind of really stick to that and monitor that in a very, very comprehensive manner. Thank you.
Thank you, Mr. Singhi. Coming to the reinsurer's perspective now, Mr. Mangesh, now every time when we go to the insurers, talk to the insurers, they say that there's hardening of reinsurance market, there's lack of capacity, lack of support. So we also expect a support from the reinsurers. What is your take or view if we are moving ahead with the vision of 2047?
Thank you, Kamna ma'am, and thanks to the Agri Ministry for allowing me to participate here and share my thoughts. First of all, congratulations. We have crossed the 40 million farmer unit. In a way, that's a great achievement. And I believe with this speed, by 2030 perhaps, we would have perhaps insurance for all as far as crop insurance is concerned. The question is whether we are satisfied with that or we should look at adequacy of insurance. The real question is whether we have adequate insurance for all. And there lies the crux. From policy making perspective, I believe at the moment we have a bit of a dichotomy. We have very forward-looking initiatives like Yes Tech and Wind, where we are talking about tapping a lot of data. We are talking about reducing the manual labor work for CCs and all. But on the other hand, I also see a bit of a backward step where the states and the central government has started sharing a bit of a claim subsidy burden, which used to happen pre-PMFBY, right? In PMFBY, the whole motive was to transfer most of the risk to the insurance sector, to the financial sector. I believe at the moment what is happening is perhaps the rates are going down, particularly in SSM, and that was also pointed out in one of the earlier sessions by IRDA. I believe because the claim ratios are remaining fairly sort of stable, I believe that the claims per farmer are going down, and that's very dangerous. I believe that means farmers are not adequately covered. I strongly encourage that we tap the existing capital markets more, existing financial sector more, let insurers play the role for which they are built, that is risk transfer. Let the governments decide the framework in a bit of a different fashion. But I would strongly encourage that we should have more encouragement on insurers getting the transfer of the risk rather than the states and the central government taking care of that, because that looks like more like a backward step. As far as the livestock insurance and other products are concerned, yes, I think insurers as well as reinsurers are fairly excited and very glad to see that there is encouragement from the central and state government as well here. Ritesh sir, you mentioned that the parametric products for particularly livestock, whether they could be explored. And here I would say that yes, this has been already done. of course on pilot basis, where we are trying to figure out whether there could be heat index covers for milk productivity in cattle. Also, we are trying to figure out whether we could have temperature-based coverages for poultry sector as well. Let's not forget about poultry. I think when it comes to livestock, I think we usually focus only on cattle and dairy. I think let's not forget about poultry as well. Beyond this, I think as far as other topics are concerned, the residual risks are concerned. Let's say if there is a drought in a big state like Maharashtra, Maharashtra state usually puts out fodder camps. There are cases where the Maharashtra government had to actually send water by railways. There are lot of expenditures incurred because of a big drought. And I think there is a scope to build a parametric cover directly for the state governments for all those residual risks beyond covering the individual farmers. I would strongly encourage that we should explore that. We have done something similar with Nagaland government very lately, and I think there is obviously a synergy to sort of go beyond this. Thank you very much.
Thank you, Mangesh. And I think since I'm just left with 3 minutes, so coming to Amit ji, you represent the Development Financial Institutions, UNDP. Now, UNDP has been talking a lot about risk facilities and I think a kind of a global assistance for crop insurance programs. So what we can expect from the Development Financial Institutions working in India, helping us to go ahead with insurance, whether it's crop insurance or whether it's livestock.
Thank you, Kamna ji. First of all, let me take the opportunity to sincerely, on behalf of UNDP, thank to the ministry for the opportunity of the last, in this whole PMFBY journey, we have been kind of trying to provide our support. So coming from a multilateral and development financial institutions, I'm looking at the clock, and if I have to give a short answer, I would say that everything what we have been discussing so far since morning, that what need to be done to really create an ecosystem which enables adequate and appropriate insurance or risk management coverage. That's what not only UNDP, but the other multilateral and financials as well as development institutions are trying to do in different part of the world. Specific focus is definitely more on lower and middle income countries. Few quick points. Basically, I think we have been talking a lot from the perspective of insurance, risk management, but I think one point that we, coming more from a UNDP perspective, risk management and insurance is also one of the very critical element if we are looking at the SDG 2030 agenda. There is 5 or 6 SDG, 1, 3, 5, 8 and 13. Though in SDG we may not find the mention of insurance, but when we try to see it more from the resilience and other perspective, it directly contributes. We also have talked about that poor and marginalized are the most worst affected to any shock, whether it is climate shock, whether it is disaster shocks. And what we have been talking so far since morning, that if we have to move towards, in India's context, let's say insurance for all by 2047 or in any other country context, what we need to do is we need to have a holistic approach which takes into concern of all the 3 key stakeholders, which is customer, your insurer, and the distributors. And some of the key elements is about, I think even the last speaker talked about, whether we have an enabling policy, whether we have the data sets, are we able to invest in new product development, and are we looking into kind of, let's say, creating a business case when you're talking specifically for inclusive insurance and not just the social obligations. So in this context, if even let's say this is in today's geopolitical time, it is not the best time to talk about multilateral agreements, but even if you remember the 2015 Paris Climate Agreement, that puts a very strong focus on kind of pooling of financial resources for these kind of things. So what are we doing, specifically from UNDP, keeping in view the time, I'm leaving the other multilateral institutions out. So UNDP takes a system approach, working on this whole inclusive insurance agenda. We have been, this whole insurance and risk finance facility that has been set up, which is kind of a working in 30+ countries. Most of them are in lower middle income countries. The partnership with insurer, reinsurer with the Insurance Development Forum and Government of Germany and with other supports. So our main supports broadly, and then I'll take a minute just to talk about India a thing also, has been first is working with the governments on trying to support them creating a right enabling policy environment, building on the capacity development of different ecosystem actors, bringing fund and finances to kind of pilot it out. Of course, as a multilateral development institutions, we don't have the wherewithal to kind of do the national implementation, but to pilot, to test, and with extensive support from insurance company and reinsurer, to enable them to try out different innovative products and then see that one, to demo that into the field and test it out. In India's context, there are three key areas of work that we have been doing. One has been disaster risk financing, where together with national NDMA and SDMA, we are working and supporting on the whole NatCat and many of the other instruments of, and elements of support goes from policy, research, data, and kind of things. Because many country is not as fortunate or as in a good positions like in India. In India, we have all the data and other things. So all those kind of support. Second piece is, of course, the work that we have been doing with the Ministry on crop insurance. And specifically in that crop insurance, the recent multi-country program, which is Financial Resilient Agriculture, which is a 5-country program, and where we are trying to bring in the kind of complementarity to the work which Ministry is already leading in terms of trying to bring in the new research, trying to support into the new product development, and those kind of things. And third is definitely the discussions which Dr. Mitra talked about. We are just initiating that discussion also. That's how we can really take the learnings, not only from PMFBY to the next door in livestock insurance, but also some of the global learnings. Other way, it's taking India's learning, and I think we talked about community of practice launch last year. So multiple countries, almost 15 or 20, are very much interested in learning from the experience and expertise of India. So facilitating that knowledge transfer, positioning India's whole global expertise is something that's other piece of work. So in such a short time, that's what I can tell you.
Wanted to make a quick point. Insurance for All 2047, while technology is one piece, and this I would like to posit to the sector as a whole. I was just quickly researching what has been the impact of a campaign like Mutual Fund Sahi Hai. Now in the last 10 years, mutual fund asset under management has grown from 10 lakh crores to 64 lakh crores, 6x. Folios 4 crore to 22 crores, 5x, and SIP has gone 9x. So I think probably from the IRDA regulator perspective and also the insurance sector here, I think we need a body like PMFBY or something constituted, which then goes in for a long-term, say 5 or 10-year campaign on why Bima Sahi Hai. Some kind of a thing needs to come in where a continuous campaign needs to happen on broad platforms to bring in this awareness, and then obviously then technology takes over while we enroll these people.
Thank you, sir, and we've also come to an end to this session because we just exceeded 5 minutes. I thank all the panelists for their valuable views. I think we heard the insurers, the reinsurers, the policy maker, and yes, livestock insurance, which sir has just announced that yes, they intend to have a full-fledged scheme. So we can, sir, by next conference, I think we can expect lots from you. And Dr. Murthy, thank you for giving your insights on the usage of technology, because I think that's something which can be a game changer. And I especially thank to Dr. Ashish Bhutani, who joined us on the VC, and we expect him to land here by night today. Thank you. I thank everyone.
And a very big thank you to our moderator, Kamna ma'am. Thank you so much for that wonderful session that you brought together and really brought out the rich, wonderful experience of our panelists so beautifully and left us with a lot of food for thought. On that note, just as they create some memories and stand for a picture-perfect moment here on stage, I will quickly introduce the next session for you. We now step into an idea sharing session which is for expanding the livestock insurance and leveraging the PMFBY digital platform for ensuring farming households. And we have none other than just the perfect person for this session, Shri Ritesh Chauhanji. Request you to not step down stage because now it's going to be over to you, our former CEO, PMFBY, and also now Secretary, Animal Husbandry, Government of Himachal Pradesh, as he takes over the dais. A quick little about Shri Ritesh Chauhanji. He is a 2005 batch IAS officer from the Himachal Pradesh cadre. He is presently serving as the Secretary of the Department of Animal Husbandry, Government of Himachal Pradesh, and prior to this, he held significant role as the CEO of the PMFBY and Joint Secretary in the Department of Agriculture and Farmers Welfare, Government of India. So we extend a very warm welcome to Shri Ritesh Chauhanji as he takes over the dais and what I think I can call a very energized audience here. Over to you, sir.
Thank you. I'll try to be as brief as possible. I'm speaking mostly on the possibility of a comparison between livestock insurance and crop insurance. While I agree with Dr. Mitra, these are two different products. Let's try and find out what are the things that could be done in this space. So these are my discussion points. I'll briefly touch on global livestock highlights with regional comparisons. Livestock insurance versus crop insurance in India, challenges in livestock insurance, and the way ahead. All right, so this data shows that in cattle population, we are almost 1/3 of the world. While Brazil is a distant second at 21, China at 11, United States also 9%. The rest of the world after 6 is just 13. So these basically large 6 countries have almost 90% of the population. India is the largest with 1/3, accounting on 1/4 of the milk production. Contribution to GDP, in India it's 25%, agriculture GDP. Brazil 20, China 25, US 20. Insurance market sadly represents a totally different picture. Only 167 million USD in India. Brazil is 3.2 billion. Now you remember they are about 20% of the total population in the world, but the differential is huge. China 441 million and US is about a billion maybe. So insurance penetration itself is very, very low in India. So 2% only. And it's okay high in Brazil and United States. China also is 10 to 15%. The channels used, you can read. So this is despite a very high government support. The support that we give, I think, is the highest amongst all the countries listed. So 85%. That means that the farmer himself has to pay only 15% of the premium. Rest 85% is shared between the center and the state. Maturity is low, obviously, there are a lot of challenges. Brazil, you can see that it had 3.2 billion insurance, strong insurance market. Their support is not very high. So government support is about 20 to 40%, which is quite low. China is moderate to high depending on various regions and various other factors. US is also low to moderate. Now, let's compare how livestock insurance currently works in India vis-a-vis how crop insurance currently works in India. Disclaimer, totally different products, totally different sectors, but yes, we could have some similarities. So livestock insurance journey in India has been, has started from 1988 probably when GIC launched a very small pilot. In 2005, it was graduated into a National Livestock Insurance Scheme, NLIS. And then thereafter, it went to National Livestock Mission in 2014. Also Rashtriya Krishi Vikas Yojana. So private insurers have been participating in this journey since 2014, almost the time when it started in the crop insurance sector also. Present policy obviously is towards universal health care and universal welfare, as insurance has a core component, but insurance currently sits as a sub-scheme within the National Livestock Mission. Crop insurance journey is a bit longer. 1972 we started, and there have been various iterations of various schemes that have taken place. Fortunately, there was a lot of studies also done and a lot of committees that went into the crop insurance ecosystem, and therefore it got progressively defined and refined. And one of the pivotal things that happened in 2014 was Shri P.K. Mishra committee report, which actually laid down the roadmap of how crop insurance should function. So there was a very nice report, and I still consider it as the Bible of how crop insurance should go. And so one would refer it before preparing any proposal for the ministry. Now since 2016, PMFBY has done really well, and I think Muktanand covered all of these points when he brought that out. Now, how do these two ecosystems compare? In coverage, livestock insurance has a household level limit, whereas there are no limitations under PMFBY. So livestock insurance is given to a household. The definition of a household is the definition given under MG Narega. And so what happens there is that if within a household, if you have a 10 unit, then there is a limit, a cap which kicks in, and therefore you can't get insurance thereafter. In PMFBY, there is no differentiation. You could actually insure as much as you want. Now, considering the fact that this critical sector is so important to the agriculture sector as a whole, and that so much population depends on it, while it produces only 18% of the GDP, I think these limits could probably be done away with, as we have done in PMFBY. We could give a very universal interpretation. Now, I'm really happy that shortly we'll also be coming up with plantation as part of the crop insurance ecosystem. Now, plantation in itself is a very, very lucrative activity, and yet government is thinking of supporting plantation because that is essential for food security and also diversification of agriculture. So therefore, I think in livestock also this capping should probably be thought of doing away with. Then the premium, the premium in the livestock insurance is the upper limit is fixed. So there is from 4.5 to 11.5 depending upon the region, duration and insurance term. There is a fixation of upper limit. In PMFBY, there is no fixation at all. You could actually, it is tender discovered basis L1. The operational guidelines are also very well defined in PMFBY. In fact, combined with WINDS, YesTech and the original guidelines, I think we have 3 huge booklets running into maybe 400 pages each, which actually bring out each and every aspect of the insurance ecosystem. Whereas under NLM, there are about 4 or 5 pages that cover the whole livestock insurance scheme. So I think one of the key things to do to give confidence to the sector is to come up with comprehensive guidelines covering all aspects. And also the tender conditions have been notified under PMFBY, which the states are free to choose and amend, but mostly the conditions are given. So that needs to happen. Obviously, technology interventions need to happen. This is a very interesting slide. I could Because of my connection in the private sector, I could get all this data collated. Now, what this essentially means is that out of the total livestock insured, under NLM, private sector insures about 2 lakh, whereas non-NLM, they insure about 11 lakh, which is 6x. And public sector, similarly, does 10 lakh and 14 lakh, 1.4x. While gross premium, this differential is huge, 9x and 3.5x. So practically what is happening is that under NLM, the public sector scheme is 1/6 of what the private sector itself is doing. Whereas in the last line, in crop insurance ecosystem, PMFBY is 99% of the total enrollment that happens. Only 1% of crop insurance happens outside of the PMFBY ecosystem. Whether the scheme is too good or we are able to support better, I don't know. Or there is more innovation probably in the livestock sector, I don't know. The reason for this, I don't know, is just pure data in terms of coverage and the premium that has been taken up. So I will plagiarize a few slides from Muktanand's presentation and use them to my advantage. The number of insurance companies on the right, you can, on the left, you can see those that have been highlighted green are the insurance companies that are active under NLM. Now, out of these 20 insurance companies which are active in PMFBY, only about 6 of them are active in NLM. So there is clear differential, and it happens in 20 states. Scale, I think Muktanand has already fixed, but a key thing that I would like to bring about is, I think this has also been covered by him. We have the below bar actually shows the Loni farmers. So about 1.87 crore Loni farmers come through the banking ecosystem through the KCC, which is also an opportunity under NLM. Now, this is the livestock insurance. So against 4 crore, that was PMFBY coverage. Livestock coverage is about 26 lakhs. And mind you, as Dr. Mitra rightly pointed out, this has suddenly taken a jump in the last 1 year. In fact, they've done more insurance than they probably did in the last 4 years. That was what you were mentioning. So all props to you. But obviously, it is still 2% of the total, which needs a correction. Now, when we speak of NCIP, sometimes we end up thinking that it is just a portal. So it's a portal for enrollment. But let's understand NCIP as a comprehensive stack of technologies available which could be used also for livestock insurance. Now, how could you use that? Like a Krishi Rakshak portal and a helpline is already functional helpline where you are getting all the calls. Probably the same helpline could be used for livestock insurance. Aid app is an app where 6 lakh insurance intermediaries are already onboarded, are actually giving enrollment facilities to everyone. This app could be again repurposed and used for livestock insurance. DigiClaim is basically all the companies that release the claims are already onboarded on the portal, and this is tracked through the same mechanism and could be used. Winds obviously is multiple use. It could be used for developing parametric products for use in livestock insurance. Sarathi, as I was talking before, is also diverse retail insurance in the agriculture sector itself. And Cropic obviously could be used for capturing photographs of the livestock while we insure. And this is one of the important slides that of the total insured area, banks constitute or total insured area and applications. So 70% of the applications come through banks. So banks, because they are already enrolled into the NCIP portal, could easily start enrolling for livestock insurance also. So also CSCs. Only 1.2% come through aid and farmers are below 1%. So direct enrollment doesn't happen in insurance space. It is either through banks or through CSCs. And which bank, to enroll the banks, especially the cooperative sector banks, is in itself a very huge task. So probably this capability could also be leveraged. This is the current insurance process, I think, and this is something which I would want to talk about, technology in terms of enrollment to give surety while the claims are being paid out. I think I took a few presentations by startups in agri-tech space which are doing muzzle and microchip technology for surety and protection of fraud in livestock insurance. I'm sure Dr. Mitra is much more aware of it, but yeah, this could be leveraged. Now, what are the challenges? As I said, there are no operational guidelines. There is lack of uniformity in tendering and implementation. There is insurance broker-driven tendering model also I came across as a feedback from the sector. There is limited digital integration. Centralized platform is missing. I think they are already in the process of developing. Probably one way could be that the platform that you develop could also leverage the capabilities of NCIB. Then lengthy documentation, excessive dependence on veterinary doctors, budgetary concerns, obviously delayed state funding. As you must have realized, even in PMFBY it is a problem, which Secretary Sir has very rightly today laid a hatchet on and said, we will not open the tender. Then capacity building, ground level practices, high risk regimes, then challenges associated with identification. There is also a very interesting thing which I came across, I don't know, subject to verification, that certain companies are also doing a no cattle, no loss model. There is no cattle, there is just insurance, and since there is no cattle, there will be no loss. So I would please urge all the companies to be very, very sure on this. Your regulator is also present here. So what has happened is, probably just to get the loan processed, certain companies are doing no cattle, no loss. And just the premium is available. So please be wary that these practices are under our watch. And please ensure that it doesn't happen. All right, so what is the way ahead? My big idea is Rashtriya Pashudhan Bima Yojana. I think AH Commissioner has already hinted towards it. Probably we could build a full-fledged schemes with a full operational guidelines and removing all those caps, because climate change will hit this sector the hardest. Agriculture is one, and livestock sector will also be hit very hard. And with our 54% of our population, or whatever percentage is currently 40, it will be a problem. And so we can't think of this sector merely as a sector where we will target only the socio-economically or poor farmer or poor people. No. We have to think of it from the food security perspective and target everybody, so that there is no political disruption which ensues with climate change. So centralized operating guidelines, portal, Loni cattle, we could say that every Loni cattle would get a compulsory enrollment under the scheme. Insurers should be given freedom to choose multiple vendors, broker, intermediary agencies, and reduce dependence on veterinary doctors. This is something which I came across in my talks with the insurance sector. That there is, could we have some kind of a course designed only for assessment of, say, the death or loss or whatever in this sector? So coming from my department, we have para-veterinary professionals which are there. Probably can we go to them or authorize them to do this work, which then expands our capacity and takes out dependence on the veterinary doctor. So this is something which I leave with the ministry. Then focused IC. As I said, in PMFBY, we have created a 2% pool for IC activities within the guidelines itself. Similar thing needs to happen in the new scheme. But more importantly, as I pointed out, for the sector, some kind of a Bima Sahi Hai campaign needs to be designed and run for a decade at least. For the next decade it should run. The sector needs to come together. And leveraging of PMFBY and Kisan Rin portal databases, because already we have 4 crore farmers here, 5 crores farmers in KRP, and Honorable FM has already given a target of 4.2 lakh crores livestock credit target. So maybe using the bank ecosystem, we get all these people into the livestock insurance. So my final recommendation for the day, Ministry may consider forming a working group, but please include insurers, reinsurers, technology people, and state governments while doing this. We have in PMFBY already done this. All the ARTM and the technology that came out was from that working group formation. So probably that is the way to go before you do the scheme guidelines. Thank you so much.
Ritesh, can you show the first slide again, that population slide?
Sir, piche?
When you showed that, what is the share of the first and second slide?
About 33%.
No, this 2% enrollment here, this one.
Ye enrollment wali?
2% enrollment,
Acha, okay. Just ye wali sir.
This is 26 lakh. This is 26 lakh families whose livestock are insured, or actual number of livestock insured. Cattle units. Then if the livestock base is 30 crore, this includes cattle and other livestock also? So how is this 2% arrived at?
Sir, I think he will be better able to. Can you give a mic?
Can we get some more mics in the audience, please?
Yeah.
Actually, when we tweaked this scheme, we targeted the, we had a calculation of milch animal. So in country, we are having around 12.5 crore milch cattle. So on that basis, we...
So that livestock base, 30 crore will have other...
It will be very miserably low.
Okay. My only thing here is, as mentioned in the presentation also, presently the number of animal husbandry KCC is 46 lakh.
Yeah,
and that is number of farmers having KCC of livestock. So it could be exclusive livestock, it could be mixed with crop insurance. So number of livestock in that KCC would be maybe 1 crore.
Approximately.
Just take an average of 2.
Agreed.
If we just make it as a mandatory, your percentage will rise
go
from
up.
this to 10% immediately.
Exactly.
And that will, and because it's a part of the credit, that cost of insurance can be part of that your scale of finance. So the farmers won't have any problem to give whatever premium. Only thing is your government's premium will be enhanced. So that could be one idea to be worked on immediately. This is my suggestion, based on the data which we have on the RIN portal.
Sir, I think you made a very valid point. My request will be, sir, that we in the CPMU already have people who can do this kind of data crunching and also help in flagging this to the relevant banks. And DFS representative is here only. So we could probably push the banks to do this kind of enrollment both for crop insurance and livestock insurance.
Because this time when we have this budget announcement,
yes,
and this is for the whole August body here, that the credit limit for interest subvention has increased from 3 lakh to 5 lakh.
5 lakh, right.
And we are working to ensure that the sub-limit of 2 lakh for animal husbandry, which was earlier there, will not be there. So there is quite a possibility that the whole of 5 lakh will be available for animal husbandry and fisheries sector, which will lead to maybe more KCCs in animal husbandry fisheries. So that coupled with mandatory insurance will ensure that this number increases to a good level in the subsequent years.
So, sir, just one submission. This data only to the NLM scheme, what very long drawn scheme and it needs a lot of.
Because this is something very interesting which he told, that the data that the insurance companies are already doing many times more than our scheme, which is something which is counterintuitive.
So the
with
challenge
85% in subsidy given by us, I think so we are sort of penalizing the farmers not coming into the scheme by asking them to give the full premium by the insurance companies. This is something which I am not able to understand why it is happening.
Sir, because there is no ecosystem available for them to enroll, and then the scheme is designed in a way that there are many challenges built into it itself. तो अगर उसको थोड़ा सा हम PMFBY structure type में ले आएंगे, it can immediately grow. It will not even take any time.
Sir, इसमें just I want to make a, of course we agree that this scheme has been very poorly drawn at one point of time, and we had a midterm correction, and the new finance commission is coming. Already we are preparing a document, initial document that will be then working group and all that. Just to quickly come on that, when the cooperatives or other private party, when they go for insurance, the main problem is coming is the evaluation of the animal, valuation of the animal. Since in our present scheme, we don't have the mechanism, we have a cap of the valuation of the animal, number one, and the cap of the total, sum assured amount. And some of the big dairy farmers, which are running, say, so they cannot qualify for our scheme, right? So these are the 2-3 things, and just for, as you rightly said, 46 lakh KCC, which are livestock KCC, as per our, which we could collect, only 7% of them having the insurance. So we are also munching that data. So situation is not at all, we agree to that there is a need a overhauling of the whole things, and thank you for bringing us to this, because we learn more, and then when you go back and we can work on that. Thank you.
Thank you.
Shri Ritesh Chauhanji, thank you so much for sharing your deep insights that come from so many years of experience of holding leadership positions, and thank you to continue to inspire us. We now move into a presentation on automated localized claim processing for millions of farmers. Food for thought. Is it an unrealistic dream, or is it really the future of crop insurance? But we're not going to leave you alone to figure this out. We're going to get just the right expert. Please help me and join me in welcoming Shri Rob Stray, Regional Head, Plantix, Germany, to come up and throw some light on this topic. Can we please have Mr. Rob Stray on stage, please? And can we please welcome him with a nice round of applause? Over to you.
Hello everyone. First and foremost, I feel really absolutely delighted to be allowed to speak here. So all the dignitaries, Mr. Chaturvedi, Mr. Murthy, thanks for having me. I try to be short because I know that we're a bit over time, and what I would like to talk about is an automated localized claim processing for millions of farmers. I mean, is this an unrealistic dream or the future of crop processing? The presentation will have 4 parts. I would like to introduce a bit about the background so that you get an idea, try to formulate a problem, then look at a solution that we could give, and have a short technical deep dive. We are a bit short in time, so I'm going to be fast, but I'm going to be open for all kinds of discussions. So I am the CTO and co-founder of Plantix. Plantix is a mobile application that is pretty simple, right? So a farmer can snap an image of the infected plant, we send this image to our server, we analyze it, and we play back the result to the farmer. So let's assume you would be growing cotton in the south of Maharashtra. You can snap an image, we would analyze it, we would tell you this is pink bollworm, and give you a recommendation how to fight it. And this is done in also 12 Indian languages. So Plantix is available in Hindi, in Marathi, in Telugu, in Malayalam, in Urdu. If we look at Plantix, it's available worldwide. We have more than 40 million downloads meanwhile. It's available in 160 countries. We have the 21 languages that we're supporting, and we analyzed more than 150 million images. So every dot that you're seeing in here is basically an image that we analyzed throughout the last 10 years. My background is soil science, botany, and geography, and yeah, I got in contact with the Ministry of Agriculture about 4 years ago, in the time when Mr. Manoj Ahuja was running as a secretary. We also see Dr. Murthy here in the picture, because the Ministry of Agriculture reached out to us and asked if they could use our image recognition software in the NPSS application. Excuse me. So nowadays, the NPSS application is the National Plant Pest and Surveillance System that is used and developed by the Ministry of Agriculture, and all the images that are sent in these applications are analyzed by our software. The advantage of all of this is that everything is automated, you know? So like if we look back a couple of years, like the extension managers of the Indian government were like calculating like taking these damages with pen and paper, then sending it somewhere. All of this had delayed, and there was a lot of like manual steps that are prone to issues. So let us come now to the point of insurance. Like I'm a big fan of the insurance, because I think like that no one deserves an insurance more than small-scale farmers. There's so many risks that these farmers are exposed to that they cannot control, right? I mean, we have climate change, we have pests and diseases, we have animal damages, we have floods, we have droughts. So looking at the issues, I think we have like people from the insurance in here. We also have people that work for the farmers. I basically see two big pillars. On the one hand, we would hear from the farmers that the claim processing takes a lot of time. And that is always like perceived as like a big problem for them, because they are losing their harvest, and it may take weeks, if not months, until they're reimbursed. If we're looking at the problems of the insurance companies, it's truly fraud, right? I mean, this is obvious. I mean, if you have like so many million people using this kind of insurance, fraud will be part of the game, and I also try to analyze how the process looks in the moment. So, like a damage may occur, the farmer reports the damage to the insurance companies, a surveyor is sent to the field, the insurer validates the reports of the claims against the weather data, they calculate and approve the claims, and the farmer receives a compensation via bank transfer or via UPI. All of this may take weeks, if not months. And I mean, you are all aware that the time between the Kharif season and the start of the Rabi season is enormously short in India. So like if I'm losing my harvest at the end of the Kharif season and it takes years or months to get reimbursed, I will not have the money to buy the inputs for the upcoming Rabi season, and that is a big problem. So let me try to schedule like how I would envision a process to be looking in the future. Akshat would see a devastating infestation of fall armyworm in the field. He snaps an image with the PMFBY application. The system then automatically fetches the satellite images from Akshat's field, and machine learning algorithm would analyze the extent of the damage, and based on the yield loss, Akshat gets reimbursed. I would hope that we would come into a situation in which a farmer can get reimbursed within 24 hours after the claim is processed, so that whatever is happening, he would have the financials to buy the inputs for the upcoming season. And now looking at the fraud perspective, if we see that Sandeep noticed some water damage on his field and he snaps an image of this flooding, but the satellite image would tell us actually that Sandeep's field is not affected and it's just a very small area where he took like an image of a puddle of mud, then this is a point where a claim is denied, and also this result can be processed within 24 hours. So let us quickly look at the picture-based AI technology for agriculture. We are working on all of this for the last 10 years, and we analyzed more than 100 million images of crops. All in all, we analyzed more than 150 images. It's millions of rice, cotton, pepper, tomato images. So we are focusing in the moment on the 50 top most important crops. and can analyze 690 different pests and diseases. Behind all of this is the idea that we need to guide farmers to take a good image. The biggest issue that we've been facing throughout the last years been that farmers taking poor images that are not suitable. So how do we overcome this issue? We train models to actually analyze if an image has the right quality to be processed. So you would see in here that like an image could be either low quality or blurry, it could have a bad shooting distance, it could be a non-crop that is shown on this image, it could not even be a plant, or it could be like an unknown pest and diseases. In all of these cases, we can ask the farmer to repeat the process. What, sorry? So, I mean, the bigger idea is that, you know, we can guide farmers, and that is working out very, very nicely. That is working out very, very nicely.
Just
so
the
that we
repository of images in the previous slide, which you have. Okay.
Well, this one, what is it?
Please continue.
I didn't understand the question.
I wanted to understand. Yeah, this. Can you? I just wanted to show to the secretary that this is the repository of images based on which you have developed this AI model through which you detect and identify the pest or the crop itself, right? So, can you just explain how you have done? You have developed this model.
How we gathered all these images?
Yeah, how you got those images and how you developed how you trained your model based on these images?
So Plantech's been the first on the market. We've been like in here like 10 years ago. So we have been the first on the market, which means that we got like all of the media attention worldwide. Who gets all of the media attention will be the ones who gets the first users, who gets all of the first users, gets the first data. Whoever has the first data gets more users and can train better models. We have like 3 plant pathologists working in our office that are doing nothing else but annotating images. So more and more images are coming in, and then we are annotating it. We would also understand in this very moment that like we cannot recognize a certain pest or disease. The AI algorithm would tell this. Then we would know that our plant pathologists keep on labeling these images. We also work together with ICA, with the Ministry of Agriculture, as well with ICRISAT, with CIMMET as well, that helped us to label edge cases. All in all, we labeled millions of images in here to make the image algorithm more and more robust.
If I may ask, how long did it take? How much time did it take for you to come up with the first successful model? Like 2 years, 3 years? How long did it take initially?
I mean, it is. We are working like on this for more than 10 years now, and we are constantly improving. You know, like, for instance, we are like adding coffee at the moment, which was not a part of it, and cassava was just like recently added. We added tobacco. You know, like, so we started with the most important crops for India, which would be cotton and rice and maize, soybean and millet, and then we constantly added more images in this process. So we now have the information, what is the issue on the ground, right? We would know that Akshat is facing an image, a problem with fall armyworm. But the information that we do not have, and the information that is crucial for the insurance in here, would be how much of the field is affected. And this is where remote sensing comes into play. We've been working together with NLMC, for several years now. Dr. Dubey and Dr. Murthy have been enormously helpful in this kind of collaboration. And India has true rock stars in the remote sensing area. So what do? We have the information. Fall armyworm is the issue. We now download the satellite images to understand how much of the area is affected. So if you look at the top right example, you may just have 1 or 2 plants that are infected with fall armyworm. In this case, this is not an insurance claim, right? I mean, the yield loss will be minimal. You're surely below the threshold. And then there's other cases where almost all of the harvest is lost due to this issue. We now see the process, right? The farmer can take multiple images from the field. We would have a GPS verification if these images really come from the field. That is like part of the farmer, we have the timestamp, and we have the GPS location. We now use the images to detect the damage and understand the reason of the damage, and then afterwards we have like an automatic claim processing. If we look in all of this, we have like two parts that are coming together. The ground truth image that the farmer was taking tells us what is the problem. And then the satellite image, it tells us what is the extent of the image. I'm now showing example from Sentinel-2, so like you have a slight flooding, a moderate flooding, or a severe flooding. But in here, I go with what Dr. Murthy said. India has like excellent remote sensing capabilities. ISRO will launch new satellites soon that like overcome the qualification of Sentinel. And we have amazing startups like Pixel that will come up with what, 5 to 5 meters resolution. So all of this together can like really like push the smallholder insurance to the next level by providing possibilities to automate everything. I would claim that when we combine the ground truth images of a farmer with the remote sensing, we get like the maximum accuracy. But I mean, Delhi was not built in a day, and I would not say that we can like automatically process 99% of the cases that are coming in. But I also say this is not needed in the first place. Even if we can just automate 30% of the issues, that would be a massive improvement of the manual work that is done in this very moment. So how would this process look like? We would have the first checks that are going on. If the AI models are super sure the ground truth data of the farmer and the remote sensing data from the satellites match, we can like deposit the money directly and reimburse the data. We can also get a human into the loop in here, a human that doesn't need to visit the field, but a human that has a look at the image. In this case, if like let's say like an expert from the insurance and an expert from the ministry would look at the image and would say, I'm confident that this is a valid claim, then afterwards the deposit can be processed and the farmer reimbursed directly via UPI. And in the last step, I think like, you know, if everybody's unsure, then we can still send a surveyor to the field. So my point is not that AI will like get rid of all the humans in the first place, but what AI can do in this case is like reduce the manual overhead and operational cost of the PMFBY scheme. And I'm very confident that this is possible already today if we work together. What is already out there is a disease detection model, a crop identification model, a photo quality model, and a shooting distance model. And the Ministry of Agriculture of India is already using this one in the NPSS application to these days. Hundreds of thousands of images are analyzed. And what I would propose is a co-development with the ministry and the NCFC, to utilize the remote sensing data to actually be able to have a flood, drought, and animal damage model as discussed, and also calculate for the area. The crucial steps is that we need to come up with like a data collection standardization, a validation framework for the AI model, a damage assessment, fraud detection and prevention, and then check the integration and scalability. That is a clear case of rolling it out in several districts, testing it and comparing it to the processes that are out there in this very moment. So if I really honestly love small scale holder insurance. I think like nobody deserves more to get an insurance than these people. And I think the future of all of this will be a fast, fair, and factual insurance for millions of farmers in India. Thank you very much.
A huge round of applause for Mr. Rob Stray. Thank you. That session was so interesting that I think it made us all think and left us all a little hungry. So not to worry, we're in the land of spices and flavors. We're going to leave you to enjoy a scrumptious spread. And believe you me, some very impactful, very insightful sessions wait on the other side. See you on the other side. Please come back real soon and settle down so we can quickly begin. Enjoy your lunch and see you in a little while. 2:30, please? Yeah, perfect. So let's try and eat a quick bite and be back and start our next session at exactly 2:30. Thank you.
फसल सुरक्षा की ओर एक और कदम। भारत सरकार पहुंचेगी अब किसानों के द्वार। प्रधानमंत्री फसल बीमा योजना के अंतर्गत फसलों का नामांकन आसान करने के लिए भारत सरकार अब लाई है मोबाइल ऐप एड यानी किसानों का सहायक, जिससे किसान बीमा प्रतिनिधि की मदद से घर बैठे करा सकेंगे फसल का बीमा। अपने फसल बीमा के नामांकन के लिए बीमा एजेंट को कॉल करें और PMFBY एड के द्वारा निर्धारित दस्तावेज घर पर ही दिखाकर अपनी फसल का बीमा घर बैठे कराएं। फसल बीमा की आधुनिक सुविधाओं के साथ अब निश्चिंत हो रहा हर किसान। मुस्कुरा कर कह रहा है हर किसान, घर घर चल रहा है फसल बीमा अभियान। कृषि एवं किसान कल्याण मंत्रालय।
लर्निंग मैनेजमेंट सिस्टम कृषि बीमा और कृषि ऋण योजनाओं से संबंधित जानकारी लेने की एक नवीनतम प्रबंधन प्रणाली है। ये कृषि और किसान कल्याण मंत्रालय द्वारा इलेक्ट्रॉनिक्स और सूचना प्रौद्योगिकी मंत्रालय के सहयोग से विकसित की गई एक अनोखी पहल है। इस सिस्टम के इंटरैक्टिव मॉड्यूल से प्रभावी शिक्षा प्रदान करना बेहद आसान है। इस प्रणाली में प्रधानमंत्री फसल बीमा योजना PMFBY व किसान क्रेडिट कार्ड KCC पर संशोधित ब्याज सब्सिडी योजना MISS जैसी दो महत्वपूर्ण योजनाओं को भी सम्मिलित किया गया है। इसमें वीडियो और इंफोग्राफिक्स के माध्यम से विस्तृत जानकारी प्रदान करने वाले मॉड्यूल मौजूद हैं। डैशबोर्ड से हितधारकों की प्रगति की निगरानी के साथ साथ व्यक्तिगत संस्तुति भी सरलता से दी जा सकती है। इस सिस्टम से ज्ञान प्राप्त कर रहे हितधारकों द्वारा सीखी हुई जानकारी का मूल्यांकन करके उन्हें प्रमाण पत्र देकर प्रोत्साहित भी किया जाता है। यहाँ हितधारकों को विशेषज्ञों के साथ अपना अनुभव साझा करने हेतु एक ऑनलाइन फोरम की भी सुविधा उपलब्ध है। LMS में कृषि ऋण व कृषि बीमा से जुड़े विभिन्न प्रकार के दस्तावेज व संदर्भ सामग्री का भंडार भी उपलब्ध है, जिसे नॉलेज रिपोजिटरी भी कहा जा सकता है। विशिष्ट विषयों पर मार्गदर्शन हेतु इसमें वेबिनार सत्रों का भी आयोजन किया जा सकता है। LMS का उपयोग मोबाइल ऐप द्वारा भी करना संभव है। ये इसे दूर दराज के क्षेत्रों में उन हितधारकों तक पहुंचने में भी सक्षम बनाता है जिनकी कंप्यूटर तक पहुंच सीमित है। LMS और फसल बीमा पोर्टल के साथ सहज समावेश से ये हितधारकों के लिए आसान पंजीकरण व योजना से संबंधित समाचारों और नीतियों पर अपडेट की भी सुविधा देता है। LMS हितधारकों की जरूरतों के अनुसार विकसित हो सके, इसके लिए इसमें फीडबैक फॉर्म के माध्यम से निरंतर सुधार का विकल्प भी दिया गया है। कृषि बीमा और कृषि ऋण के लिए लर्निंग मैनेजमेंट सिस्टम सिर्फ एक प्रणाली नहीं है, ये सशक्तिकरण, ज्ञान साझा करने और निरंतर कृषि विकास के लिए एक बेहतरीन पहल है। प्रधानमंत्री फसल बीमा योजना पिछले 8 सालों से देश के करोड़ों किसानों को आर्थिक सुरक्षा कवच देने का काम कर रही है। किसानों की योजना में बढ़ती सहभागिता से योजना के क्रियान्वयन से संबंधित प्रश्नों एवं शिकायतों को भी सही समय में सुनना एवं उनका जवाब देना आवश्यक है। PMFBY के दिशा निर्देशों के अनुसार किसानों के लिए शिकायत निवारण की नई व्यवस्था एवं माध्यम विकसित किया गया है, जिसे किसान अपनी शिकायतें दर्ज करने और समाधान प्राप्त करने के लिए सरलता से उपयोग कर सकते हैं। इस योजना के अंतर्गत हमारे किसानों के लिए अब तक कोई शिकायत निवारण की केंद्रीकृत प्रणाली नहीं थी, लेकिन अब इस योजना के अंतर्गत एक केंद्रीकृत टोल फ्री नंबर प्रस्तुत किया है, जो किसानों को फसल बीमा के क्रियान्वयन संबंधी शिकायतें करना एवं उसका समाधान पाने का आसान तरीका है। देश के करोड़ों किसानों के लिए सादर समर्पित है कृषि रक्षक पोर्टल और हेल्पलाइन। इस नई व्यवस्था से इंश्योरेंस कंपनीज, बैंक्स और राज्य सरकारें जुड़ी हुई हैं। कृषि रक्षक पोर्टल और हेल्पलाइन सटीकता के साथ विकसित किया गया है, जहां किसानों को प्रमाणित करना, बीमाकर्ताओं, बैंकों एवं राज्य सरकारों को टिकट अग्रेषित करना तथा वास्तविक समय में ऑनलाइन उचित समाधान प्रदान करना आदि काम तुरंत किए जाएंगे। प्रत्येक शिकायत को एक अलग टिकट आईडी प्राप्त होती है, जिसके निवारण की जिम्मेदारी बीमा कंपनी की होती है। सिस्टम अपने आप अधिकतम 15 दिनों का टर्न अराउंड समय सुनिश्चित करता है। गहन निगरानी और संस्करणों के आधार पर अब कृषि रक्षक पोर्टल और हेल्पलाइन परिचालित किया जा रहा है, जिससे किसानों की विविध आवश्यकताओं को आसानी से संभाला जा सकेगा और जो किसानों की फसल बीमा से जुड़ी हर समस्या का समाधान भी दे सकता है। अन्नदाताओं को अपनी भाषा में जवाब देने वाली हेल्पलाइन एक विशेष नंबर 14447 के साथ, जहां किसान अपनी शिकायतें दर्ज कर सकते हैं एवं अपनी भाषा में तुरंत जवाब पा सकते हैं तथा फसल नुकसान की सूचना भी दे सकते हैं। और तो और, संतुष्ट न होने पर किसान अपनी शिकायतें दोबारा खुलवा सकते हैं। इससे बीमा कंपनियों की जवाबदेही भी सुनिश्चित होगी। कृषि रक्षक पोर्टल और हेल्पलाइन, फसल बीमा की सफल यात्रा में आपकी आवाज। फसल बीमा से संबंधित अधिक जानकारी के लिए हमें 14447 पर जरूर कॉल करें।
प्रधानमंत्री फसल बीमा योजना वर्ष 2016 से अन्नदाताओं के स्वाभिमान और उनकी फसलों की रक्षा के लिए एक संरक्षक ढाल बनकर सतत खड़ी है। फसल बीमा योजना के साथ ही कृषि एवं ग्रामीण क्षेत्रों में किसानों की अन्य बीमा की जरूरतों को पूरा करने के लिए भारत सरकार द्वारा उठाया जा रहा है एक और कदम। इस नई पहल के तहत पेश है एक नया पोर्टल सारथी, अर्थात सैंडबॉक्स फॉर एग्रीकल्चरल एंड रूरल सिक्योरिटी टेक्नोलॉजी एंड इंश्योरेंस। ये पोर्टल ग्रामीण भारत के करोड़ों किसानों को उनकी बीमा से जुड़ी जरूरतों को पूरा करने के लिए समर्पित है। ये अत्याधुनिक सारथी प्लेटफॉर्म भारत सरकार का एक अनूठा माध्यम है, जो मौजूदा डिजिटल प्लेटफॉर्म NCIP, एग्रीस्टैक और राज्य के डेटाबेस का उपयोग कर किसानों की आवश्यकतानुसार बीमा उत्पादों के लिए एक व्यापक विकल्प प्रदान करते हुए बारीक डेटा सेट किसान
अन्नदाता किसान देश की पहचान। किसानों की फसल सुरक्षा की ओर एक और कदम। भारत सरकार पहुंचेगी अब किसानों के द्वार। प्रधानमंत्री फसल बीमा योजना के अंतर्गत फसलों का नामांकन आसान करने के लिए भारत सरकार अब लाई है मोबाइल ऐप एड यानी किसानों का सहायक, जिससे किसान बीमा प्रतिनिधि की मदद से घर बैठे करा सकेंगे फसल का बीमा। अपने फसल बीमा के नामांकन के लिए बीमा एजेंट को कॉल करें और PMFBY एड के द्वारा निर्धारित दस्तावेज घर पर ही दिखाकर अपनी फसल का बीमा घर बैठे कराएं। फसल बीमा की आधुनिक सुविधाओं के साथ अब निश्चिंत हो रहा हर किसान। मुस्कुरा कर कह रहा है हर किसान, घर घर चल रहा है फसल बीमा अभियान। कृषि एवं किसान कल्याण मंत्रालय।
लर्निंग मैनेजमेंट सिस्टम कृषि बीमा और कृषि ऋण योजनाओं से संबंधित जानकारी लेने की एक नवीनतम प्रबंधन प्रणाली है। ये कृषि और किसान कल्याण मंत्रालय द्वारा इलेक्ट्रॉनिक्स और सूचना प्रौद्योगिकी मंत्रालय के सहयोग से की पहल है। इस सिस्टम के इंटरैक्टिव मॉड्यूल से प्रभावी शिक्षा प्रदान करना बेहद MISS जैसी 2 महत्वपूर्ण योजनाओं को भी सम्मिलित किया गया है। इसमें वीडियो और इन्फोग्राफिक्स के माध्यम से विस्तृत जानकारी प्रदान करने वाले मॉड्यूल मौजूद हैं। डैशबोर्ड से हितधारकों की प्रगति की निगरानी के साथ साथ व्यक्तिगत संस्तुति भी सरलता से दी जा सकती है। इस सिस्टम से ज्ञान प्राप्त कर रहे हितधारकों द्वारा सीखी हुई जानकारी का मूल्यांकन करके उन्हें प्रमाण पत्र देकर प्रोत्साहित भी किया जाता है। यहाँ हितधारकों को विशेषज्ञों के साथ अपना अनुभव साझा करने हेतु एक ऑनलाइन फोरम की भी सुविधा उपलब्ध है। LMS में कृषि ऋण व कृषि बीमा से जुड़े विभिन्न प्रकार के दस्तावेज व संदर्भ सामग्री का भंडार भी उपलब्ध है, जिसे नॉलेज रिपोजिटरी भी कहा जा सकता है। विशिष्ट विषयों पर मार्गदर्शन हेतु इसमें वेबिनार सत्रों का भी आयोजन किया जा सकता है। LMS का उपयोग मोबाइल ऐप द्वारा भी करना संभव है। ये इसे दूर दराज के क्षेत्रों में उन हितधारकों तक पहुंचने में भी सक्षम बनाता है जिनकी कंप्यूटर तक पहुंच सीमित है। LMS और फसल बीमा पोर्टल के साथ सहज समावेश से ये हितधारकों के लिए आसान पंजीकरण व योजना से संबंधित समाचारों और नीतियों पर अपडेट की भी सुविधा देता है। LMS हितधारकों की जरूरतों के अनुसार विकसित हो सके, इसके लिए इसमें फीडबैक फॉर्म के माध्यम से निरंतर सुधार का विकल्प भी दिया गया है। कृषि बीमा और कृषि ऋण के लिए लर्निंग मैनेजमेंट सिस्टम सिर्फ एक प्रणाली नहीं है, ये सशक्तिकरण, ज्ञान साझा करने और निरंतर कृषि विकास के लिए एक बेहतरीन पहल है। प्रधानमंत्री फसल बीमा योजना पिछले 8 सालों से देश के करोड़ों किसानों को आर्थिक सुरक्षा कवच देने का काम कर रही है। किसानों की योजना में बढ़ती सहभागिता से योजना के क्रियान्वयन से संबंधित प्रश्नों एवं शिकायतों को भी सही समय में सुनना एवं उनका जवाब देना आवश्यक है। PMFBY के दिशा निर्देशों के अनुसार किसानों के लिए शिकायत निवारण की नई व्यवस्था एवं माध्यम विकसित किया गया है, जिसे किसान अपनी शिकायतें दर्ज करने और समाधान प्राप्त करने के लिए सरलता से उपयोग कर सकते हैं। इस योजना के अंतर्गत हमारे किसानों के लिए अब तक कोई शिकायत निवारण की केंद्रीकृत प्रणाली नहीं थी, लेकिन अब इस योजना के अंतर्गत एक केंद्रीकृत टोल फ्री नंबर प्रस्तुत किया है, जो किसानों को फसल बीमा के क्रियान्वयन संबंधी शिकायतें करना एवं उसका समाधान पाने का आसान तरीका है। देश के करोड़ों किसानों के लिए सादर समर्पित है कृषि रक्षक पोर्टल और हेल्पलाइन। इस नई व्यवस्था से इंश्योरेंस कंपनीज, बैंक्स और राज्य सरकारें जुड़ी हुई हैं। कृषि रक्षक पोर्टल और हेल्पलाइन सटीकता के साथ विकसित किया गया है, जहां किसानों को प्रमाणित करना, बीमाकर्ताओं, बैंकों एवं राज्य सरकारों को टिकट अग्रेषित करना तथा वास्तविक समय में ऑनलाइन उचित समाधान प्रदान करना आदि काम तुरंत किए जाएंगे। प्रत्येक शिकायत को एक अलग टिकट ID प्राप्त होती है, जिसके निवारण की जिम्मेदारी बीमा कंपनी की होती है। सिस्टम अपने आप अधिकतम 15 दिनों का टर्न अराउंड समय सुनिश्चित करता है। गहन निगरानी और संस्करणों के आधार पर अब कृषि रक्षक पोर्टल और हेल्पलाइन परिचालित किया जा रहा है, जिससे किसानों की विविध आवश्यकताओं को आसानी से संभाला जा सकेगा और जो किसानों की फसल बीमा से जुड़ी हर समस्या का समाधान भी दे सकता है। अन्नदाताओं को अपनी भाषा में जवाब देने वाली हेल्पलाइन एक विशेष नंबर 14447 के साथ, जहां किसान अपनी शिकायतें दर्ज कर सकते हैं एवं अपनी भाषा में तुरंत जवाब पा सकते हैं तथा फसल नुकसान की सूचना भी दे सकते हैं। और तो और, संतुष्ट न होने पर किसान अपनी शिकायतें दोबारा खुलवा सकते हैं। इससे बीमा कंपनियों की जवाबदेही भी सुनिश्चित होगी। कृषि रक्षक पोर्टल और हेल्पलाइन, फसल बीमा की सफल यात्रा में आपकी आवाज। फसल बीमा से संबंधित अधिक जानकारी के लिए हमें 14447 पर जरूर कॉल करें।
प्रधानमंत्री फसल बीमा योजना वर्ष 2016 से अन्नदाताओं के स्वाभिमान और उनकी फसलों की रक्षा के लिए एक संरक्षक ढाल बनकर सतत खड़ी है। फसल बीमा योजना के साथ ही कृषि एवं ग्रामीण क्षेत्रों में किसानों की अन्य बीमा की जरूरतों को पूरा करने के लिए भारत सरकार द्वारा उठाया जा रहा है एक और कदम। इस नई पहल के तहत पेश है एक नया पोर्टल सारथी, अर्थात सैंडबॉक्स फॉर एग्रीकल्चरल एंड रूरल सिक्योरिटी टेक्नोलॉजी एंड इंश्योरेंस। ये पोर्टल ग्रामीण भारत के करोड़ों किसानों को उनकी बीमा से जुड़ी जरूरतों को पूरा करने के लिए समर्पित है। ये अत्याधुनिक सारथी प्लेटफॉर्म भारत सरकार का एक अनूठा माध्यम है जो मौजूदा डिजिटल प्लेटफॉर्म एनसीआईपी, एग्री स्टैक और राज्य के डेटाबेस का उपयोग कर किसानों की आवश्यकता अनुसार बीमा उत्पादों के लिए एक व्यापक विकल्प प्रदान करते हुए बारीक डेटा सेट, किसान प्रोफाइल, भूमि रिकॉर्ड एवं अन्य प्रणालियों को सक्षमता से एकीकृत करेगा। किसान अपनी जरूरत के अनुसार अपने लिए बीमा उत्पाद चुन सकते हैं। किसानों का सच्चा सारथी बनकर सारथी पोर्टल किसानों को बीमा की विभिन्न सुविधाएं एक ही प्लेटफॉर्म पर उपलब्ध कराएगा। साथ ही इस पोर्टल को किसानों के खेतों और संपत्तियों की रक्षा करने और अपनी आय को सुरक्षित रखने में मदद करने के लिए डिजाइन किया गया है। ये नया प्लेटफॉर्म ग्रामीण भारत के दृष्टिकोण से पर्यावरण एवं सामाजिक जोखिमों को कम करने के लिए सरकार को एक सारथी के रूप में मदद भी करेगा। अब सारथी प्लेटफॉर्म के माध्यम से देश के किसान पाएंगे फसल का पैरामीट्रिक बीमा, पशुधन और पोल्ट्री का बीमा, व्यक्तिगत दुर्घटना बीमा, स्वास्थ्य और जीवन बीमा, घरेलू बीमा, खेती उपकरणों का बीमा तथा ट्रैक्टर, ट्रॉली और हल्के कमर्शियल वाहन का बीमा भी किफायती दरों पर करना एवं प्रीमियम के पेमेंट की रसीद भी प्राप्त कर सकते हैं। सारथी प्लेटफॉर्म विकसित भारत की इस यात्रा में किसानों के जोखिमों को कम करना, समाधानों का आविष्कार करना और एक मजबूत कृषि पारिस्थितिकी तंत्र बनाने के साथ साथ किसानों के सुरक्षित
Welcome back, ladies and gentlemen. Just like we had promised you, we have some very impactful, very engaging sessions, but now we bring to you a very, very special performance that is going to truly bring out the culture and the essence of Kerala. Just the energy we need in this room after lunch. Requesting everyone to please take your seats, please settle down. Those who are not in the room right now, come back in. If you could call your friends to join back so we can get started very, very soon. Once again, requesting everyone to quickly come on inside and please take your seats. We have a very special surprise coming your way, so please settle down. Welcome back, everyone. Everyone that's still standing, I request you to please take your seats. Just like I promised you, we have something very, very exciting that's really going to change the energy in this room. But speaking of energy, or like we are on the other side of the lunch break, did you guys enjoy your meal? Yes. Did everyone enjoy the carbs, the protein that they definitely needed from the morning sessions? I hope you all have the energy that's going to be required now as we enter some very energetic sessions. And what we have coming up for you is not just a session, but a very energetic performance. It's called Kerala's Essence, and just as the name suggests, this presentation beautifully not only captures the spirit of Kerala, but it truly brings out its true essence, the timeless traditions, your hands. Devasya, a former member non-life at the Insurance Regulatory and Development Authority of India, IRDAI. He is a general insurance and reinsurance domain expert with more than 35 rich years of diverse experience. He passionately worked on furthering the IRDAI's mission of insurance for all. Sri Thomas, over to you. Please do introduce our expert, our esteemed panelists, and do bring the best out of them in this discussion.
Thank you, ma'am. Good afternoon, everyone. So we just saw, exhibition of choreographed Kerala martial arts Kalaripayat. And as one philosopher and martial artist said, the essence of fighting is in the art of movement. And movement is life. And efficient movement is progress. And I believe that the stalwarts who are going to come onto this podium will be actually showing you the way forward with regard to efficiency of projects and also share and take insights from all of us here. So I've been also asked to make a summary presentation, but before that I believe it's more appropriate to call in the panel here. Shri Ritesh Chauhan, Secretary in the Government of Himachal Pradesh and immediate past CEO and top leader of the PMFBY project. Welcome, sir. Shri T.K. Shibu, Special Secretary, Government of Uttar Pradesh. Welcome. Shri Vinay Kumar Avate, Director Agriculture, Government of Maharashtra. Welcome to you, sir. Shri B. Murugesh, Director Agriculture, Government of Tamil Nadu. Welcome. Okay, I have my professional industry cousins, Shri Gaurav Arora from ICICI Lombard, Technical Head for Underwriting, Claims and Reinsurance. Shri Ashish Agarwal, President, Bajaj Allianz General. Welcome, Ashish. And also Shri D. Rajesh, DGM, Agricultural Insurance Company. Welcome. So thanks a lot for your time and for agreeing to be part of this session, where we exchange thoughts and we look at the efficacy and the way forward with regard to what is we refer to here as alternative risk transfer models within the PMFBY scheme. Can we put up the presentation, please? Now, much of the slides you've already seen, so I'd be actually rushing through it for the simple reason I think the more value will be in the question answer sessions and the deliberations that we will have thereafter. Okay. Who's controlling this? Okay. So what we all understand that we have certain models which are basically iterations of risk transfer in terms of how much of risk sharing, in terms of exposure and outcomes are taken by each of the stakeholders. The stakeholders are basically the insurance company and the government. And each of the models have their advantages, disadvantages. Some are attractive to certain states, to others, they fall on the other model, which is of a wider ratio. Next, please. And they are more commercially known as the cup and cap model, or the attachment point and the threshold limits of exposure. And this slide, I think we have previously seen. Interestingly, the full insurance risk transfer model has no takers. Various reasons for it, we'll delve into that later. Next. These are the results. It's very interesting to hear. Okay, I don't want to get into the quantitative mode here because although we are all fortified by lunch, lunch has certain pros and cons. And one of the commonly understood cons is that the blood supply to the brain becomes less because it's more focused onto the digestive tract. So here, what's interesting is that you may also see that the premium rate when you move from a standard PMFBY model in 22-23 to 23-24 is not exactly showing all that great, saving in certain cases because the ground realities of loss ratios and exposures overweigh any other limitation in the exposure. Next. These are the results of the states by cropping season. Okay, and also the net outgo is shown. So as you understand that when the threshold is not breached, whether it's 80 or 60, there's a surplus sharing of premium. And that is shown as the surplus recovery by a state government. Next. So the experience summary is again here. Certain states have seen a negative outgo. Certain states have seen substantially increased outgoes, and this is typically the vagaries of the weather and the choice of the model. Next, please. That's the same with Kharif and Rabi, and I believe the PMFBY project management will be sharing these slides to whoever may need it. Okay, next. Yeah, so that's the 6131 again, in text rather than in numbers. If you don't mind, we can move forward. Okay. Now, what's essential here is that the weather has played a very important role in the results, which it always does. And it is more that, somebody tried their destiny to 8110 and emerged successful, but that's not a guarantee or recipe of, decision making. Same with 6130, which has a much wider risk transfer scope. So, the whole purpose here is to actually evaluate, which model could be appropriate, or is it a full risk transfer? Where do we actually park ourselves as buyers of insurance? I'm talking on behalf of the states. Where does the supplier, that's the insurer, park itself? Where does the project manager, PMFBY, want to guide both suppliers and buyers in this entire program? So that's a law. Thanks a lot. I have some set of questions that I thought through. My apologies in case the questions are, too trivial, okay? And I will take the credit in case the questions are too deep. So I think I'll go to the key man here, Sri Ritesh Chavanji. Okay. So the art models were developed by you, I believe, and experience has been varied. Now, as a program manager and today as a buyer, where do you think government should look at while trying to play between these options? And I call them options within PMFBY because PMFBY is the full-scale option. And there is a supplementary to it. What should state governments consider and evaluate when choosing between any of these models? Over to you, sir.
Thank you, Thomas. So yeah, I am the culprit who brought all of this upon this sector. And I think it's important today when in PMFBY we are sitting with the highest enrollment ever and sort of rising trends in participation by both states and insurance companies, technology brought in, winds and so on and so forth. Even plantation is now becoming a reality. And so today when we sit in this context, I think it's very important that I should bring out the conditions that prevailed when these models were launched. And the conditions were, we were at the lowest enrollment ever. The technology was in pilot form, which was piloting for quite some time. And the enrollment was declining, stakeholders were declining, states were moving out, and there were even talks in the sector that this scheme could be sort of one day wound up and some new form or avatar may be brought in, right? So that is when yours faithfully landed up in this place. Now, what happened thereafter was that
Bhutani sir had constituted a working group to look into these challenges of not only alternate risk management but also of technology. And it was under my chairmanship that this working group worked. Now, we tried to form two subgroups in that working group. One was led by DFS Joint Secretary at that time looking after insurance, and he had the input from all the sectoral actuaries. And this subgroup actually came up with the recommendations which finally became the alternative risk transfer models. So that is the broad context which I want to flag right now when we are relatively okay in the scheme ecosystem. अवाटे साहब मेरे साथ ही बैठे हैं, उस समय बीड मॉडल इन्होंने ही चैंपियन किया था, एंड टू द एक्सटेंट कि वी वर अंडर थ्रेट कि अगर हमने कुछ किया नहीं तो मे बी महाराष्ट्र ऑल्सो ड्रॉप्स आउट. सो आई मीन we are all family here, but the situation was very dire. And so at that point, we took a conscious call. After having gone through that input from all the actuaries, JS, DFS, having studied these models, their impact, and we then circulated them as models, options to be given to states to be chosen. Now, 2-3 things that I would like to note. One, we gave PMFBY as a standard option, and then we added these 3 options. Of the 3, the most that I preferred and wrote a lot about and pushed and spoke about was the profit and loss sharing. None of the states took it. So then the second preferred was 60-130, where as a nudge we said, okay, Government of India will share the profit and loss, right? And the least preferred was jo bead model 80-110, where we said, we actually said, nudged that we will not share in it. But somehow, I mean, reality is quite different from what you imagine it will be. So this reality also turned out pretty differently. Most of the states went for 80-110. As we saw, we were thinking that states would pick a model and then call for a tender, and so there will have one price. But most of the states called price for everything. When you call price for everything, your finance department will definitely say lowest price. So lowest price will always be 80-110. So I think that is how it sort of spread across the ecosystem. But then, as we have seen in the fallout, certain states have suffered. And there have been savings, there have been great downsides also. Certain companies have also tried to play smart with the models, as you would. I mean, evolution is a process of finding ways to beat the system, right? Or be better at it, so to speak. And so I don't fault anyone for it, but then my sense as we sit here today, highest enrollment, scheme stabilized, properly done, my sense is that it is time that we mature up and have a hard relook at these models. And I think government has already formed a small working group on it, which will be taking that call. From the government's perspective, I will request all the states that my initial recommendation stands. We should first and foremost prefer PMFBY because that is a complete risk transfer. You don't get into risk. Risk is not government's business. Otherwise, you should take trust mode, where it is just completely government doing the whole thing and not go into insurance business. Secondly, profit and loss, nobody took it. I don't think so anybody will. Or 60-130 at best. 80-110, my understanding, my reading, my experience, doesn't suit anybody except for finance department, because they will say, हाँ, सबसे कम पैसे लग रहे हैं. But we are not here to save money or make money. We are here to cover risk. And it is the lowest risk coverage. So it is nearly nothing that we are offering.
So that's my take on it if I can, and yes, guilty as charged. I am the person responsible. Thank you.
Thank you, Ritesh ji. In fact, I would say that this is a discussion topic where thoughts are endless, options are endless, combinations are endless. But I just want to highlight something that struck me during the course of the morning session with Secretary Agriculture's comments on what are the ground realities. CEO PMFBY, his comments, although he has just come in, but he's very much close to the ground, is that I felt that, as an insurance industry person, one of our primary duties, whether we are servicing or whether we are underwriting, is to know the topography of risk. And topography of risk is not just numbers, it's also the underlying business processes and the downsides associated with wrong understanding, which leads to wrong measurements. So even since you are here present personally, my recommendation is that you should be actually calling in the industry leaders along with the chief technology officers and give them a first-hand view of how business with regard to farming and the measurement of risk and even the service delivery actually happens. The hindrances that are placed by the insurance industry's own understanding and business processes. At the end of the day, the insurance industry is a supplier of product and it should adapt to the ground processes. I would like to move on to the next expert on our panel, Shri Vinay Kumar Avte. With regard to your experience in Maharashtra with art mechanisms, have these options of risk sharing been effective in their implementation, including you or the state taking a choice of a particular model, and whether the discovery of premium rates has been actually happening?
This is a very nice question because you should understand the basics of this 8110 model. We have started long back in 2020-21. That was the first year we have implemented this 8110 model in B district as a pilot only. In that particular year, the total premium outgo was 900 crores and the total claim was only 57 crores. So if the normal PMFBY would be there, then the insurance company would have around about more than 800 crore profit in a one district. And in that year, because of 8110 model, we could able to return it back around about 750 crores to the state. The basic of this 8110 model lies in 2019-20 because in 2021. In 2021, we have given to the premium of 5,800 crores to the companies and the claim was only 1,200 crores, 12 to 1,300 crores. So the bumper profit was there, more than 4,500 crores. So this has been very undigestible for the democratic environment. So the 8110 model, although it is not a good insurance model, but still politically the most acceptable model because we could able to justify to the public that we have limited the profit of the insurance companies to the 20% only. And whatever the profit is there, then the state is gaining it back. So this is politically the most convincing one. Apart from this, for this insurance premium perspective, when we are implementing this normal PMFBY, our premium, average premium is around about 24%, 23.69, closer to 24%. So after this 8110 model, the premium has gone down to 12%. So if you see my last year, 23-24 season, my exposure, the insurance to the 75,000 crores. Kharif, 55,000 crores and Rabi 20,000 crores. So total 75,000 crore exposure and the premium was 11,000 crores with 12%. If it is either in the normal PMFBY, it could have been 18,000 crores. So because of this premium gap, we could able to save more than 7,000 crores to the central as well as the state government. So this is another takeaway for the state that we could able to save much larger this thing. But in a long-term perspective, this is very dangerous also. Because all the 4 years in Maharashtra, if we say the rest of Maharashtra, we have always received more than 110% of rainfall. That is more than 100% rainfall. So the season were good. If you see the production is all-time high, making high. At the same time, the payout is also making all-time high because of this add-on perils, that is only the localized calamity, mid-season adversities and post-harvest losses. So lot of people in this insurance industry, they are playing with these three products. They are outside the insurance industry, that is the CSC, that is the surveyors. They are the mostly peoples who play with this, and if you see this year 2024 Karib, we have received more than 1 crore intimation, loss intimation. 1 crore. So it is administratively impossible to do the survey and do the loss assessment. If you see the crop wise, then we have around about 50 lakh hectares of soybean. The insured area is 60 lakh hectares. More insured, that is 120%. But it is very hard to pick out that higher insured area, over insured area. In case of this, if you see this onion has the largest sum insured. My average area is 1 lakh hectare, and this season onion insured up to about 2,75,000 hectares. So because of this meticulous checking, we could able to reject 2 lakh applications only for onion, and the area is 1,50,000 hectares. So it is a very huge. During this year, because of this improper application, we have to reject more than 6 lakh applications to the tune of more than 500 crores as a premium. If you see the exposure, it is more than 5,000 crores, 10 times if you see. So this is this 8110 model, as I spoken, that this is initially proved very good, because in Kharif 23 only we have to pay around about 2,000 crore more, that is above 110% claim, and the 2,000 crore we get it back from the other companies also as a saving from 80%. So overall it seems to be the good, because larger state, if you see the beginning initial presentation also, larger states are moving towards this because of the political acceptability. That's the takeaway. Thank you.
Yeah, thanks a lot, Avataji. In fact, I want to just, I don't know if the audience thought of this, but the option came out of the BEAD experience, where surplus sharing models started. And I believe Ritesh ji was actually marketing PMFBY as a concept. And so he brought in this combination, which is palatable, acceptable, does not have an initial high outgo. There is possible light at the end of the tunnel. But what I appreciate about Maharashtra that I inferred from the numbers was that he used that small premium base, government carrying high exposure, to actually popularize and let the farmers have an experience. So if you look at the numbers, although the premium rate went down, the premium outgo went substantially high, because he achieved greater enrollment, greater area coverage. That is very commendable, and I think that's what all the states should emulate.
No, I just want to add on to this, that not because of 8110 model. Because we have implemented 8110 model in 22-23 only. Okay. At that time, the coverage was at par. Okay. Because of 1 rupee crop insurance only, the enrollment has gone up too high. That's why our exposure to the premium has gone from 2,000 crore to 8,000 crore for the state. So it is a big deal because of 1 rupee, not because of the model. The model doesn't give any surplus in the enrollment process.
No, but what I think he wants to say is, you made savings because of 8110. Yes. Therefore, you use those savings to give 1 rupee. No. Ultimately, you saved 6,000 crore or something. And that 6,000 crore then you used to give 1 rupee, isn't it? Expanded the coverage.
Because that was an election year, so they declare without any consent 1 rupees to the farmers. And that's the
I was looking at more.
Positive spin-off of 8110 has been that many states came with 1 rupee or universalization of the crop insurance, and therefore this rise to 4 crore from 2.6 crores happened because of that.
No, so in fact, the investment in awareness is via experience is perhaps the best permanent awareness. Either you got a lottery or you burnt your hands, but only temporarily. Yeah. So I like the candid feedback. I think that's very valuable for all of us. I like to move on to an insurance supplier, that's ICICI, Sri Gaurav Arora. So you've been writing in certain states across the years. You've seen a mixed experience of the various models. So what would be the key factors that you identify to make a model suitable for a state, not for you?
Thank you for the question. I think selection of the alternative risk transfer method is very, very critical for any state, not only because of the premium outflow really depends upon it, but also the output or the benefit which the ultimate farmer would derive is really dependent upon that particular scheme. So I would share what we really look as when we really look at as an insurance company, when we underwrite our own risk, and probably possibly a reflection of the same framework can be really created at the relevant states level. That's what we really do. So I think the foremost important thing is every state should do a comprehensive and a long-term input analysis about all the risks which are associated in respect of the events which really can happen. The possible worst case scenarios which can really impact them, probably the unforeseen events which can really impact them should be really taken into account. If I have to share, maybe when we look at some of the climatic changes really happening across the globe and then within the country, I can tell you two specific scenarios in the country. Clearly the cyclones which used to be on the east coast has been moving towards the west coast. The intensity and the frequency has been really impacting upon. That's just one example. Maybe some of the states get impacted, some of them not. While you may not have your own inundations really happening, but is there a possibility a neighboring country or a neighboring state really opening a water reservoir and it flooding your states? I think some of those are really examples. So when you do a scenario planning, it should be really taken into account. The second question is about the premium financing. Of course, the alternative risk transfer methods helps you to reduce the premium. But take an example of an 80-110 scheme. If the premiums are linked to the burn cost, probably there is a transfer which is really happening out over there. But imagine an insurance company reducing the premium significantly, their outflow also getting reduced significantly because of the restriction of a maximum 110% out over there. In such scenarios, any additional impact would come to the state government, and that has to be very careful. So while one may go for an 80-110 scheme, but if the premiums are not adequately priced, and you may see a premium benefit, but ultimately the impact would really come to the relevant state in respect of the same. The third is, what are the extreme events which can really happen? Is the state really prepared to fund or create subsidy for the relevant farmers in respect of those particular schemes? If you ask me, globally as well as in India, there are alternative methods of reinsurance and insurance which really exist, which can protect one from such particular events really happening around, and states can really evaluate them. The fourth one I would really talk about is there's a lot of investment in the technologies which is really happening around, whether we call about the yes tech, whether we call about the winds, whether we talk about the crops. It is important to look at each of those particular technologies. To what extent does it really satisfy the technology which you are really creating in your relevant states? Is there enough amount of ideation or a planning which has been done in respect of which can take those impacts and study, and an automated technology transfer can happen at the time of a particular claim really? That needs to be really taken into account. The last thing is that each of the state would have its own nuances. While we have various multiple events which get covered, whether it's in terms of the crop sowing, in terms of the harvesting, in terms of the mid-season adversities, but some of the states may have very specific events really triggering, and not all of them really get triggered. It is important to take some of those aspects into account when one is really defining on the scheme. So if I have to really put a framework around it and lens, I think I would gel between what Ritesh ji was saying and what Mr. Vinay ji was really saying. Clearly, I think 80-110 scheme really works well, where volatility of events or incidents is bare minimum. It is more a service related, where probably the insurance company is ending up servicing some of those particular facilities to ensure the customer or the farmer who's there ultimately gets a fair, fast and friendly and immediate output of the cash flow really at its end. But in a real sense, the transfer of risk is really not happening out over there. If you really look at the 60-130 scheme, probably there's a transfer of risk between both the state as well as the insurer, and there's an appropriate amount of transfer which really happens. So some of these schemes would really work out if the volatility of events are there, but they are not very, very frequent. Say you see a 1 in 7 years or 1 in 8 years, an adverse event really happening around, an extreme event really happening, which is really creating a far significant loss, and you are probably probably you would want to see the impact of it, and probably you want to really fund it out at a state level. So maybe not very frequent, But yes, there is a possibility of an extreme event happening. 60-130 schemes may work out best over there. But the full risk transfer is not these two. It is the PMFBY scheme ultimately, which really happens. And states which see more of volatility, more of intense frequency really every 2 years, 3 years, an impact really happening, they should definitely go for the PMFBY scheme and not the cup and cap schemes at their end. So,
Gaurav, thanks a lot. You know, in a lighter vein, in all other general insurance or non-life lines of business, you want your client to share risk.
Right. Yes.
But here, when they do an 80, 110, you don't want that to happen. You referred to the East Coast, so I'll shift the question to Director Agriculture, Tamil Nadu, Sri Murugesh. The question is, see, you, from your desk, I guess you give the recommendations to the government as to what model to adopt. And, you know, you look at and review the budgetary allocations. But how do these actually impact your budgetary allocation? And additionally, is this entire option constituting an efficient distribution of risk and cost across states? Your view.
Thank you so much, sir, for the opportunity. Yes, I agree that the impact is there. There is a positive impact on this. Once this 60-130 model has been introduced, this alternate risk transfer mechanism has been introduced, there is a positive impact. I agree with it. But before that, we had some 80-20 model, which Tamil Nadu was the first state to adopt that. During that 80-20 model, the risk solely rise with the insurance companies and the state government. So many empaneled insurance companies were not forwarding to apply for tender. So there was a lot of issues, and liabilities was more in with the state government. So there was a learning experience, and we started to learn. And then 23-24, then once we adopted this 60-130 model, yes, we agree, the premium rates have come down. As earlier, our CEO also has showed this slide, and you also showed this slide that where the premium rates have come down. And Andhra Pradesh and all has got 67% less premium rates, and Tamil Nadu is also around 60% less premium rates, but agreed. But the main thing is to way forward, and the things which we have to focus on that with my experience on the field as a Director of Agriculture, and when I was a collector also, then after that when I came as Director of Agriculture also, little bit of experience and how to solve the issues. Actually, today morning, our respected Union Secretary also pointed out clearly that what is the field issues. So the issues which we have to face is, normally Tamil Nadu has got a lot of cyclones because it's a coastal district. We are facing a lot of cyclones, heavy rainfall. Northeast monsoon is very predominant in our state. So normally that is why we have opted for 60-130 model. And coming to the way forward, basically the revision of, I request to revisit the methodology of calculating the risk, this threshold yield. Basically, now we are doing out of 7 years, best 5 years we are calculating for the threshold yield. And because of that, the farmers, many farmers are deprived of getting the insurance compensation only because of this calculation of best 5 years. So even when I speak to the farmers locally when they are coming and when I visit the field, they said that, sir, 2 years I have paid some 1,000 rupees and I never get a compensation. Because the best 5 years is little bit lengthier. So my suggestions would be, out of 7 years we can have a best 3 years model. So ultimately the insurance is for the farmers. So ultimately farmers has to benefit at the end of the day. So as sir pointed out today, Union Secretary pointed out that only 20 to 30% of the person who is registered and insured is getting the compensation. Remaining 70% are left out without getting the compensation. Even my state, my people will say, sir, we have saved some 500 crores. We have saved this. It is not the question of saving. Ultimately, this insurance is for the farmers. So we have to ensure that farmers gets the compensation amount during his crop damage. So that one, and without indemnity will be whether, just I want to throw this question,
Ritesh sir has formulated this, so maybe without indemnity is it possible? Because we calculate high risk 70% is for high risk, medium risk is for 80%, low risk for 90%. So low risk category will get more compensation. So the high risk category is only for 70%. Based on the calculation of threshold yield, we have to calculate for 70% only. If low risk person is there, then we have to calculate for 90%. So the 90% low risk category gets more compensation than the high risk category. So we have to remove the indemnity and the threshold yield. We have so that's why I'm saying the rationalization of threshold yield definition should be changed a little bit. So that is one point. Then another thing is when a farmer gets the premium, the compensation, one farmer is getting 5 rupees. See, he has paid 500 rupees to 800 rupees per premium, and that it is not the fault of, it's a calculation, that's all. The calculation comes around that he is being credited for 5 rupees. What is going to do with the 5 rupees of the crop damage? At least we can fix some minimum threshold amount like 500 rupees. At least whatever the compensation, if it's less than 500 rupees, he can be credited to 500 rupees or 600 rupees. Maybe 1000 rupees will be the ideal one. So some via media we can have, and 2.5 rupees and all people have got credited. It's a calculation. But I have seen the calculation list where 2.5 rupees, 5 rupees, 10 rupees, 12 rupees and all being credited, which is nothing to them, for it is meaningless. That's why I thought I could, we can rework on this. Then one more thing is capping of premium subsidy by government of India is restricted to 25% for the irrigated area and 30% for the rain-fed area. That also we can relax. If the 25% is relaxed, then the burden for the state government will be reduced. That is my request and my suggestions. And one more thing is, rightly said, we have to fix the target date, because indefinitely insurance companies are working, and for this Rabi season last year, my people got the insurance only by August, September. It extended to till August. So now we have, within the state, we have fixed some targets, and we have now we have distributed for some 10 districts. So whenever the crop cutting expense gets over, then simultaneously we should not wait for the end result of the last person for crop cutting expense. We should, as and when it gets over, then we have to calculate, and we have to send the bills to the company, and company has to release the amount. So that is my request. As likely I said, we are in the process of digitization, and the digital crop survey is being done. So if it's better if we integrate with this PMFBY, then I think from next year onwards, at least we can have a clear cut, and a genuine farmer gets the insurance and he is benefited. That is my point. Thank you so much.
Thanks a lot. In fact, I can see a very clear call on the review of how threshold yields are to be constructed, as also some request for additional finance via subsidies, caps, everything. Well, that's a debate going forward. Thanks a lot for that. Special Secretary, Government of UP, Shri T.K. Shibu. The question is similar. The thing is, what have you seen as decisive factor to identify what's your best suited art model? And, what strategies would you take to expand coverage within your state? And you are the largest state.
Yeah. Actually, UP has got 9 agroclimatic zones, and there are risk areas, particularly in Bundelkhand and eastern UP, where flooding is almost every year to a large extent. And western UP is safer to a larger extent. So we have divided UP into 8 clusters, and wherein the risk areas have also been distributed among those 8, so that the insurers participate properly. Otherwise, if we put Bundelkhand in one package, or say eastern UP in one package, maybe the insurers will not like to participate in that, because there is a lot of risk associated with that. So, and the historical claim ratios also will look at it. For instance, there are districts which have low claims, and there are districts which have high claims. So that basically what I am talking in the first point, the pooling of the risk will take place in the clusters. And thirdly, I want to point out the farmer awareness. Actually, UP farmers are very aware, but at the same time, they would not like to put some money in, say, insurance or something, when they know that they will not get the money back. So there is like a kind of price pinching for them. So the coverage limits as well as the assured payments, the certainty of the payment, if we can reach out to those farmers, I think they will be made to understand through IEC and other things. So we need to tell the farmers, and their acceptability is important for the criteria for this one. And then the institutional readiness. Like for instance, the Government of India, Ministry of Agriculture has come up with so many technology-based innovations, like crop cutting experiments, AgriStack, part of which the DCS is, the DCS data, plus the AWS weather stations and the winds. That program is coming up, YesTech. I think we can all use the data interoperably so that we can have a better assessment of the risks, and it will be data driven basically. And lastly is a budgetary consideration, which is not much, because our farmers coverage is very low. This Rabi we could only cover around 15.92 lakhs farmers only, which was roughly around 3 or 4 lakhs better than the previous season. So as such a large state, I think we should have covered more. So we have not been able to reach our farmers. Then there is a lot of crop diversity going on in horticulture and seasonal crops. So we will need some weather-based ARTs, and for cereals we have always had a yield area-based ART. So this for the criteria of our ARTs. And as far as experience is, as I've already told you, that we have divided UP into 8 clusters. So 7 clusters, the government didn't pay out anything, and the insurers were also profited. But at the last one, the government had to pay out around 14 crores, and the government saved around 264 crores. But such a large state, I don't think that is of any value at all until unless we cover every farmer. And the affordability also increased, and the insurers also participated. But as I told you, the challenge is reaching out to the farmer. We need to do more IEC campaigns, plus we will need to reach out to them through the CSCs, KVKs, or say bulk enrollment through FPOs. And I think even Panchayat Sahayaks, we have around 57,000 Panchayats in UP. So there is a Panchayat Sahayak in every Gram Panchayat, so we can make use of them. And then we have the National Rural Livelihood Mission. They've got around 3 kind of staffs, which are Pashu Sakhis, which are involved in animal husbandry, and Krishi Sakhi involved in agriculture, and we have banking correspondents. I think we can make use of them to reach out to the farmers. We have got a large manpower, and I think we need an orchestrated effort for that. Thank you so much.
He holds out that promise of perhaps the best exhibition of how PMFBY can work, not only just as a large state, but also with regard to your comments on how to innovate in distribution, exploit more of affinity groups. That's a language insurance companies understand. So thanks a lot, sir. I'll go to yet another supplier of insurance, President Bajaj Allianz General, Shri Ashish Agarwal. Again, here, one of the concerns has been, which has also been alluded to by your industry colleague from ICICI, that certain companies have quoted extremely low. The reasons, some of it are obvious to us industry guys, some of it are pure mystery. Okay, so what do you think should be the right approach? And additionally, do these models actually, enable interest, increased interest, or improved access to farmers?
Thank you very much, sir, for this opportunity. The question what is asked is that the rates which are being quoted, whether it is correct or not, right? In that way. So I think
the industry quoted.
Yes.
Not you. Huh?
Yeah. So I think a lot of points have already been discussed, and rightly said by Ritesh sir, that when this ART was introduced, the objective was completely different. The objective was that the state governments will take conscious decision, they would analyze the risk, and they would properly select which model will be suited to them. But instead of ART, it has actually become now premium minimization technique. It's not like ART, right? That's what has happened. So initially, when this model was launched, so we thought initially that we'll go a little cautious because this is a multi-stakeholder scheme, and every stakeholder has different interest in that, right? So as an insurance company, we are very cautious about the risk. We don't want to get into anything which can kind of impact the interest of the company. So we were going very slow in that way. But then somebody from the industry or some expert, basically they only advised us that when Saiya Bhaiya Kotwal, to dar kahe ka? So when we know as an insurance company, there's not much risk to us. Our risk is only 10%, and that too, we know that there are many portfolios are there which are bleeding and where the loss ratios are more than 110%. So it's always better than go for this kind of a scheme where you know that your losses will not go beyond 110%, and also you'll get huge volume in this thing. So that was the kind of approach which insurance company had taken regarding this 80-110 scheme, right? And I think it's not the right thing. Fortunately or unfortunately, for the last 2-3 years when the scheme has been launched, ART has been launched, the weather is quite good. This year also, IMD has announced that it's going to be 105% of the long-term average. So hopefully this year also, this will not impact that much. Whichever company has got 80-110%, they will have to refund that money to the state government again. But ultimately, this is setting a wrong trend. Whenever anything will happen, any significant risk will come, any drought will happen, at that time it will become very difficult for the state government and also to the insurance company to pay the claim. And ultimately in this entire process, farmer will get suffer. They will not get claim in time, then they will not get the adequate claim also. So I think in that way, this thing should be considered properly while selecting this thing. As an insurance company, I would still, because we have actuaries, we have underwriters, we have reinsurance, and we know that how this risk should be taken. So we should not go along with this kind of the competition. We should not, it's always a competition, though we know that it's not the right price what we are quoting. But because competition is huge, every company has different interests, so ultimately some companies quoting this. But I'm sure after few years, company will realize that this is not the right way to take an insurance risk. And I'm sure regulators, Government of India will also come up with some kind of restriction or some kind of guidance which will kind of restrict the insurance company to go very aggressively in this model.
Thank you. In fact, just as a comment, there are constraints with regard, regulatory or governance constraints internally through your product management and risk management committees as to whether you can actually quote below burning cost. But quoting below burning cost, aside from competitiveness, actually distorts the original intent of the model. Okay, so that actually takes the state for a surprise. And that's, not fair. So while we guys are quite smart with our numbers, okay, I think we should also have contractual empathy. Okay, but thanks a lot for that to Agriculture Insurance Company, the elephant in the room. Okay, so you are the largest here, and what do you think are the important factors to be considered by insurers to actually pick up and pin for a particular cluster or a state what model you want to drive or prefer? That's one. And second, how are these models being looked at by the industry, that's the risk-carrying industry as well as the reinsurers? Please.
Thank you for this opportunity, sir. Sir, as rightly told by Ridesh ji, this 80-110 is a byproduct of AIC only. AIC only started this 80-110, but when it was started, it was done with a very noble purpose as a contingency plan, wherein against the tender floated by Maharashtra government, for one cluster alone, which is the bead cluster incidentally, there were no takers under normal PMFBY, and these models were not available at that time. So as a last resort, to support the state government to bring bead cluster also into insurance with the consent of GOI, it was given as a contingency measure. But later on, what happened, everybody knows. It has been taken as a general model, and because of the inherent attraction that loss caps are put at a very 110% and 80 on both sides, profit cap as well as loss cap, for state governments it became a very attractive option, and they used it as a general option rather than a contingency measure. From AIC's perspective, we actually burned fingers because of this 8110 also introduced as a general model for the governments to adopt. In fact, in the last 23 tender cycle, many clusters we have lost, wherein the L1 bidder has been seen quoted a rate which, as per our understanding, is way below the actuarial burn cost based price. And issue is governments also could not feel the pinch because of this undercutting done by certain players in the market, simply because last 2 or 3 years there was no such occasion to really time test this model of 8110. So had there been a catastrophe, the entire burden would, with an underquoted L1 premium, would have been on the state government. So such a scenario has not come, and still it should not come, but 8110 from AIC side, we are totally recommending either to do away with, or if at all it is implemented, shall be with a proper cap adjustment mechanism wherein insurance companies, this loss corridor or liability on claims shall be pegged at least 110% of the burn cost decided by MOU. Burn cost, not the underquoted price. So this will set right the market distortion which has happened already.
Yeah, but that's already written into your governance model.
This is one of
that you cannot burn your capital.
This is one of our suggestions, so that companies can quote at whatever rate they want, but your loss cap will be 110% of burn cost.
Thanks a lot for that, Rajesh. Thanks a lot.
I think
Please.
if I could come in quickly here, I think one of the suggestions, obviously the suggestion that we do away with this and find a better model, say 60, 130, 140, whatever, and can be a contingency thing. The second thing that you said was peg it to burn cost somehow, maybe 110 or maybe 100. One weird idea that I had was that why don't we tell the state governments to, if you have a saving, you redistribute it as a no claims bonus to all the farmers, and probably that will get more, buy-in in the next season. And so state की liability committed हो जाएगी कि इतने पैसे तो लगने ही हैं. And so then they will probably take a different view कि हम PMFBY लें कि यही लें. So I mean it's a weird idea, but probably when the group actually looks at it, does it work out well? But that burn cost thing, I think we are somehow, as I told in a few discussions to colleagues, that we are trying to put a band-aid on a gushing wound. I think it's like the model is insurance practices are failing, companies are not adhering to proper discipline. The model itself is leading us down a path which is a very slippery slope. We have not faced even one bad year, and we had done in that subgroup modeling for 1 in 10 year catastrophe, 1 in 30 year catastrophe, and 1 in 50 year catastrophe. So in 1 in 50 year catastrophe, this model would be completely blown away. And that's why Government of India did not, put its own money. And it was just given because, stakeholders were asking for it. But now I'm glad that AIC has converted. Avate Saab also seems to be coming over. So I think the industry should take a call and not put bandage on a gushing wound.
Sir, one more suggestion in this regard. Just your suggestion regarding redistributing this surplus to farmers.
That's a weird thing.
But it won't help. It will further distort is my feeling. Rather than that, my suggestion, our AIC suggestion will be, whenever there is a good year and there is a surplus, rather than plowing back to the exchequer, can't the state government and central government create a catastrophe fund?
I will tell you.
Where in bad year, you can take that.
Yes, we considered that option while writing the guideline. The problem with that is, if suppose tomorrow Avate Saab ends up collecting a pool of 10,000 crores over 2 years, right? The finance secretary of Maharashtra will say, boss, एक season के लिए scheme बंद, pool अंदर. Why? Because state finances, unlike what we like to think, are not very robust. वो pool ऐसा नहीं है कि वो स्विट्जरलैंड का pool है कि वो चल रहा है जी सालों साल 100 साल तक. Nobody, the people will just blow it away. They'll say अच्छा 10,000 crore यहाँ पड़ा है, let's take it, use it for salaries, use it for something else. We consciously made that choice to put that money back into the state exchequer, because so that nobody can take it out. So वो at least use हो जाए.
For want of claim share.
नहीं वो तो I think Secretary sir today made it quite clear that you have to, they will close the portal and not open it until you have done your escrow thing. So I think that should apply for everybody who has to pay up. They are supposed to pay up. So if they don't, then the portal doesn't open.
Thanks.
I am talking about claim share. Whenever there is a claim share of government.
So, gentlemen, thanks a lot for your time. I think we have overrun the timing, and I'm not wearing a helmet, and Ajay is getting closer to me. But very quickly, to the CEO of PMFBY, Agarwalji, you have any summary comments? There was an audience Q&A, but I'd first prefer to have any summary observations from your side. Please pass the mic to me.
So what I can say is that one thing that I have heard time and again is this is not insurance. That is the first thing I have time and again I have heard. This is not insurance. That is the first thing to be kept in mind, that I have heard in DFS from insurance companies. So that is the first thing, that this is an alternate mechanism. Secondly, yes, as stated by the speakers, we haven't seen a very bad season which may show the real picture or the real outcome of opting for these mechanisms. But the experiences have been, I think, mixed. Some states have gained, some have lost money, and it's time to review these, and in the interest of farmers. And we all know that the underlying principle is that we are basically, this may be a partially a wrong statement or politically incorrect, but we are here, as one of the speakers said, that we are not here to save the money, but to cover the risk of the farming community. So from that perspective, I think the ministry has rightly now constituted a committee to reevaluate the entire thing, and let's see what suggestions are received and what are the opinions of the stakeholders, and ultimately what is the outcome of that committee as a recommendation. That's what I can say.
Thank you, sir. Ajay, I don't know to the time part, but if you want to open the audience for questions, that's up to you, or you can schedule it later. Thanks a lot.
Thank you, Sri Thomas, and thank you to our esteemed panelists. Keep that applause going. Thank you for those lovely insights. And with that, we now step into a very interesting presentation. This one is on harnessing Earth observation data from digital agriculture and crop insurance. And we have just the expert we need. Ladies and gentlemen, please put your hands together for Dr. V.M. Chaudhary, Group Director, Agriculture Science, NRSC Hyderabad. Dr. V.M. Chaudhary is the Group Director of the Agricultural Sciences and Applications Group at the National Remote Sensing Center, a part of the ISRO, Indian Space Research Organization in Hyderabad, as we know. Throughout his career, Dr. Chaudhary has focused on water resource management, agricultural water management, and the application of remote sensing and GIS technologies in these fields. Please give a loud round of applause as we have Dr. V.M. Chaudhary come up and take over this dais with a very, very interesting presentation.
Thank you. Yeah. This is. Thank you. Good evening to all of you. Yeah. So, since morning we've been talking about crop insurance and the PMFBY, how these technologies can help in this achieving the objectives of PMFBY scheme. So, for the last few years, this phenomenal growth, phenomenal integration, assimilation of the satellite data has been there by almost like all the organizations, and then lots of awareness was already created. And interestingly, many of these has been successfully been implemented by many of the states. So I'll briefly mention what is being done by NRSC and what all the contributions in this direction. Quickly, as the time is limited, so I'll just quickly go through some of the slides. So of course, I don't have to mention much on how these spatial technologies can help in agriculture sector, especially in the digital agriculture domain, as well as PMFBY scheme implementation. Of course, the foremost thing that we start with is crop inventory, and then second one is the crop production estimation, and then kind of the agriculture drought assessment, and then of course horticulture, cropping system analysis, agroforestry, and crop stress and damage assessment. These are all the many of these important areas that satellite technologies has been implemented nationally and globally. And of course, the gamut of these sensors, the satellite data that is available, maybe you take from Indian satellites, or maybe from the European, and maybe from the American satellites. Lots of data and sensors data is being available with the multi-resolutions, maybe of the optical data, maybe of the microwave, maybe of the hyperspectral, maybe of the thermal. Many of this data is being available in the open source domain, and then many of the data has been costing and also been available. So, coming to our insurance, the topic of the discussion today for this thing, how this EO, how this Earth observation, how we can harness the strength of this data for this towards achieving these objectives. You start with the risk zoning, where you do it, how this flood zoning, how this drought intensification, drought vulnerable zones, drought characteristics, how you can characterize the drought, and then how, notification crop areas, enrollment, and then digital technologies, the monitoring of this using the spectral indices, how this NDVA, LSW, many of the spectral indices, how we can use them for our purpose. And then, of course, loss assessment and yield estimation. That is one of the foremost things that we've been advocating. The STEC technologies, earmarked for estimation of this crop yield forecast, and how it leads to the claim settlement. This is all the gamut and the cycle of this crop insurance, how this EO data can be helpful towards this direction. And of course, in this direction was one of the major initiatives that we've been took with this Maharashtra state government and the Maharashtra State Remote Sensing Center being initiated in the phase 1, where we've been developed some of the technologies, where we've been operationally implementing at the state level, where we started with the crop inventory, where we've been crop surveillance, where we've been going for this crop yield monitor, natural calamity, the damage assessment, how this kharif sowing progress and harvesting progress, how this can be done using the satellite data. This is one of the applications that were being done for this Maharashtra state, have been successfully been implemented, has been continuously is going on. And that was the first state to adopt this technology-based yield estimation that has become a role model for adoption for the other state governments. Especially, it has become index for initiation of the things by PMFBY, the Ministry of Agriculture. And where we do is, the paddy, cotton, and soybean things have been using simulation modeling approach. Of course, when you do is the simulation modeling approach, of course, there are some of the limitations are there where you need to go for the crop management practices are being generalized. And sometimes this pest and disease information is being not accounted. So how we can overcome, how we need to overcome these kind of problems. So the gamut of the information that is available with several state governments, or maybe the state agriculture universities, maybe ICR institutions on these crop management practices, crop generic information kind of thing, if you can make a pool of information that can flow into this kind of crop simulation models, so still that's the scope for this improvement of these technologies for yield forecast, especially in the simulation model, not only for simulation models, even for other approaches that has been earmarked in our STEC technologies. Of course, another interesting that we've been initiative that we did with Madhya Pradesh government is also doing with MPGIS project there, where we've been implementing machine learning algorithms for estimation of the crop yield. where we have been doing this Madhya Pradesh Council of Science and Technology and then MP, Madhya Pradesh State Electronics Development Corporation Development, that has also been implementing this particular project, say where we have been implementing, especially for the Kharif season, we've been soybean and paddy and then wheat. During the Rabi season, we've been doing for this particular exercise. This is where we've been using some of the inputs that we're using, input layers like optical and microwave satellite data, and then weather data inputs, soil inputs, there have been crop yield data. This CC historical data has been implemented for this machine learning based yield estimation, where we've been successfully, where we've been 60% and Halkas, like where we are getting plus or minus 20% with respect to the crop CC estimates, whereas in case of 75%, Alka's wheat yield estimates are been within the range of plus 30% with respect to CC estimate. This was been reported by our Maharashtra when we work with this Madhya Pradesh and all the things like with CC estimates. Of course, the crop damage assessment is also part of this methodology. I mean, part of this we've been advocating, we've been providing technical assistance to this state, Madhya Pradesh, where we've been assessing for how this hailstorm damage, how these spectral indices, variations of the spectral indices are normalized NDVA and LSWA before and after, what is the delta changes that has been indicating your crop damage assessment, that kind of things we've been using the EVO data. And this is how this been inundation pattern that was in the backscatter microwave data. Because of the Kharif season, sometimes getting optical data is a big question, so we've been advocating using microwave data where been backscatter coefficients are being, any slight changes where because of the inundation, that the deep, sudden dip in your backscatter will be likely to indicate what kind of damage is being there, have been successfully been implemented for Madhya Pradesh, have been implementing for them. This is how totally been synthesized, integrated the way, how this crop, what is correlation, what is RMSs, what is this accuracy levels, where its performance, like suppose if you say a paddy, it is been high accuracy in kind of irrigated areas, whereas in case of gram, it is the Bundelkhand region, it is getting, whereas in mustard, relatively lower accuracy because of the small plot size. These are all some of the observations. So now the challenges are how to overcome this kind of problems that we've been come across while implementing this MPJS. So these are all the issues that we've been addressing. We've been trying to improve further by taking additional parameterization. And overall, what is the, our experience of this is, the dependence on inaccurate input data is the major challenge. At the moment, because most of the ML-based approaches that depends on this CC data, so if your CC data quality is good, then it's obviously this output is good. So that is the quality, integrity of this data is the most important part for the success of this particular ML-based approach. And another important project that we've been taking up, the Jute Corporation of India as well, where we've also been Jute Crop, we've been working where we've been, crop condition stress is also being addressed. And then you are being jute biomass is also, fiber is also been assessed using the machine learning based approach. This is another interesting area we've been also being doing at national level. We're doing this project, we have taken up. And one more important issue, like as for the government of India, that one of the mandatory indicator for the drought. So one of the indicator is, if you see it, crop planning or sowing status, normally till other day we used to get this data from the tabular information that had been aggregated at the state level probably. So using like the NRSC, what we did is our satellite, like microwave satellite, RSat, we've been able to develop this all India crop map, all India Kharif zone map by the end of August. That is the one of the important parameter for declaration of the drought. So that has been taken up and been successfully done, and then we've been last 1 year, we've been trying to develop the methodology. Now we've reached a stage where we can operationally implement at the national level. We've been working with MNCFC, the data is also will be shared with MNCFC, and then so that it can be uploaded in the Krushi DSS for accessing it by the all stakeholders. So that is what another important. So this is how exactly this is showing progress for the every weekly progress. That has been the process, entire chain has been automated in our entire NRSC, National Remote Sensing Center. So every weekly showing progress for the during Kharif season, we have been integrating this UIS4 data. That is what the microwave data has been done for entire India. So another important, when you talk in terms of drought, not only drought indicator, any area that we need to go, a vulnerability of the droughts. A particular area is, what is it, is it agriculture drought? Is it meteorological drought? Is it a hydrological drought? So we've been categorized for Madhya Pradesh and Maharashtra. We have been some analysis where which are the areas that are been experiencing no drought, which are the areas experiencing only agriculture drought, which are the areas experiencing both meteorological drought, which are the areas experiencing only hydrological drought. So any combination of this, otherwise any particular area is being affected by all three kinds of droughts. So this is kind of vulnerability analysis is also required for a kind of a risk zoning mechanism for maybe for our insurance sector. This is also one of the important area that we've been worked. And another important area that in the dot is because one of the granularity is the most important part when you go for the dot mounting kind of thing. Not most of the time that we are using the high resolution, coarse resolution gridded data of 25 kilometer, maybe the 20 kilometer, 10 kilometer. Now with the satellite precipitation kits of 5 kilometer chips data or any other satellite now, the time is there to downscale this data for that. We need to use the data for subsequent for the dot monitoring. So there's where the researchers have been working with different techniques for downscaling that we tried with one machine learning approach for downscaling of this, like high resolution, that 5 kilometer chips data, how it can be downscaled to 1 kilometer. And subsequently, how this 1 kilometer downscale data can be useful for the dot monitoring, where the granularity instead of the sub-district level, can we go up to this village level, or this kind of things have been tried with our NRSC win. So this is how is nationally we've been our groups at NRSC, the dot vulnerability, where you need to go for this exposure index, sensitivity index, adaptive capacity index, and how this agriculture vulnerability index is to be generated for the entire India. Thanks that Minister of Agriculture recently, they shared the entire data of the agri-census data that has been used for entire generation of this agricultural drought vulnerability index for the entire India. So this is another interesting, this is also can be shared with the Krishi DSS shortly. We are going to host it in this, so we'll be sharing to the MNCFC so that we can share this data. And this is of some kind of analysis who have been done for the, especially for Andhra Pradesh, where especially where this vulnerability class corresponding to this vulnerability, how many, for the last 35 years, how many times a particular area has been affected by drought, how many times it has been affected by severe drought, how many times it has been a moderate drought, and correspondingly, how this variation of the detended CV of the crops in a particular districts for the last 35 years of the DES data has been analyzed. So this kind of analysis also been possible, and it can be possible, and it will be of the great help for making of the risk zoning kind of thing, for planning for maybe the premium detection kind of thing. This has been done for this major crops for cotton, dry chilies, groundnut, rice, and maize. And apart from that, apart from the drought, one more peril that we need to talk about flood. Near real-time flood mapping is being taken up by the NRSC using the all kind of microwave or then optical data, where been flood entire flood scenario has been 20 states, so the 15.5 million hectares is being affected, and this is how been real-time. And of course, this data is already, we started giving to the MNCFC so that it can be, it can be hosted in this Krishi DSS also been there for the Assam, Bihar, and then how this particularly, how much of area has been affected. So this is also being done. And then another one in coming days, maybe we've been working on how this every week, this in case all India level, we've been trying to generate the framework where every week that crop, Kharif zone area has been affected by flood or kind of perils kind of things we've been trying to address, and is another one is going on important. And one more important area that we've been, NRSC has been recently taken up, and last year we've been developed a methodology. We're trying to develop at the national scale for 11 cycles of microwave data has been used for the mapping for Kharif's rice zone area for the entire India. So this is what been Kharif zone area map for the national scale. So this will be not only useful for insurance sector, even for irrigation and agriculture sector. Also agriculture planning, even for irrigation management. Also, it will be a great input for a sowing progress. Not single time map. It is during in-season crop map. Will have a greater responsibility, and even this data can be of useful for our crop-specific drought monitoring, in-season drought monitoring. Also, we will be talking mostly on the in-season any particular crop generic. So with this, we'll have the crop generic, crop specific drought vulnerability assessment can be made. And one, of course, this is the same thing like if the basin-wise how this is going on. Basin-wise, this how crop sowing progress is being going on. This has been addressed for this is all river basins. This is also will be shared with Krushi DSS. This is of course for the Ganges basin. And this is how this sown area progress Kharif season and then harvesting sown because to build this market intelligence, this not only the sowing progress, the harvesting progress is also one of the important parameter that we can work it out. We've been working out. So this is another important variable that we've been working towards the digital agriculture initiatives. And then one more important like paddy simulation, yield simulation at the national scale we have taken up using the simulation model approach for the entire India. For the 23, 24 also been maybe operationally probably the next year. We've been for framework has been ready. So we have been generated for the last 2 years. Now the coming next year will be we'll be doing for operationally with the help of will be shared to the MNCFC is already in talks. Then we'll be sharing with that. Of course, this program this accuracy has been differ with the state-wise. Of course, this has been mentioned over that. This all the accuracy has been assessed using this DES estimates. So that is we'll have to see what is the reference is to be to improve this further framework. Similarly, we have taken up this wheat also for the national level wheat map have been generated and the wheat production also been estimated using the simulation model for the entire India. This has also been framework has been generated and then this year been operationally so that next year onwards that we can do this further exercise of wheat also national level wheat mapping. And this is of course this sowing progress and harvesting wheat progress for entire India. And when you integrate this other climatic parameters, the temperature parameter that we just can understand what is the likely impact on the yield kind of things like. This is what another important study have been initiated by the NRSC. Of course, this agriculture land assessment at the national level, like what is the rice wheat crop and then rabi crop other than wheat and this kind of information that has always been can be possible. Another important study what we did with another phenology when is the start of the season, what is the end of the season, what is the length of the season. So these are all the parameters at the national level been assessed and have been kept at our have been doing and then all information whatever being generated will be in the process of sharing it to the Minister of Agriculture. So this is all. Thank you very much. Thank you for patience here. Thank you.
Thank you so much, Dr. V.M. Chaudhary. With that, we now move towards comprehensive risk protection, a case study for revenue insurance implementation. And we have Shri Mangesh Patankar, Regional Head C, Munich Re, Mumbai, coming up. A quick little bit about him. Mangesh Patankar is the Regional Head for Agriculture at Munich Re. He is a seasoned professional with over 16 years of expertise in climate risk management and reinsurance across the Asia Pacific and Africa. He brings his deep technical knowledge in weather-based insurance solutions, agricultural underwriting, and climate resilience strategies in the upcoming presentation. Can we have a huge round of applause for Shri Mangesh Patankar, please, as he takes over the dais.
I'll be a bit brief here. I think we have been discussing about the topic of revenue insurance, at times even price insurance, for a very long time in India, for last about 25 years. What we'll do is quickly today, we'll try to figure out the basic concept of revenue insurance as reinsurance companies understand them. Second is, which are the key markets for the revenue insurance products. Third, what is the farm income insurance scheme which had been there in India actually about 22 years back. We try to figure that out a bit, why it failed. What are the current provisions as far as the price risk volatility is concerned? What are the current provisions in India? And of course then what is the price volatility for the major crops under
MSP as well as in the commodity exchanges. And of course, I will try to propose a few way forward ideas, but feel free to interrupt as well here. Quickly about the concept of revenue. Revenue essentially means the production multiplied by the price. So if you have revenue risk, what it means, you are in a way adding two elements here. You have the production risk element and you have the price risk element, which means obviously in all probabilities, if you are covering, let's say, a simple yield index product, the way in which we are doing it in PMFBY, obviously that compared to a revenue insurance product, at times there will be a bit of a price difference depending on the correlation between the price volatility and the yields. So that needs to be obviously understood a bit further. Quick example, let's say 3 scenarios. We have a crop, let's say wheat, 20 quintals per acre productivity, and let's say the guaranteed price is 2,200 rupees per quintal. Let's say in first scenario, the actual yield drops dramatically from, let's say, 20 quintals to 12 quintals. But the price in the market, as determined by, let's say, the revenue insurance guidelines, is at 2,200, which is exactly at the guaranteed price, or let's say above that. The actual revenue here will be about 26,400 as against what it could have been, which is 44,000 per hectare. And you have a payout case of 17,600. Second case where the actual yield is actually optimal, let's say 20 quintals as it is, which is the normal yield in a way. And then the price in the market drops to 1,800, which is quite a bit low than 2,200. Obviously, you have a payout case of about 8,000 rupees. Third case, where let's say both things fall, both things go against the interest of the farmer. You have the yield loss because of various climatic issues, and you have a bit of a price related fluctuation as well, going adverse to the farmers. Then in that case, the actual revenue will be 21,600 as against the payout loss of, let's say, 22,400. Now, two things to be considered. One is that the price risk here needs to be assessed from forward-looking perspective. A lot of people simply confuse the price risk with yield risk. I think the tendency is simply to look at the historical prices and figure out what the volatility is. Actually, price risk is very, very forward-looking topic, particularly in the era like the tariff-related issues that we have seen these days from US. I think from that perspective, price risk is always a forward-looking topic, not a backward-looking topic, which means you cannot really quickly look at the price trends historically and figure out what is the price volatility going to be in the next few months. Second, it will need quite a bit of government subsidies, because we are not talking about only the yield volatility, but yield multiplied by price in a way. What is not typically covered in a typical revenue insurance is, first of all, the price changes across multiple growing stages. The price that you see in the market just before harvesting or just before the cutoff date. And of course, distress selling, because this is a big topic in India. Quickly about the other markets, quick glimpse. I have picked up 4 different markets here. Some of them are fairly big as compared to India, like US, almost 4 times bigger than the Indian market of crop insurance. You have Canada, which is almost slightly sort of smaller than the Indian market. You have Brazil, where interestingly revenue insurance as a concept since last 3-4 years hasn't been implemented properly. And then of course Taiwan, where you have a very, very small market, really concentrated in an island. Various types of commodities, if you see US, Canada as well as Brazil, they prefer to cover the grain crops, the field crops. Taiwan, on the other hand, goes for banana, sugar apple, and sorghum, these sort of crops that are covered. As far as yield determination is concerned, given that many of these are very matured markets, very big farms, obviously, lot of times the individual farmers' yields are considered here. Price determination, interestingly, in most of these markets happens through fair bit of developed commodity exchanges. As far as subsidy levels are concerned, they are fairly high, at least considering that these are fairly developed nations. From that angle, the subsidy levels are tremendously high. So don't compare that with the Indian subsidies. Coverage levels, if you see, those are fairly low, because the government in a way appreciates that this is a very, very volatile product. So from that angle, the deductibles are high, the coverages are low. As far as the regulatory bodies are concerned, most of the times this would be the Ministry of Agriculture, or in case of US, it would be Department of Agriculture. As far as the farm income insurance scheme is concerned, so that was about the international sort of experiences. Let's talk quickly about farm income insurance scheme, which was actually implemented in India about 20 years back, 2003. The objective was obviously to give income protection, in a way revenue protection to the farmers. This was launched actually in about 18 districts across 12 states. About 1.8 lakh farmers were actually insured under this. And in a way, fairly high amount of premium was also collected from this. 14 crores in 2003 was a very big sum. Let's appreciate that. Why this did not get fully implemented? Bit of political reason as well, because after 2004, another regime came in. But apart from that, of course, we had low penetration, low awareness, lot of issues around what the price benchmark should be under this, because we have absolutely fragmented market when it comes to price decision for certain commodities. The commodities themselves have a lot of varieties, and depending on the varieties, depending on the regions, the prices change a lot. So there was a lot of sort of confusion around which price should be benchmarked. Of course, challenging in assessing the crop damage as well. I'm talking about 22 years back here. The CCs were not as advanced, the monitoring was not as advanced. Of course, claim settlement delays were also to be blamed. Now, if we leave that unsuccessful pilot aside, let's also take a quick look at what sort of price mitigation mechanisms are there currently in India, which are developed by government bodies, various different government departments, ministries. First is, of course, MSP, which in a way protects the farmers from super low prices. What it essentially does is it gives a floor price, right? Somewhat like 80-110, where 80% in a way is the base loss ratio. Just like that, you have a base price for the crop, in a way, right? You have obviously an institutional backing here by the Ministry of Agriculture and Farmers Welfare. You have quite a few commodities covered, because this is essentially a very politically sensitive topic. I think a lot of farmers actually rely on this mechanism to have at least fair bit of revenue from their farms. As far as price protection mechanism is concerned, simple. The idea is to protect against the market price drops by ensuring a floor price. As far as the working mechanism is concerned, here you have a CACP, which proposes the minimum support level of the price, and then the Cabinet Committee on Economic Affairs approves, and then after that, of course, FCI and AFED, they come into picture. Second mechanism is PSF, Price Stabilization Fund. This is slightly different. This actually is more like an MRP sort of structure. The idea here is to protect the consumers, not the farmers, consumers from very abrupt price shocks. And the commodities that are covered here are usually those perishable commodities like onions, potatoes, and so on. Here, the ministry that is concerned is actually Ministry of Consumer Affairs, Food and Public Distribution. So very different ministry and very different motivation as well. The central fund here basically provides the interest-free working capital for the states, and then the scheme runs. The third mechanism is more like a market driven mechanism, NCDX, MCX, and other commodity exchanges that we see in India. The idea here is to do price discovery and price risk assessment or management through things like derivatives. Here the regulation is done by SEBI, and that means the concerned ministry here is actually Ministry of Finance. Now, at least about 20 to 30 commodities currently are there on various exchanges. Unfortunately, here we don't see too many farmers associated with these with this mechanism. There are usually big hedgers or at times speculators who trade on the agro commodities, who actually play with these options and futures. So we have basically 3 different mechanisms already in place. Even if we go beyond revenue insurance, even if we start thinking about revenue insurance, even before that, I think we need to appreciate that there are 3 different ministries involved here. Now, what happens, let's say, when I compare the MSP with the actual mandi prices? If you see, MSP in a way, at least if you compare the big mandis here, in a way it has been fairly effective. The mandi prices don't go haywire. They don't really fluctuate too much from what you see in MSP structure across different crops. And that's a big success of MSP. Irrespective of all its shortcoming, I think let's appreciate that the mandi prices have been fairly sort of accurate and fairly correlated with the MSP that has been set by the central government. Second part, what happens for the commodity, with the commodities on, let's say, exchanges like NCDX? You have things like cotton, turmeric, and so on. And here as well, we don't see too much of fluctuation. The highest and lowest sort of prices are fairly in line with the closing prices. And that is another issue. We don't have too much of market volatility, and that's mainly because the current markets of futures, of options are not liquid enough. Unlike the other countries that I had mentioned, like US, where you have a superb liquid sort of commodity market, we don't have that in India. Let's appreciate that. And from all these angles, if we were to look at the way forward, I would quickly say that, first of all, our price discovery mechanism, if we just talk about market-linked price discovery, that seems to be slightly underdeveloped because there is a lot of intervention from various ministries, right? So from that angle, we don't have a market-linked price discovery system yet in India, properly developed. Second, of course, you have overlap with a lot of existing schemes. If you already have MSP, do you really need a separate revenue insurance product? Are you over-insuring the farmer? That is the question that you need to ask. Third part, you have a bit of a lack of technical expertise as well, because when I talk with the insurance companies, I think their idea is to simply look at the price risk, historical price risk, and do the pricing based on that. Unfortunately, it doesn't work that way. You need to look at the future price volatility expected in the market, and that could be told only by the market forces. There is something called implied price volatility. We need to take that into consideration. Again, markets decide that. We cannot really look at simply the historical prices. The way in which we look at historical yields to come up with the burn cost, you cannot really do the burn cost calculation based on simple historical prices. So that's a very, very sort of big technical input that is missing currently. And of course, challenges in unification. As I said, lot of different varieties of paddy, wheat, and etc. Because of that, there are a lot of regional markets and commodity type specific or variety specific markets which are there, and their prices are very different. So let's appreciate that. If we were to really look at revenue insurance, few things that we need to fix. One, the improvement on MSP targeting and procurement efficiency. Second is, of course, promotion of futures and options, because lately what I have understood is for some of the contracts, futures are banned by the government of India for whatever reason. But I think that needs to be fixed, obviously. We need to promote initiatives like ENAM. And of course, we need to strengthen the domestic agriculture market in general before we even start talking about revenue insurance and promote capacity building for insurance companies. That's it from my side. Please, yeah. I see one question. I hope I am allowed to take it. Yes, please. Quick one. Thanks.
Thanks for an insightful presentation. My question is regarding this MSP thing. Out of 22 notified crops for MSP, we observe that not many crops are actually procured by the states or government of India. So there have been examples of Bhavantar differential pricing,
Indeed,
which Madhya Pradesh has deployed to procure crops like garlic and soya bean, wherein the guaranteed price MSP and the differential of the prevailing mandi prices, which you also alluded to, the model price of the mandi minus the MSP price directly lands into the bank account.
Farmer's account.
So that is a kind of trust model.
Yes.
My question to you is, how do you compare this back-ended trust model kind of thing vis-a-vis a structured and pointed revenue insurance scheme for the MSP crops which are not procured by the state government?
Yeah. It's a great question. I think a lot will rely on whether the crops that you are talking about, which are excluded essentially on ground from MSP, although on paper it is supposed to have some sort of support price. I think if it is excluded, then the real question is whether you can really put those crops on commodity exchanges and figure out the market volatility. Is it really going to be a fair one? Because you on paper at least have some MSP. If, let's say, you see clearly that MSP is not being applicable on ground for certain crops, the best way is to simply remove MSP and experiment with such crops on NCDX or MCX or any other markets and figure out how volatile that structure is. And based on that, take a call whether revenue insurance is a better way to implement price protection mechanism for the farmers, or let's go back to MSP. So that is the question that we need to ask. Really. Thank you.
Thank you, Sri Mangeshi. Thank you. That was lovely. Yes. And I know a lot of you want that little dose of caffeine, a little tea, a little coffee, but we're going to do it in a working model where we continue with our sessions due to paucity of time. And if you really need to, please go get yourselves a nice hot cup and come back right in. We move into another very interesting session. This one is on supporting farmers through risk resilience for agriculture sustainability, universalization for comprehensive crop protection. I'm going to request our moderator to please come up and then also call our esteemed panelists. We have Shri Chandrajeet Chatterjee, Director Crop Insurance, DA and FW, Government of India. Shri Chandrajeet Chatterjee is an officer of the Indian Statistical Service from the 2010 batch. He's currently Working Director Crop Insurance in the Department of Agriculture and Farmers Welfare, Government of India. His major responsibilities include subsidy management, actuarial interventions, technology implementations, and capacity building under the PMFBY. Please let's welcome Shri Chandrajeet Chatterjee, and I request you to please call our panelists as well. We look forward to an engaging session.
So, good afternoon, everyone. So I think we have decided consciously to skip the tea break because we are running short of time, but I'm told that there's option of tea outside. So if somebody wants to have a cup of coffee or a tea, you can go out and get the cup here. So I'll continue in the meanwhile. So before I actually work on the presentation, and on the screen it shows we have 40 minutes, I would request my panelists to kindly join me on the dais. So starting with Raghunandan Rao sir, Secretary Agriculture, Government of Telangana. Sir, I would request you to please come on the dais. Aruna Rajoria ma'am, Commissioner and Secretary, Government of Assam. Ma'am, if you can please join. Siddiq sir, Secretary, Agriculture, Animal Husbandry, Government of Jharkhand. Rajan Vishal sir, Secretary, Agriculture and Horticulture, Government of Rajasthan. Dr. Lavanya ma'am, CMD, Agriculture Insurance Company. Shri Sundar Rajan, Director Tea Board, Government of India, if you could also join. Yeah. And Azad Mishra ji, Head Rural and Agribusiness, HDFC Ergo General Insurance. Yeah, so can I have the presentation? So sir, I would just run through the slides before I can take the questions and ask you to answer to the questions. Yeah. So a lot of discussions have happened since the morning about how we can further increase the coverage in this scheme, because a lot of strides have already been taken, that is well known, but what more do we need to do, how much efforts we need to put in, and in which direction these efforts need to be kind of focused is the main idea behind the slides. I will just run through these slides to give a context to what we are discussing here before we actually pose the questions to the panelists of what their thoughts are on having the universal. So it is a topic that we are well aware of, that how the universalization of the crop insurance should actually happen. So if I can just, next slide. Yeah, so this is the basic situation right now in terms of the sharing of premium subsidies. This is well discussed all across the day. So if you see, the basic criteria of premium subsidy sharing is 50-50 between the state and the centers for most of the states, barring the northeastern states where it is 90-10. But there is also a different alternate risk transfer models under which exactly this does not apply. So we see there is a capping which has been put, because our intent is to have the farmer's subsidy capped at a very low level, so which is affordable for the farmer. So as per the guidelines for Kharif crops, it is 2% of the sum insured, 1.5% of the Rabi crops, and 5% for the commercial and the horticulture crops. So this is as per the standard guideline provisions that we have. Now actually what has transpired is what we have on the next slide. Next. Yeah, so if we see the actual data based on what has actually been adopted by the different states, is that the farmer share which comes out to be out of the total kitty is about 12%, whereas 48% is borne by the state governments and 40% is actually borne by the central government. So if we analyze the total kitty of the premium that is being collected right now, about 12% is contributed by the farmers, 48% by the state governments, and 40% at the national level by the central government. Besides, there has been a lot of talk about, in fact, we had a committee under the additional secretary with the stakeholders, various stakeholders of the insurance industry as well as the state governments. There a kind of discussion transpired as to whether we can have more support from the central government coming in to kind of incentivize the states to adopt larger coverage across the agriculture sector. So a concept came in whether we can shift to a 60-40 kind of a model, where 60% is actually borne by the central government and 40% is borne by the state government. So if we see on today's rates, the increased premium liability as far as Government of India is concerned will be about 4,015 crores, which may not look like a big deal, but we'll talk about the pros and cons of that as well when we go forward. Next slide. Yeah, so this is one thing which has also come up in the committee which I was mentioning about, that whether we can kind of nudge diversification of crop through taking over some of the responsibilities in terms of the premium liability for crops other than paddy and wheat. For example, in millets, pulses and oil seeds, we have seen wonderful experience in Maharashtra and Rajasthan, how they have adopted the pulses, oil seeds and millet crops. So that also I'll talk about in the next slide. So whether we can incentivize by some method, mostly in terms of higher premium liability to be taken on by the Government of India for pulses, oil seeds and millets. That is the concept here. Next. Yeah, so this, if you see, sir, right now, in terms of the insurance penetration, in terms of gross cropped area for these three categories of crops, in pulses, we are currently at 40% of the total gross cropped area in the implementing states, in oil seeds about 52%, and in millets about 24%. Next. So can we push this agenda of having more pulses, more oil seeds and more millets farmers covered under PMFBY? A, that will help in ensuring and providing risk resilience to the farmers of these kind of crops. B, we will also achieve crop diversification through this method. So if you see the sum insured figure at the last slide in the graph, last bar in the graph, which is 23-24 year, it has taken a huge jump in terms of the coverage in pulses, primarily driven by what I was mentioning earlier, Maharashtra, Rajasthan and Andhra Pradesh. So in fact, Maharashtra has achieved 95% of the total gross cropped area has been covered in 23-24. That's wonderful. And if you see the table below, we are trying to just examine and estimate what would be the liability in terms of the government of India, the state share and the farmer share, if we were to kind of achieve an 80% coverage of the pulses crops across the various states in the country, imputing using the current premium rates, which is about 12.3%. This is for oil seeds. If you see again, there's a tremendous jump in 23-24 in terms of the sum insured, again driven majorly by Maharashtra, Rajasthan, Madhya Pradesh. Again, if we see the calculations that we have done for the government of India, state government and farmer share, so it is being driven by the fact, we are coming to the fact that can we probably take the farmer's share borne by the central government so that we kind of incentivize these farmers to be more onboarded and we increase the coverage of these pulses, oilseeds and millet crops. Next. Similar kind of study we have done for millets as well, but here the majority share comes from Andhra Pradesh. It is Jawar, Bajra and Ragi and also Maharashtra. So again, the same question is being posed that if we see the farmer's share, which is probably being an impediment right now, if we were to move from the current coverage, say about 40% to say 80% of these crop groups in different states, what additional needs to be done? And maybe the one beginning point could be that the central government says that we take over the farmer's share and incentivize more kind of crop coverage under the crop insurance program. Next. So, and this is one point which Secretary Sir mentioned in the morning today, how do we in fact increase the saturation in the northeastern areas? And one again that the committee that I just mentioned about, there the stakeholders had raised this very critical point. They mentioned that in the northeastern areas, the premium rates have come down to such a level that almost the entire this premium liability is being borne by the farmer himself. And the state government probably has nil to very low kind of liability. So how do we kind of mitigate that situation is the question here. If you see, sir, farmers' premium is very low because state government, of course, the Assam state government has decided to go for a 100 rupee model where the almost the entire share is being borne by the state government itself. But if we see the state government plus farmers' premium is actually the correct kind of indicator of what needs to be borne by the central government if we were to kind of saturate the entire area in the northeastern region. So, next. Yeah, I think I've come to the end of the slide. So this is just to give you kind of context what we are discussing and how do we move ahead in terms of incentivizing further, sir. So, Rao sir, if I can start with you. So, if we see in terms of universalization of the crop insurance business or the crop insurance coverage, what do you think, because Telangana is now considering joining the PMFBY, in fact we were supposed to have you on Rabi 24-25. So with that perspective in mind, sir, what do you think are the challenge or what could be the challenges that we are faced with in terms of universalization of the crop insurance program and what more needs to be done so that we get there?
Yeah, thank you. It's nice to be here this whole day. As you was mentioning, Telangana had opted out of PMFBY about 4 years back, and we replaced it with a DBT model where every farmer gets a certain amount, about 5,000, and now from this year onward 6,000 rupees per acre per crop cycle. So that is the kind of, there is a lot of political attractiveness to this kind of a model because there is a large amount of money going directly into the bank accounts of the farmers. Despite this experience for the last 4 years in Telangana, there has been an increasing demand from the farmers and also civil society organizations that we should go back to crop insurance because it doesn't really cover the risk which the farmer experiences due to various kinds of events during the crop cycle. See, all of us are aware that every farmer anywhere in the world faces two risks in every crop cycle. He has a production risk, he also has a marketing risk. So the PMFBY kind of model covers the production risk. And the previous presentation, introduced us to the way forward to cover some of the marketing risks. So if you want to go for an universalization model, I think Telangana is considering a model where we will do universal coverage for all the crops in the state, except the plantation crops which are yet to be covered, by paying the farmer's share also by the state government. Now this is a very bold initiative, but also a debilitating one, because it puts a lot of pressure on the fiscal space within the state government to move this forward. Because we had announced this kind of scheme, but we are not able to go forward because of apparent challenges in finding the resources to fund it. So I think the way forward for states like Telangana is to look for something in the middle. And I think what we are looking at in the next few months is a model that will at least cover a large portion of the gross cropped area in the state. More than 80 to 90% of our gross cropped area is basically two crops, cotton and paddy. And I hope through that model we will be able to go forward. But I think if we really want universalization, and where every farmer takes up insurance as a part of his day-to-day agricultural activity, I think we need to infuse far more trust into our models. And I think we have discussed this throughout the day, and I think this debate will go on. Thank you.
Right. So if I can also ask you, sir, what do you think are the policy interventions per se? Because you mentioned a couple of them, of course. But what do you think are the policy interventions that the government of India can think of? Like I was mentioning, one easiest thing to do is the central government proposes to take on the farmer share instead of the state government. But what other than that policy interventions do you think the government of India can think of to kind of nudge the state governments towards having a universal program?
Yeah, I think Government of India, by virtue of being a bigger financial partner in a program like this, and keeping the overall significance of the agricultural sector for the entire country, I think Government of India can come out with far more robust models. But I think the ownership and partnership of the states is the critical thing. And without the states getting involved to ensure that the regional issues are addressed, any effort may not really reach its conclusion.
Right. Thank you, sir. So, Vishal, sir, if I can ask you that the Parliamentary Standing Committee recently also has come out very vocally about we should have a universal crop insurance coverage. So do you think any legal or kind of statutory backing is also required in terms of having a universal kind of a scheme to operate in a stable manner across the years, or whether it can also, act in an ad hoc manner, like some states participating and then the central government deciding something else? So what is your thoughts on that?
Thank you for that question. It's good to be here. See, universal crop insurance coverage is a very lofty and very ambitious goal. And of course, it cannot be achieved immediately and in the short run. Of course, we have to start thinking about it and implementing it in a phased manner. And we have to start from somewhere. If not legal right, it can be an entitlement-based, at least the vanilla insurance, that is yield-based insurance, that can be assured to everybody, at least to the small and marginal farmers, up to 2 hectares. I was looking up the recommendations of the JPC on the internet as well. So they have drawn analogy with Ayushman Bharat PMJ Yojana, wherein it is an entitlement-based automatic inclusion and zero burden on the beneficiary. So I think we should think about giving at least the yield-based coverage free of cost to small and marginal farmers. When you talk about the top-up products like prevented sowing, midterm adversaries, post-harvest management losses, they can be made optional and at cost to the farmer, and state governments can come up and share that cost with the farmer if they want to do so. But as far as the base of the entire architecture is concerned, yield-based insurance, that should be made free of cost to at least the small and marginal farmers. And now we have digital crop survey, we have AgriStack, we have farmer registry. So leveraging this technology, I think it is a doable thing, and we should think about that. And I will also take this opportunity to say that on the analogy of PMJ, the funding pattern should be 60-40, so as to ease out the fiscal burden on the states. And also, since what I'm propounding here is a top-up which states can customize to the specific needs of the district based upon the agroclimatic conditions, and then the risks can be priced for that district so that the insurance companies are also ready to sell their products, and then the farmers can make a choice.
Right. So, sir, if I could also ask, apart from the 60-40 that that we think of, do you think that there's some other mechanism also to kind of nudge the farmers to, because taking their farmer share has its own cons as well, which we have seen in some of the states. Whether we should completely take it away or whether there should be some amount left for the farmers to be actually paying their share, so that just to have the skin in their game.
That's a good question. Skin in the game is important theoretically, but when it comes to the ground in India, we all have seen implementation of the schemes on the ground. So if we want to do a quantum jump in short time, taking entirely the farmer share will be the approach I will recommend. But if you want to make it gradual, because that will take time, so you can do it in a phased manner as well. But if you want to do a quantum jump, then of course you will have to support the farmers, at least the small and marginal farmers.
Okay. Right. Thank you, sir. So, Siddiq, sir, if I can also ask you, because Jharkhand has recently joined PMFBY, and there's one season's, so to say, about a season has ended. So, what would be your suggestion? Because Jharkhand has also gone for a kind of a universal program. So, what would be your suggestion as to whether it should be a state-driven kind of a thing, and or the central government should have other mechanisms, what we are discussing here, to kind of have a universal program?
Well, it is, as it is already stated, universal is very attractive, it is more democratic, everybody loves that word. But the moment we say universal, there is a lot of inherent challenges involved. One is the most importantly resource issues, whether it is state or central. And secondly, it also brings a kind of laxity in the system, a poor check and balances, everybody is enrolling, whether you are really needed or not needed, whether it is really you are a farmer or not, everybody is enrolling. Recently, when we re-entered into the PMFBY system, this year we got enrollment at the initial level, at the pre-QC level. It is almost 47 lakh farmers, whereas our number of farmers is 38 lakh. Our net zone area is even more than net zone, almost 150% of the net zone area is being insured, because state was giving the farmers share also. Because when it is free, everybody is enrolling or in the queue. So I think some check and balance is very important. So maybe like PM Kisan, some exclusion criteria can be built in, or maybe some geoclimatic studies can be done where to be supported and where not to be supported. So some kind of mechanism is very important, and it also has a lot of administrative and validational challenges. For example, Jharkhand like states where manpower level at the lower level is very less, and land records are not in a very good shape. So we have a lot of validational issues, how to verify this large data. And crop cutting experiment also, there are a lot of manpower issues. So this validation and administrative issue also comes in. So universalization should be taken up with a little more cautious. Funding pattern, state, center sharing can be decided, but still public money is involved. So a lot of caution is very important. We have to be very cautious. Otherwise, it can have a negative outcome. For example, in Jharkhand, earlier we were part of PMFBY. Later we forced to withdraw the scheme because that time also it was universalization. Lot of payout is going, premium is being paid, but payout is less. Then started murmuring, a lot of money is being pushed, the benefit is only giving for the companies, so public money is being wasted, so let us stop. So that also motivate, get this kind of universalization, also contribute for such kind of extra payment. So we need to have a lot of check and balances, and also technology can be a good solution. Now this present model wins and other technology things where we can have a lot more control over this fake enrollment and all these kind of things. So I think we need to have more kind of publicity, more kind of education, so that false or fake enrollment can be prevented.
Okay. So thank you, sir. Dr. Lavanya, if I can ask you, so from an insurer's perspective, because AIC is the largest player in the crop insurance sector, so from the insurer's perspective, in terms of the experience that you've already gained in the some of the states who have adopted universal crop insurance by adopting the farmer share, bearing the farmer share, so what would you suggest that what is the best way forward in this?
Thank you. So, see, in a country with the size and diversity of India, I don't think there's any one best model. But looking at the recent experiences of two major states, that is Maharashtra in one form and MP in another form, there are two things that comes to mind. If we are looking at universalization, then like Mr. Vishal said, we will have to split it into two. I think almost every state is come to one mind that we need a basic cover. So the basic vanilla cover can be separated out. That could be an all India thing. It could be priced on an all India basis, in which case, simply because of the spread and volume, you could have a better pricing. One. Challenge in this universalization, not all states are on board with respect to land registry. So states which are ahead of the game could come on board, and the others could fast track it so that other states also come on board with a kind of time deadline. If that is true, then universalization can actually happen for basic vanilla cover and with 100% digitalization. Here I would say that we need to take it one step ahead and have API integration with the NCPI portal with all relevant parties. So not just the various registries or various databases which are essential for this, but also all the insurers. I think all the insurers, when it comes to both underwriting and claims, should be, I can speak of myself, our company is, has always been tech savvy, though we don't publicize it much, but we were always in readiness for API integration, and I think the NCPI portal, the PMFBY team also is. But if you have to look at universalization, then I think this is important, because we cannot have a situation where we are downloading data, checking, verifying, uploading it back, and going through that whole pain point, and when it comes to claims as well. Both ways to speed up the matter. This is one part. The second part is, yes, every state could take on this responsibility of looking at what are the add-on covers that they need, and then state could subsidize that in a significant way to the farmer. So for the base cover, the farmer need not pay anything, but for the add-on covers, so that what you said earlier, the skin in the game, so there's skin in the game for the farmer, there's skin in the game for the state as well. Third thing, what has happened with this 80-110 is that I think everybody is kind of hands-off, because in a severity, it's the state's problem. And because of that, and for the insurers, it's only 10% more. If you look at health or motor, the ICR is much higher. Combined ratio is much, much higher in other lines of business. And with the new EOM regulations, it suits any company, which is a multi-line company, to just, take on board, maybe write another 1,000 crores of crop business without really having the seriousness and intent to implement the kind of infrastructure that is required to manage the crop business on the ground. I'm not criticizing anybody, mind you. It's just, just some hard talk, that's all. But it makes sense to have companies on board which are serious about writing crop and implementing crop on the ground, in districts and taluks and villages. you need people on the ground to manage the CC. Now, if not, you need 100% technology. So here again, if you're going for universalization, I think the other side of the coin is that you need to have 100% technology-based evaluation as well. So a lot of advantages to it, but certain things which need to be, we need to be very careful about is, you cannot have a situation where you don't verify anything on the ground while underwriting. You don't check the land records, you don't check who is there, you don't check what is a crop there, nothing. And then when a claim comes, you just put up your hands and say it's not payable. Or you reject the claims. So that, I think, builds distrust. Rather than building trust, we end up with building more and more distrust on the ground. Yeah. At least when I went to a village, nobody was willing to go and talk to the farmers. I said, these are our customers, and you're not willing to talk to the farmers, you're not willing to allow me to meet the farmers. You know, that is a kind of situation on the ground. Well, not to criticize, but I think there's lots to be done. And just one thing which we take from the spirit of some of the larger countries that are there out there. Number 1 is US, number 2 is China, number 3 is India. Probably, we need to look at the base cover and the revenue cover separately.
Yeah, that's wonderful feedback, in fact. Thank you. So, yeah. So, Mishra ji, so before Mishra ji, I'll come to ma'am. Ma'am, from the northeastern states perspective, because in one of the slides I was mentioning about it, if you could just take us through your views as to what my proposal was, which came out from the committee which met under the additional secretary, as to whether the central government can step in and take the bearing of the farmer share on themselves because of the low premium liabilities that is coming out of the tender quotations. So what is your views on that, ma'am? And how do we actually saturate, if we were not to adopt this strategy, how do we actually saturate the farmers in the northeastern areas?
Okay, now when we talk of the northeast, within northeast there are many smaller regions and geographies. When we speak of states like Assam, the challenge is much lesser because we have historical data, we have yield data, we have land records which are digitized. But many of the states still do not have the historical yield data. They do not have the land record data. So one would have to actually figure out some way to include those farmers. And one good starting point, like was being mentioned, could be PM Kisan database, because the Aadhaar and other credentials are being noted down. I'm speaking for the Northeast where the land records are yet to be digitized. So that, and along with a little bit of ground truthing. As far as universalization cover is concerned, I feel that one vanilla package is good, but again within the vanilla package perhaps we may first like to target the small and marginal farmers. The average land holding size within the country varies from region to region. So perhaps a little more what I would call as a regional risk profile and a regional understanding of the issues. For instance, I'll give you an example. In the last crop cycle, Assam has made sub-regions of the districts. So we said, okay, these are better districts, these are bad districts, and these are good districts based on the yield estimation, based on the kind of floods and other calamities they face. And there were 3-4 other criteria which we decided along with the technical team of the Government of India. So currently, the states are actually being evaluated on 3 major criteria. That is the size, the large, the medium, and the small. We completely overlook the fundamental issue here is the risk. So what is the risk profile of each of these is something I think that will require a lot of hard work, but that is something we will have to eventually get into, because risk profiling will help us discover premium prices which are a win-win situation both for the insurer as well as for the government. The second thing that I wanted to say is that a differentiated formula for funding the minimum thresholds. So for instance, the smaller and northeastern states, we are, like I said, multiple geographies. Now, if you fix the threshold data vis-a-vis comparing with the rest of India, it never suits us. And when we do it that way, the IEC cost, the admin cost, the backup, everything is so small that you cannot bring in quality. So perhaps that is another thing that we need to look at. When I say universalization, I see there are two major challenges that we need to address. The one challenge is what we look at in an institutional manner, and the second is at the farmer level. So like I said, for the institutional issues, the geography needs to be considered. We need to have a better targeting in terms of areas which do not have proper records. And also, when we talk about KCC enrollment, again, in the Northeast, the Aadhaar linkage has only happened very recently. So the banks are actually not paying out the 100 rupee premium and from the KCC loanees, and even if they are deducting, they are not uploading it on the portal. So the money has been deducted but not uploaded, and the farmer therefore is left uncovered. So those are smaller, minor things, but we will have to take a look at it. The second is when we see it from the perspective of the farmer. There are two major things any customer will look at. Number one is how good is the product that I'm buying. Number two, how quickly I get the returns. So how well we do the awareness in these regions for taking on the PMFBY scheme, and how quick we ensure the payments. Now, sir in the morning was mentioning that can we fix a date like PMFBY for payment payout of the loss payment. But it will require a lot of back-ended work. Something as simple as I'll tell you for the state of Assam, we were not able to pay out Rabi 23 even till today. We just recently resolved that issue because yes, yield estimation and the yield estimation of the directorate, they were mismatching. So some formula had to be arrived at to actually arrive at the yield. So there are smaller minor issues which will have to be addressed so that everything is in place and the CCE is finalized and we can actually make the payout to the farmer. Lastly, in Northeast, there are some typical issues. Wild animal, which is being considered by Government of India, that is one thing we need to consider. Paddy under inundation, that is another issue. Tea and other plantation crops is another issue. When we are doing oil palm, we are talking about viability gap funding. So whether viability gap funding plus PMFBY or only viability gap funding, that is something that we'll have to look at. And finally, lot of technological changes are coming in. But what happens is that because of these challenges in Northeast, lot of players are not willing to come in. I'm not speaking only for Assam. Assam, luckily, we have been able to rope in the best players, whether it be insurer or technological partner. But that is not true for all the states of Northeast. So that is, you'll have to again have a facilitative mechanism where everybody can get into the bandwagon and get the benefits.
Yes, ma'am. So that's very valuable feedback, ma'am. In fact, what we have been recently working on is some of the points that you touched upon. So taking cue from that, Sundarajanji, because you have also been part of this entire exercise of having the plantation crops coming in. So like ma'am was mentioning, what additional coverages we can build into the system so that people get motivated enough to join the crop insurance scheme. So with that in the background, how do you think this entire thing will play out in terms of having or moving towards a universal kind of a system, especially for the northeastern areas and West Bengal and Assam, where tea is a big kind of a thing, Kerala, Karnataka, where coconut is a big plantation crop with a lot of gross cropped area. So how do you think that integration into the system of current crop insurance will help us into achieving the targets of universalization?
First of all, I must thank PMFBY and the government for including the plantation crops, including tea, coffee, rubber, and coconut into the taking a lot of initiative and bringing it under the PMFBY. This will go in a long way in bringing the most vulnerable crops like tea, which is a perennial crop unlike other field crops which are 3 to 4 months or 6 months period. In a year, tea undergoes several climatic factors which reduces the farmer's income. most of the farmers, most of the holding size in tea, as far as tea is concerned, it's less than 2 hectares or 1 hectare, and 55% of the production comes from the small growers. So they are the most vulnerable for the climatic variables, and also they get most affected and they are not able to come back. So this will go in a long way in bringing them into the main system, and then for integrating them into the insurance system. We foresee there will be a large coverage in terms of farmers in Assam, West Bengal, and Tamil Nadu and Kerala. They have shown very keen interest, and they have been asking for this scheme for a long time.
Yeah.
So we feel that this will help in a long term for the farmers.
Right. So, Azadji, coming to you, so finally, because the private sector participation also plays a big role, because the scheme is based on a PPP kind of a model where, we are also talking about a Sarthi concept where we are talking about innovative products. How do we actually align those innovative products into the common vanilla set or the additional covers that we already have part of the scheme? So how do you think that innovation by the private insurers or the public insurers at large can, help us drive the product strategy that we have under PMFBY towards, nudging people to have, being covered under insurance in one way or the other? So what are your thoughts on that?
Thank you, sir. Thank you for inviting me for this esteemed panel. Coming to the Sarthi platform that we have been talking about for quite some days. Sir, in 2016, we had one scheme called Unified Package Insurance Scheme, wherein in addition to basic crop insurance, which was covered under PMFBY, we were also offering various other products, which includes cattle insurance, personal accident insurance, tractor insurance. And but the challenges that we faced at that point of time was that the entire enrollment process was manual, and a lot of manual activities were supposed to be done. Mostly we have only one enrollment point, which were basically bankers. And bankers were quite busy with so many activities, and somehow it couldn't take off then. But now, in 2025, we have a National Crop Insurance Portal where we have all the database of the farmers. Things are different as compared to 2016 because many bankers are directly integrating the data through core banking systems. Also, we have more enrollment points now. We are not only dependent on banks, we have a widespread network of CSC VLEs. We have a lot of POS, brokers and point of sale person on the ground who can, do a cross sell or distribution of other crop insurance, other products which are beneficial for farmers. So yes, we are better prepared as compared to what we were trying to do in 2016. And most of the insurance companies are trying to do something like that because we also are participating in various initiatives taken by regulator. For example, state insurance plan is such initiative where we are supposed to create a lot of awareness about the scheme, about the government-led schemes and other insurance products that we are doing. Obviously, this is something that we can try out again. On the technology part, sir, coming back to the universalization part, even though we have universalization, but it's not necessary that, we don't have to do any awareness campaign despite universal, because there are some states where universalization is done basis of a comprehensive farmer database, like state like AP. But state like MP and Jharkhand, Siddiqui sir was also mentioning about that we are doing, the enrollment on the ground. So here, basically, two issues that we have faced. There are some places where enrollments are very less, and there are some places where enrollments are slightly on higher side. From that perspective, I think it's high time that wherever the universalization is being carried out, we should have a proper farmer database. And in addition to that, we should also try to develop a cadastral map which will help us to do crop verification. For example, something like this has been carried out in Karnataka. In fact, Apte sir was mentioning about duplicate enrollment pertaining to onion crop. A lot of these activities, this QC was done based on the cadastral map received from Maharashtra Remote Sensing Center. So we have received the cadastral mapping from them, and we have overlaid the satellite data. Obviously, we did the ground verification, but ground verification might not be possible at a large scale level. So these are some of the things that we can try out, sir.
Okay. So I think so we have got wonderful feedback from the entire panel in terms of how do we actually progress now. So we'll be formalizing it inside the ministry through again a formal mechanism of how do we actually go about universalization and what more needs to be done by the government. So I'm also glad that we have been able to finish in time. So thank you, ma'ams. Thank you, sir, for giving your valuable inputs. Right.
If you don't mind on that last point that you just asked, no? This is, as I understand, this is about other products other than the schemes, right? There are two pain points in which I was just wondering whether he would mention. When it is other than scheme, when it comes to crop products, there are two pain points. One is there is no subsidy. Because of that, the gap between what a farmer has to pay for paddy in a scheme state and in a non-scheme state is more than 5 times. Second is GST.
Yes.
We still have 18% GST on crop. And we are talking of universalization, and we are talking about farmer support. If you are talking of farmer support, I think we need to take off GST.
Yeah, so that's a bigger problem, that's a bigger issue we need to take up with the Ministry of Finance. Yes, but in terms of Sarthi that he mentioned, how do we actually kind of collate the activities that are being done outside the PMFBY ecosystem is what we meant. So thank you again, thank you the entire panel for giving your valuable inputs.
Thank you all the panelists. Can we have a round of applause for them? And of course, our moderator as well, as they gather to create a picture-perfect moment here at the end of what I would call a very successful panel discussion. Let's move to another very insightful presentation. This one coming up is on evolving climate risk and the role of InsurTech solutions for financially resilient agriculture. We have our expert, Sri Samuel John, founder and CEO, Mistio India, coming up. A quick little bit about his experience. Samuel John is the co-founder and CEO, a climate fintech company based in Kerala, India, with over 2 decades of international management experience. Samuel leads a team dedicated to solving the financial impacts of climate change on communities and businesses by leveraging climate economics, actuarial science, artificial intelligence, and spatio-temporal analytics techniques. Can we please hear it for Sri Samuel John? Over to you.
Good evening, august audience. Thank you so much for having me here today. It is indeed a pleasure because I'm standing in front of people who have basically inspired and supported me in my journey. And also the second factor is that you're all in my hometown, and it's very interesting to have you all here. And hopefully, wish you that this event is pleasant and fruitful. So, it is like preaching to the Pope today, because everyone here pretty much understands what I'm talking about. And what I'm trying to do here is kind of base it down to the level at which we as a private company operates in the sector of both geospatial data as well as weather forecasting. So there are 2 broad, powerful dynamics at work that is happening today. One is definitely climate change. We've heard a lot of people talk today about the panelists and experts talk about climate change. It is here. It is real. In fact, the reason why I got into what I'm doing today was because of the massive floods that happened in 2018 in my home state here. And basically, what one of my favorite authors has already said, that we are living through the great derangement when it comes to climate change. That's the first force that is in play. The second force that's in play is that of technology change and each trying to outpace each other. And that gives us a very interesting opportunity for us to basically confluence it and then essentially become a force multiplier in what all of us here are trying and aspiring to do. So, from a technology-driven solution, as we've seen the expert panelists today has talked about, we have everything from precision agriculture, weather forecasting, AI-based forecasting. In fact, what was interesting was gentleman from Plantex, Rob, talked about how they use the app to basically deliver that. Sri Murthy as well as Dr. Chowdhury talked about how we can build remote sensing data into the parametric insurance product, as well as today's morning Sri Mukdanaji, he talked about how parametric insurance is becoming an industry on its own. 10 years ago when we started this, it was quite a Hail Mary, to be very frank. But over a period of time, what has happened is that data convergence, as well as the technology, as well as all the policies and the frameworks have currently fallen in place. So, these technology-driven solutions, as we said, I skipped my notes, but these are the technology solutions that are currently existing, and essentially individuals like me and organizations that I kind of represent essentially takes advantage of this particular aspect, and we have seen a proliferation, I would say, not even mushrooming, a proliferation of companies, 100 plus, 200 plus organizations across the country providing value to the last mile. So, what I've done here is essentially not talk about not talk about the technology itself, but also the idea is to basically map some of the initiatives. The list is not exhaustive. Some of the initiatives that are really interesting to us, which I thought would be a good starting point, or at least can be brought from a comparative state, what the PMFBY and all the related schemes can do. So here you see is a structural table. The table talks about different technologies that are there, but there are 4 key driving factors that are giving these solutions a unique edge. The first is definitely the technology piece. We have heard throughout the day, time and again, experts talking about bringing technology. In fact, even in the last session, the idea was we need to go, we need to use technology to do whatever we need to do. So therefore, the idea is that we need to drive technology in every single form and manner. The second part is where a lot of our practitioners that are here today really stands to gain, and these are your core expertise. For example, how do you innovate on the product? The product is the baseline here. Technology is just an enablement for the product. So the moment you innovate on the product, the second step is to see how technology can then link that to give you the third part, which is a unique feature. So for example, I will go into these slides in detail. So for example, FieldView, a company that's based in the United States, talks about precision data, hyperlocal weather forecasting, FieldView platform, tailored risk score, but what do? They integrate with farming equipment. Not to say that, our technological evolution within the farming sector is not that up to the mark. It is growing always. Perhaps, they are far ahead. These are the kind of lessons that we can really learn, integrate that into the product and the technology scape that we are talking about. And then the success driver is, because of all these happens, there is a high farmer engagement and usability. So solving that one problem by FieldView has essentially scaled the product to such an extent that this has become, I would say, some of the best, insurance products that is available out there. I will go to the next one. Again, I will be taking you through each of these individual slides in the next 6 slides, where again we are talking about, this is a fantastic model, which is the IRRI Climate Services, where climate simulations, mobile onboarding, El Nino linked rice indices, and forecast that is the forecast-based design, not historical. And then the success driver is that you have a multi-agency scientific collaboration. A lot has been spoken about multi-agency scientific collaboration here today. In fact, this morning's session, in fact with Murthy sir's section and Dr. Chowdhury's session, there was a talk about what are the kind of technology space that is available and the kind of data that could be potentially used. So, doing a bit of deep dive, FieldView, technology is precision data, hyperlocal weather, the platform, tailored risk score, real-time analytics, unique features, that is basically integration with the farming equipment. Success drivers are high farmer engagement and usability. Next one, Agri-Tempo. Government satellite and AI models. We've been talking about that the whole day. We have that here. Bringing that into one platform for insurance as well as very key point, I think the CMD of AIC in the last session talked about lending as well, wherein it is used for both insurance and lending. Then there is a decentralized data for dynamic thresholds, which ma'am from Assam talked about in terms of localization of risk. Last but not the least, a success driver is a government-based transparency. Again, the initiatives that is done as part of PMFBY, as part of the Ministry of Farmer Welfare, this transparency does exist. So it's not something new. It's already there. We farm up with AXA Climate Collaboration, one of the most successful ones. Here again, you are bringing a different level of technology into it, where you're talking about IoT-enabled equipment, blockchainization, usage-linked insurance, peer-to-peer shared real-time drought signals, and farmer-to-farmer data trust. Interesting point. Every single panel today talked about trust. Every single panel that I was listening to talked about trust. In fact, I would like to basically talk about what Mr. Murthy said today morning. Data is trust. The moment data, when you provide unbiased data, the trust increases. Last session also talked about trust. It's about providing that trust. It's about providing the data in an unbiased form that is going to really scale some of the applications. And in fact, this is a very good example of that. Acre Africa with IBM, straightforward, mobile. Well, past 5 years, we have seen mobile last mile connectivity, blockchain, community validation. Extremely interesting point. AI-based early warning system. Mawsom's initiative in India that is going to really be the game changer on how early warning systems, when it comes to weather data, is going to change. There, we already have it. The innovation is there. Micro premiums, community-based trust validation. Referring back to Aruna ma'am from Assam, what they talked about in terms of how you create the trust validation points. Hyperlocal and mobile-first inclusion. Again, we have the same structures that are there in India in disparate forms. All we need to do is essentially bring it all together. I would rather skip this and then get to one interesting use case from our home state. This has been around for almost 3 years, where the state government in its innovation track had talked about how to use blockchain, hyperlocal weather data, and then basically innovate on the paddy weather-based insurance scheme and provide mid-season settlement in the event that there is inclement weather. These initiatives are dime the dozen in India. It's all there. It's about integrating all this, bringing the commonalities and the lessons, and then implementing that across through our sectors. This is again another interesting piece. Livestock. It was quite surprising that I came here today and we had a lot of talk about livestock. Livestock insurance in the country, I mean, very heartening to see that it is at the cusp of a breakthrough, not just a breakthrough, breakout. What essentially could potentially happen here is the moment we bring excellent models, we bring accurate pricing, lending and insurance piece puts in place, it is going to be the game changer when it comes to India's milk production as well as protein production in the country. This is something that we have been personally doing for the past 2 years. We've been working quite extensively in Australia, where we provide early warning system and climate-related intelligence to the farmers. What essentially happens is that there is an insurance product that's linked to it. Farmers get the early warning. They are told that in the next 7 days on an hourly basis what is the risk that each of their livestock heads of cattle face, and then triggers are set and payouts are made. With that, I would like to now talk about another very interesting initiative that could potentially change the way information asymmetry is sorted out. We do have information asymmetry. Information is made available, but where to look, what to look, this is very well held within a very small circle. So with that, the Ministry of Agriculture and Farmers Welfare had actually talked about Vistar as a project. The Vistars is basically a knowledge grid, and what you essentially do is thematically then bring all the information on the left-hand side, which is your soil, weather, water resources, CRAs, climate vulnerability impact assessments, credit, livestock, biodiversity conservation, knowledge sharing and capacity building, which Mr. Hitesh was talking about in the morning in terms of how we need to let people know that this is what's happening out there, brought into a knowledge grid, and then you have thousands and thousands of businesses that are out there, whether that be lenders, whether that be insurers, whether that be aggregate startups, can basically consume this data and then provide these services across through to the, to the farmers, which is basically their, key stakeholder. This is an initiative that has a lot of potential. Maybe perhaps even PMFBY data can also go into this. This is something that is in the works for past 2 years. And where we see this go, it is building that resilience piece coming into the play. And that just brings me to the last but 2 slides, which is basically what are the key components that we are talking about. Key component number 1, forecast. Everybody knows this: weather, climate, price, whatever it may be. The forecast that needs to be provided. Foresight. Once you have the forecast, what is going to be that specific price point, how it is going to impact that specific business, whether that be a farmer, whether that be an agri-input company, whether that be even a bank that lends. Insight. How this over a long period of time is influencing the lending as well as the insurance decision and the investment decisions that are made by individual organizations, FPOs, banks, insurance companies, whoever it may be. And last but not the least, resilience. That's where all of us are heading. Resilience is all about making our country, our farmers, resilient to the big challenges, the challenge that we spoke about much earlier, climate change, how it is going to impact their lives, how it is impacting their livelihoods. So over a period of the next 30 years, perhaps, when these key components are all fall in place, at the intersection we have the farmer, where you are able to provide climate tech, fintech, insure regulatory tech, and agtech, which is something that companies of my peers and my own company and my peers really work through. With that, so again, I've spoken about this in different forms, but the key takeaways for improvement, I believe these slides will be shared. Definitely the simplification of basis risk. This was spoken about in the last session too by Ms. Aruna, as well as CMD of AIC. We need customization. Again, a very interesting talk point. You do not have the same risk. You cannot normalize the risk. And you really need to basically have high levels of customization, which is something that's already happening within the portal. Technology integration. Yes, we need technology. We are here to sell technology. But then tech should be a force changer, force multiplier. They should not be the end in itself. Engagement, something that Mr. Chauhan was talking today morning. Engage people the same way. They need to know that this exists, and therefore, how do you engage these communities to adapt? Blockchain for claims. Everybody talks blockchain. Well, blockchain is immutable ledger, single source of truth. Imagine being able to bring all this information to everybody and made it accessible so that that single source of truth simplifies the block on the top, which is your basis risk. UPI-based settlements. We all know. I mean, this is a fantastic use case, where settlements can be made. Bundled advisory, and last but not the least, bring that synergy of credit to every single community member, farmers, let it be anyone who's working in the field of agriculture, to ensure that the credit synergy happens by the availability of unbiased data from various different sources. With that, I come to the end of my presentation. I thank you for your time. I hope I was well within my time limit. Thank you.
Thank you so much, Sri Samuel. Thank you for being mindful of time and yet conveying such important points there. With that, we step into another presentation, last for today, but most definitely not the least. We speak of examining determinants of uptake of crop insurance under the PMFBY scheme in Maharashtra. And we have the wonderful Dr. Archana Singh, Associate Professor, NIA Pune, coming up. We're honored to welcome a distinguished expert whose work bridges academia, policy, and grassroots impact. Our speaker brings over a decade of rich experience in training, research, and consultancy across financial inclusion, rural insurance, and social security in collaboration with institutions organizations like NABARD, LIC, and the Ministry of Finance. Thank you so much, Dr. Archana. We do look forward to your session. Please come over and take over the dais.
Good evening. Thank you for the opportunity. And I am mindful that it's the last presentation of the day, so I'll be quick. So when I talk about what factors impact uptake of insurance, I'm sure practitioners will have a lot of long list. So these we collect based on our observations and experience. What research does is conceptualizes all these observations and collects data, and based on that finds out, validates the findings of observations of the industry. So this study we are doing for almost a year. It's an interdisciplinary team working together. So how do I change the slide? Can someone help, please? Okay, yeah. So when we looked at what are the past research that have been done, so the factors identified in previous research are something ingrained to insurance as well as socio-economic conditions and behavioral aspects. When we look at crop insurance, factors impacting uptake of crop insurance per se, next slide please. Then the major difference is financial literacy, insurance literacy and awareness. Rest of the factors remain same. Next please. So this study is based on both primary data and secondary data. First part is based on secondary data, wherein we try and identify what are the macroeconomic indicators which impact the uptake of crop insurance. And second one is based on primary data which we have collected through field survey. So for the first part, next please. So when we looked at the past research, most of the studies have worked on cross-sectional data and region-specific data, whereas there were no studies which have worked on longitudinal data. So here we have tried to cover the longitudinal data. Here, when we were trying to identify those factors, we started with almost 20 factors related with agricultural development, financial development, monetary policy, infrastructure, and economic growth. But combining that data, finding the data similar to crop insurance and continuous data was difficult. So finally, we worked on 7 indicators, 7 factors, and validated them. Next slide, please. So these are the 7 factors that we have validated through our research. Next one, please. So sample was we have collected dependent variable, which we have taken as a proxy of crop insurance uptake, is crop insurance premium, and it uses panel data modeling to validate the findings. Next one. So this is the data, variable description and specification along with the source. This is the equational representation. We have used both static panel as well as dynamic panel model. In dynamic panel model, we have used 1 year lag of crop insurance premium. So these are the diagnostic test results we have run to find the robustness of our model. So we have tried to work around heteroscedasticity, autocorrelation, multicollinearity, and heterogeneity. Next one. So this is the matrix of correlation that after running the regression, this is the matrix that we have found. Yet if you look at log irrigated area, state road, and credit to agriculture is positively correlated and very highly correlated. This is the regression equation model, panel regression equation model. So in next I will describe what were the findings. Next one, please. So from this panel data regression model, what we arrived at is crop insurance uptake is high where net domestic product, intensity of roads, and agriculture credit uptake is high. So in those states, it was significantly high. The second part, here we have collected around 400 data from Nashik district. Out of that, around 350 data was pure and clean. So we have done the art tests on those data. So here we have taken mixed approach wherein we have used both qualitative research methods as well as quantitative research methods. So both primary data and secondary data has been used here, and it's an exploratory research design. We have used multi-stage sampling design, and on the basis of that we have selected these four districts, and based on factor of NRI, ILI, climate similarity, cropping pattern, these districts were selected. So we looked at the past data of Kharif uptake, then high, medium and low. These districts were identified. So one district from high, two from medium and one from low crop insurance premium uptake was taken for the analysis. So this is the 5-stage sampling that we adopted right from the state selection to household identification. Mostly it was stratified random sampling and systematic random sampling that we used. This is the analysis model. We have used logistic regression here. This is the matrix of correlation. Next, please. And this is logistic regression results that we have found. So here, if you look at BPL status positively relates with uptake of PMFBY. Livestock position, if a household has livestock, then the uptake of crop insurance is high. And then if the institutional borrowing is high, then also crop insurance uptake is high. So if you look from the previous data, this previous finding, this finding is validated in this as well. So this is some tests we have run for model fit. This is again another test for model fit. So by this, we arrived at that this is a good fit model because 74% validity is there. So this is the result. Again, the repetition of that: BPL status, livestock, and higher total expenditure, borrowing. All this impacts higher uptake of crop insurance in Nashik district. Now, I'm going to share and present the qualitative findings from focus group discussion that we had in Yavatmal and Nashik district. So, by and large, the enrollment process is very streamlined. We did not hear any complaints about enrollment. Everyone knows how to do enrollment, and it's pretty easy. People are very comfortable with it. When we look at awareness, level, then I have done a study in Yavatmal district in 15-16 also collected data. That time the awareness level was only 10%. Contrast to that, here almost everyone knows basics of PMFBY. And what is more heartening is that among women also the awareness about basic features of PMFBY is very high. However, when we look at the technicalities of the scheme, then people falter. And because of that, lot of confusion is there in farmers. And then that has resulted in a lot of dissatisfaction despite getting claims. Now people know that they have got claim, but they don't know why they have got claim, or they don't know why they did not get claim. It's like if we talk about OB, then there is a saying that people are more unhappy when others get better rating than they themselves in their HR review. The same thing is happening here. People, even though they have got money, if they have got lesser money, then they are not able to figure out why they have got lesser money and why others have got more money, and that has resulted in high level of dissatisfaction and a lot of confusion among farmers. Farmers also complained a lot. They don't know what is basis risk, but what they complained about was that their losses are not commensurate with the compensation. They also complained about high cost of enrollment. So this was very telling for me, They said that although government has given the cost of enrollment as only 1 rupees, but it comes to us as 1001 rupees or 501 rupees. So that was a very important finding that I would say. They also, the discussions also led to negligence and rent-seeking behavior of surveyors while claim settlement. What is also good is that when we look at Maharashtra, the basic things are covered. People have basic information about insurance, and that has led to higher level demand for insurance. So they talk about top-up coverage. They want that other risks should be covered, and they're willing to pay also. There was a lot of demand about income protection. So we have had discussions and presentation also on revenue insurance. So that indicates on that also. This could be because also because the awareness among farmers has increased and they are looking for income protection. So to conclude, these are the factors that macro level factors, macroeconomic factors that are impacting the uptake of insurance, and then demographic variables which are impacting at household level that are impacting uptake of insurance, crop insurance. Next one, please. Yeah, so lack of knowledge because they don't know technicalities, and in claim settlement, that this also indicates that there is lack of transparency, or there is a need of better transparency when it comes to claim settlement. So these findings can help in more focused IEC intervention, wherein we can do profiling of the state and then extrapolate this study to district level, and then that can help us in having more focused IEC intervention at before enrollment. And now this also indicates that depending on the profile, awareness profile of the states, we need to design the training and awareness drive for intervention for the states. And we need to also objectively evaluate what are the changing needs of the farmers and what is their willingness to pay if new risks are covered or risks are covered to the next level. So that's all from my side. If you have any question, I'm happy to take.
Thank you.
Thank you very much.
Thank you so much. Huge round of applause, Dr. Archana. That was just the most perfect session we could have asked for to end the day of our first day of conference for today, and the wonderful dialogues that we've shared. I know you all have been looking forward to a town hall session. It has been moved to tomorrow. I now request the insurance companies and the reinsurers to please head to the boardroom Maya, which is upstairs, and everyone else, put on your dancing shoes and get ready for an evening of celebration, and see all of you, also the insurance company and reinsurers that are meeting up at Maya right now. Also after your conversation, please get ready, and everyone present, let's meet at 7:30 for an evening of celebration. Look forward to seeing you all in your shining best.